doing a case for him under the Binami Property Act. And he was telling me, sir, I need to leave urgently. In the afternoon, I have a hearing under the Enemy Property Act. I said, what is that? He said, no, sir. People who have left India and gone to Pakistan at partition, they had some properties, and those properties cannot devolve on their heirs, and it has to belong to government as per this law. I said, I'm blissfully ignorant of a law like this. He said, I also was. Until such time as the client came to me and said, you argue a matter like this. Hardly do we know that there is even an act like this. But then after I did a little bit of homework, I realized that Saif Ali Khan had a similar issue. And that's when it struck to me that that is probably under the Enemy Property Act. So there are laws, there are interpretations, there are bound to be interpretations. And believe me, there is going to be a little more interpretation issues that could arise. For example, if you take the new Income Tax Act 2025, all the provisos have been made part of a section by way of making it a subsection. Now, all of us have understood the meaning of a proviso. A proviso cannot override a section. It can create an exception to a section but cannot override the section per se. This is how Supreme Court has interpreted a proviso. Now, this proviso has become a subsection. When a proviso becomes a subsection, the import of this can be completely different because it is no longer a proviso. So these are issues that we are definitely going to face as time progresses, as the laws evolve. And we have to be very clear that the law will evolve and that technology is going to be used more and more as time progresses in administering the tax law, whether it is in terms of capturing data which will be useful for collecting more taxes, or whether it will be in terms of the access to an officer per se. I don't know what we should say, but these faceless assessments are good in a way and bad in many ways. In fact, what we are facing today is something like a stone wall very often. We don't even know how to explain what has happened and why it has happened. See, for example, yesterday as I was coming to the airport, I saw an appellate order of a commissioner appeal. Now, the simple issue is there is a retirement of a partner from a partnership firm and he has received a sum of rupees 4 crore and odd from the partnership firm. The assessing officer treats this as income under 45(4). Our primary argument is very, very simple. 45(4) is not attracted when I receive cash, it is attracted when I receive an asset. Now the logic is very simple. If you take the provisions of 45(2) and 45(4), basically it is to prevent a mischief. I bring in my capital asset as a contribution into the firm later on distributes it among the partners and consequently they evade taxes. In fact, this is what used to happen. Two persons, one person enters into a partnership firm with another, one person brings in money, the other person brings in the asset. 6 months later, 1 month later, 2 months later, they retire. The fellow who brought the cash takes the property, the fellow who brought the property takes the cash and they go out and they say there is no taxation. This is how the provisions of 45(3) and 45(4) came into being to bring it to tax when you bring it in as capital contribution and again to bring it in tax in the hands of the firm when you distribute the asset. Now, basically, if I have sold the asset, realized the money in the hands of the partnership firm will already be paying taxes. Or if the asset is going to remain in the partnership firm, as and when the firm sells it, it will pay the taxes. There is no need for a tax under 45(4) on distribution. Now, I have tried to give my best possible through written submissions and through video conferencing and all of it. But what does the commissioner say? The commissioner says, your records do not show that the cash is available with you, but it is only an accounting entry made showing it as a loan repayable to you. So what? Now, if I had probably had a face-to-face, I might have been able to explain to him that at any point in time I am going to get money. And if I do get an asset at any point, the firm will still pay taxes on that day. If the firm is going to substitute the cash payable to me by an asset, on that day the firm has to pay taxes. I cannot pay the tax on the same income twice. Now, probably a face-to-face would have helped me. Now, this is where we have further challenges that we are facing as we progress. And you all probably are seeing that there has been a lot of improvisation in terms of the use of technology, both in assessment and in appeal. And that again has nice sides to it, with its own attendant difficulties, particularly since we are transitioning. In fact, I still remember when I was very young and when I started my practice, Mr. Manoharan, who is no more with us, used to tell me, Vanushekar, the last person you must trust in your profession and practice is your client. You can trust the officer, because the client will tell you information on need-to-know basis. And the need to know is on the basis of what he thinks you need to know, not on the basis of what is needed to be known. What he thinks is need to know is what he shares with you. Sir, take a few years back. How many of us have walked into the income tax department and an officer has thrown data at our face saying, these are the deposits in your client's bank account, explain. And we have done a tax audit not even knowing that there was a bank account like this. We did the tax audit. And we did not even know that the client possessed a bank account. And if you go and ask him, sir, I got cash from sale of this property, sir, I opened an account and put it there. Why did you not tell me? Sir, I thought cash need not be accounted. Then why did you go and put it in the bank? I thought nobody will know. Why did you not tell me at least I would have accounted for it that day? Sir, I thought it was not taxable. Why should I tell you? So, he decides what we need to know. And this is exactly the problem from where we start when we start an appellate practice. When you start an appellate practice, remember that the whole practice is dependent on what you do not know, and not dependent on what you merely know. There are hundreds of facts that are hidden by the client, and the order of assessment speaks very little. But the one advantage that we as professionals enjoy, particularly as authorized representatives or counsels for the SSE enjoy, is that we would have access slightly better to information than the other side has. But before we get there, the starting point that I look at when a paper comes to me on whether an appeal should be filed is first to see whether at all an appeal is worth it. In the sense that if the issue is only of underreporting of income, not underreporting as a result of misreporting, my first examination is this addition sustainable? And if it is sustainable, is it worth the trouble of fighting? Or should I simply file a form number 68, take the immunity from the payment of penalty, be done with that, and will that give me a better benefit? Particularly in cases where, the provisions of 115 BBE, etc. are not invoked, where the tax rates could have been much higher. It makes sense for me to examine whether at all I need to take the matter up in appeal. The second aspect that I start looking for is all the mistakes that an officer could have committed while framing the assessment. See, again, an advice by a very senior, seasoned advocate to me when I started my practice, Vanushekar, you don't have to win an appeal. All you have to do is to ensure the other side loses. And it is as much a success if the other side loses as you are winning. And winning an appeal could depend on various factors, including technical factors. Of course, I am very much aware of the fact that government is also going one step ahead. They have devised new methodologies. For example, this dispute on whether a reopening notice should be issued by the faceless assessing officer or the jurisdictional assessing officer, what we call the FAW and the JAW issue. Courts have been, most of the courts, including the Madras High Court and all of it, though Kerala High Court, there is no precedent as yet, all of it have been saying that it is only the faceless officer who can issue the notice under 148 and not the jurisdictional assessing officer. Now they have inserted or amended the provisions to say that the FAW need not issue the notice, and it is okay if the jurisdictional assessing officer issues the notice. In fact, they have gone to the extent of saying the FAW cannot issue, only the JAW can issue. Of course, we have subjected it to challenge on constitutionality, saying that this is constitutionally not permissible because you are making it retrospective and you are making it some kind of a validating act. I see a similar validation in many other things, like for example, on two aspects relating to transfer pricing, on approvals. I am rather surprised with the way some of these amendments have been brazenly made. Because if you look at approvals, as we understand, for example, a reopening, it used to say that an approval should be given by a higher authority. I don't want to go into who that authority is, because that is not the subject matter of our discussion. Then it goes on, and the law has been evolving over time, and then the courts have consistently held that a sanction or an approval for reopening an assessment, say for example, should be with application of mind, and the sanction or approval that is given should expressly show that there is application of mind. For example, seeking approval to issue reopening notice, there have been cases where, yes, Commissioner, and including the Supreme Court, they have said, no, this is not an approval. Merely saying yes, because you have to express your satisfaction. Now keep that apart. After this computerized era came up, there has been a number of issues. Because commissioners have been granting approval on the system, and the system does not accept certain things in a particular way. It's exactly like my charitable trust, for example, where if I want to accumulate income, I have to say the purpose for which I am accumulating. But that column can fill only 10 words. What am I supposed to fill there? That becomes a challenge. Likewise, commissioners are facing a challenge, chief commissioners are facing a challenge. So their approvals are probably meeting the expectations of what a court might require. So they are inserting a new section 292 BC, which says that an approval need not be signed. An approval, whether signed or not, is valid. Approval granted without any reasoning is valid. An approval, in other words, they are saying the approval need not demonstrate application of mind. Application of mind is to be assumed by us. It is to be assumed by us. Again, we are subjecting that to a constitutional validity challenge, because when you say a higher authority should grant approval, it simply means that there is me, an assessing officer, who believes, say for example, that income has escaped assessment, and you as a commissioner or a chief commissioner sitting and examining whether I am right. Now I have cases like this. 29 assessees list on the system. I have got it under the RTI. 29 names and PAN number. And it says, please proceed to issue notice under 148. No, nothing else. Why? For what? What is with regard to each assessee? Because 29 assessees are 29 different people, completely different from each other. One sanction, one approval. So we may have to look into aspects relating to even whether these are valid in terms of meeting the requirements of ultimately satisfying the test of being the a valid approval, for example. But before getting into that, now when I get an appeal, as I said, I look into these aspects to see whether I should raise these as grounds. Well, I'm aware, as I said, that amendments are coming, but the fact that amendments are coming, we're not sure whether they will be ultimately held to be constitutionally valid, so we continue to challenge it for the time being. Likewise, when I start drafting my grounds, I generally try to make my grounds as brief and as wide as possible. Now, there is a general tendency to introduce case laws to be specific, to be more and more, being very exact on your grounds, whereas I would think the other way. For example, if it is a reopened assessment, all I say is the reopening is bad in law. I don't say anything more, probably in my grounds. Maybe I just say, instead of reopening is bad in law, the assessment is completed without satisfying the or complying with the statutory requirements of law. Why do I say this? Why do I not be specific? Reason is, when I say the reassessment is bad in law, I can tomorrow raise a ground, change of opinion. I can tomorrow raise a ground with regard to saying a 143.2 notice is not served on me. I can raise a ground saying the 148 is not signed. I can say anything that I want as I proceed, because I have 30 days to present an appeal and I cannot examine each and every one of these aspects. Keep it as wide as possible. That probably gives you more leverage to argue more grounds which you may come across as you proceed during the course of presenting the appeal, when the appeal is ultimately to be heard. Likewise, I refrain from giving any case laws in my grounds of appeal as far as possible. Now, I still remember I was arguing a case where the issue was very elementary. There was some warranty expenses which had been claimed by the SSC, and the warranty expenses had been not allowed by the assessing officer, but the Commissioner Appeal had allowed the warranty expenses. The department had raised or had taken this matter in appeal before the High Court, before the tribunal, and the tribunal, the grounds were that the assessing officer, the CIT appeal, failed to consider a particular decision of the Madras High Court. This was jurisdictional High Court for that SSC. Now, on that day, technically speaking, there were two conflicting decisions of Madras High Court, one in my favor and one against me. Commissioner Appeal had used the decision in my favor. They had cited the decision against me before the tribunal. Now, luck would have it, before the tribunal could hear this matter, Supreme Court had decided this issue and had said warranty expenses claimed on a scientific basis is allowable. Claimed on a scientific basis is allowable. So I was for the respondent SSC, and when it was called, I simply went and said that decision is already reversed by Supreme Court. I don't know, the member caught the point immediately and he turned to the other side and said, is this decision that you have cited reversed? He said, yes, sir, but this issue is not directly connected to that. But your grounds of appeal say that this is the decision you are relying on. And do you agree that decision is reversed? He said again, yes. Then the order says both sides agree that the decision of so-and-so court is reversed by the Supreme Court. Therefore, the issue is decided in favor of SC. Now, nobody examined whether the warranty expenses was provided on a scientific basis or otherwise. Matter traveled to the High Court. High Court said, what is a substantial question of law? You relied on a decision. That decision is reversed by the apex court. Once that is reversed, your decision, you can no longer rely on that. Done. They carried it in an SLP to Supreme Court. They said, he followed my own decision. Why should I give you a leave to appeal against this order? So it ended there. But then the citing of that one decision probably did the trick. Had they not done this, they could have probably urged. So that was when I learned my lesson, saying, try to avoid case laws when you are drafting your grounds of appeal. Your statement of facts, your grounds of appeal should speak for themselves. You should be able to cover every possible argument that you should be capable of taking. Remember, as I said in the beginning, I am not interested in winning an appeal. I am interested in the other person losing as much as I am interested in winning. Because either way, I get my way through. Either way, I get my way through. And remember, in a court hall, we are not here to be fair. That is the judge's problem. The judge has to be fair. A counsel has to protect the person from whom he has taken a brief. If we don't adhere to this rule, we would never be able to do justice to the profession as counsels at all. Now, grounds, of course, if for any reason have not been taken, you are always at liberty to raise additional grounds. The additional grounds can be on law, in which case there is absolutely no problem. You have the decision of the Supreme Court in NTPC, where Supreme Court says an additional ground can be raised at any time if it is a legal issue. Now, what if it is a factual issue? Now, there again, an additional ground can be raised. There is no prohibition or bar on raising an additional ground merely because it is factual. The only requirement is that the facts should be on record. You cannot raise a fact which is not on record and ask an appellate authority, particularly after the level of tribunal for sure, to examine facts which are not on record. So you have to ensure that the facts are available on record so that it is possible for us to raise these grounds as we proceed in representing in an appeal. You also examine whether you can think of a writ petition instead of an appellate process, which aspect I will come to as I proceed further in this matter. Now, one area where I find not me, but most of my clients not very happy, though I have to every time convince them that this is the right way of doing things, is with regard to raising additional grounds. Now, what happens is, when I raise a ground of appeal, I always try to raise an alternate ground for probably a relief which is lesser than what I would have got through my main ground. Now, take a simple example, very simple example. I have claimed an expenditure as revenue expenditure. The assessing officer does not allow me the revenue expenditure. I take an alternate plea. I take a ground before the appellate authority saying that the expenditure should be allowed as revenue expenditure. And I take an alternate plea saying, assuming but not conceding that the expenditure is capital expenditure, direct the assessing officer to allow depreciation. Now, most of the assessees tend to believe that this waters down their main claim. Likewise, say for example, in a penalty, the assessing officer has levied me a penalty for underreporting as a result of misreporting, whereby a penalty of 200% is levied. So I urge before the appellate authority that there is no underreporting as a result of misreporting and that penalty is not exigible. And I raise an alternate prayer saying, without prejudice to whatever I have said, at least treat this only as an underreporting, not as a result of misreporting, but a plain underreporting, whereby my penalty will be only 50%. Now, I have seen assessees invariably are very uncomfortable with this because they feel that it is watering down their main ground. But I, for one, believe that an alternate ground does not water down the main ground. An appellate authority is duty bound to first examine your main ground, and only in the event of finding that the main ground is not acceptable, an alternate plea or an alternate ground has to be adjudicated. See, it is like saying either I will shoot the sun or I will stand there burning under the sun. I don't think that should be the approach. So raising of alternate grounds, I think, is as important as raising the main grounds. And we have express language which we use as a result of our past experience, where we say assuming but not conceding or without prejudice, etc., so that we are able to communicate that this is without watering down my main ground. The next aspect is with regard to delays. That too, in the recent past, we find that there are huge delays when it comes to presenting appeals in many cases. The reason being, more often than not, that the assessee claims that he is not even aware of the order having been passed. He says, I am not aware. The reason then you ask him, he says, sir, I don't know what email ID is there in the portal. And then he would say, sir, the chartered accountant's staff's email ID is there in the portal. I don't know, that person has left the job or he did not tell me, so I am not aware. Now, continuation of delay has become one area where we have consistent issues arising time and again. I think continuation of delay is, if I must put it this way, is twofold. One, remember that in every continuation you are invariably, if I am permitted to use this word, standing with a begging ball. You can't demand, literally. You have to be very submissive and polite because condemnation is always at the discretion of an appellate authority. Of course, if condemnation is not granted, you always have a further appeal, but then that's all a cost, a time and a process. So ideally one would think that condemnation should be very carefully drafted, very carefully worded, but then again I often see that condemnations are very loosely written. Say I have, for example, not exactly on an appellate matter, on a charitable trust matter where there was a delay in filing the Form 10B. And the grounds of appeal, the condemnation of delay says that the secretary to whom the OTP goes was not well, therefore there is a delay. How many days delay? 247 days delay. 247 days does not look like big, but that is more than 3/4 of the year. Right? Now, then he comes to me. At that stage, I examine what exactly has happened. I file a writ petition, I do this, I do that, so many things I do. And then I tell him, when the writ petition is ripe for hearing, show me that your secretary was not well. Urgently you draft, you file, you do something. Now he comes back with a doctor's certificate saying secretary was having viral fever, 5 days bed rest. 5 days bed rest for 247 days delay. Now what do you do with a draft like this? What do you do with a draft like this? These are the challenges. So I still believe that condemnations have to be extremely carefully drafted. In fact, I believe that the appellate authorities and the courts are extremely liberal in condemnations. Extremely liberal. In fact, I just got one delay condoned, 1,157 days. 1,157 days is like 3 years. And they were able to buy whatever I said, actually not because I had adequate reasons, but because they were kind of saying, it's okay, it's all right. After all, at the end of it, I had to tell them only one thing. This delay is condoned, what will happen? If I still have merits in my case, it will get allowed. If I don't have merits, I will come back with more 234B before you. That is all will happen. Nothing much will happen. It's not as though because this delay is condoned, I am going to get something which I am not entitled to as a benefit. And invariably, we use a particular decision. Whatever decisions I am citing are already available in the material circulated, so you don't have to worry. Invariably, we cite a particular decision, the Collector of Land Acquisition versus the MST Katiji, where they lay down 6 tests. And if you actually look at this judgment, almost literally any delay on the part of an assessee can be explained. It may be that much more difficult for the department to get away with this decision, but for the assessees, it looks to be far or really something where there is a scope for getting the delay condoned. In fact, in one of my cases, I had a 5-year delay. Now what happened was, this was some political scam where this individual was taken as an approver in the matter, and typically the state police, the vigilance had told him, look, we will take care of all your problems. So my man started believing them full-fledged, and he was giving evidence against the so-called accused. So this man had a tax demand. He went and told the police officer saying, I have a tax demand, you said you will take care, please take care. Police commissioner or officer vigilance commissioner was hardly bothered about his tax demand. And they just kept quiet. So after a point, what he did was he started writing to the magistrate, saying that there is an income tax demand on me, you have it cancelled. Magistrate was equally not bothered, because that is not his domain. Now, after some 4 or 5 years, when they come for recovery, this man realizes, oh, they are going to recover the tax from me, and that's when he comes to me. And I go before the tribunal, file an appeal, because that was under the old block assessment, where a direct appeal was with the tribunal. And I tell the tribunal, look, there's a delay of only 5 years. They said, why? I said, I was pursuing alternate remedy. I said, what alternate remedy was you pursuing? I said, I was asking the police to cancel the demand, the magistrate to cancel the demand. None of them did it, therefore I am before you. I said, what kind of alternate remedy is this? Isn't it stupid? I said, had I followed a sensible alternate remedy, I would have got the relief there. Every alternate remedy that I follow has to be stupid, that is why I will come here again. If it were a sensible alternate remedy, why would I come back to you? I would have got it there only. So every foolish alternate remedy will be absolutely foolish. You may think it is absolutely foolish, but see the innocence of this man in writing to the police and writing to the magistrate. They did agree. They condoned the delay, directed the assessing officer to set aside the matter, directed the assessing officer to pass a fresh order. A fresh order was passed, demand was raised again. It came back to tribunal quashed the demand, and it ended there. Only 15 years went past. Only 15 years went past in this. But then I also have to ensure that my children are educated. Where does the money come from? Somebody has to see. I was reading one news article the other day. I was sitting in Kerala only and reading. Monsoon in Kerala delayed. Doctors unhappy. I was wondering what is the correlation between monsoon being delayed and doctors being unhappy. Then I realized that mosquitoes don't breed. Fever doesn't come. Cold and cough is not there. So doctors are unhappy. So it's like that. At some point in time, you have to reconcile to the realities of a process, and you can't do much about it. And as I was saying, check whether there is a condemnation and be very, very careful on the condemnation. Check every factual issue. A factual issue can range from whether, for example, a notice under 143.2 was properly served on the SSE, whether it was a complete scrutiny or a limited scrutiny. If it was a limited scrutiny, whether he traveled beyond the scope of the limited scrutiny. Examine whether every single aspect or compliance has been taken care of. For example, whether the notices were properly served. I do understand that section 292BB protects the non-service of a notice being questioned after an assessment. But it does not protect, for example, the non-issuance of a notice. It does not protect the non-issuance of a notice. The non-service of the notice alone can be protected. Examine whether notices have been issued. In fact, you could probably look at using the Right to Information Act in a very, very potent manner by asking pertinent questions in the matters relating where you are carrying it in appeal, so that you are aware of certain facts which you otherwise may not be aware of. For example, whether this arose from an audit objection. You may not be aware whether it arose from an audit objection. Ask for the information through RTI. In fact, I have found one more trick. As far as CAG is concerned, if there is an audit objection by the CAG, I don't ask this question to the Income Tax Department, I ask the question to the CAG. If I ask Income Tax Department, they find some way of not telling me the information. If I ask CAG, next minute they give me the information. They are not bothered. They give it to me the next moment. So again, the RTI could be used with a lot of strength to ensure that you are able to collect information which you otherwise may not be having in your possession or may not be able to look at. Likewise, examine, for example, if it is a reopened assessment, what are the reasons recorded for reopening? What are the additions actually made. Whether at all the reasons are forming part of, or at least one of the reasons recorded is forming part of the finally adjudicated assessment. The reason again being that you have decisions where they say that if the reason fails, the reopening fails. Of course, a lot of challenge can be there to that under the new law, because the law in relation to reopening has undergone substantial changes. But I would, for one, believe that the concept of change of opinion, or for that matter, the concept of at least one of the aspects relating to the reasons being found in the final assessment order necessary for an assessment to be valid. Also do every time try to be clear about the days count. See, for example, all of us are aware that in 2021 there were a number of notices issued of reopening between 1/4/2021 and 30/6/2021. And then you had the judgment of the Supreme Court in Ashish Agarwal, where they kind of validated it in terms of their extraordinary power under Article 142 of the Constitution, and said that it is possible that we validate it now and permit you to do certain things. And then there were a lot of other issues that arose. Then you had the decision of the Supreme Court in Rajiv Bansal, which talked about what is called a surviving period for the officer to pass the 148 AD in order and the 148 notice. In fact, in almost half of the cases that I have seen, I have found that they have breached the surviving period. Likewise, the day count, in most of the cases, there are cases where department has missed the day count. In fact, these are some of the reasons why you will see that all time limits now under the law are made from the end of the quarter. Today, originally, if you see, they were talking of that day, that month. Now they are saying end of the quarter. So what they are trying to do probably is that little bit of laxity here and there at least gets covered up by saying end of the quarter. This is another aspect that you may have to examine. Now, particularly if it is a reopened assessment, there are a number of other aspects to examine. For example, whether the reopening is as a result of an asset that is in existence, or as a result of an expenditure, or as a result of an entry in the books of account. For example, if an assessing officer seeks to reopen an assessment based on the difference between the actual consideration and the guideline value, whether in the hands of the seller or in the hands of the buyer, this will not be represented by an asset, this will not be represented by an entry in the books, nor will it be represented by an expenditure. So the reopening may not be justified. Proper and adequate grounds to cover this and proper representation of these facts may be necessary. In fact, here in Kerala, I have had an occasion to see a few cases where I find that there have been some, I'm not saying that it is as a result of Kerala, but then I'm only telling that the case happens to be in your jurisdiction. I've seen that certain basic points have been omitted. And I won't blame the council, because the SC has probably not informed or communicated this to the council. For simple aspects like 14A, the amount of disallowance should not exceed the exempt income. Now, what happens is, when these grounds are not taken, it becomes that much more difficult to examine or to prove this before every higher appellate forum. And in fact, once you cross the level of the tribunal, it becomes even more difficult, because the High Court is only concerned about an issue which gives rise to a substantial question of law, and is not concerned about aspects which are not substantial questions of law. Now, orders under 263. In fact, if one were to look at the recent past, particularly with the advent of artificial intelligence and the computer-aided scrutiny, you find that very many cases are selected for scrutiny only on the basis of what we call artificial intelligence or computer-aided scrutiny. And this has led to one aspect. This is what I am noticing very consistently. What I notice is that many aspects relating to reopening can come or arise as a result of, say, for example, if I am a company the notes to accounts. But then artificial intelligence doesn't seem to capture the notes to accounts at all. So there are a number of issues that simply go unnoticed at the level of an assessment because they are not even taken for assessment. And even if they are taken for an assessment, there are circumstances where these aspects are not looked at. In fact, after the advent of this faceless assessment, we find one more difficulty. In fact, one retired chief commissioner who is now retired and settled here in Kerala was telling me, I got one case where they wanted to institute vigilance action against the officer. And ultimately I decided I will talk to the officer and ask him what is the problem. He said, sir, I don't even know that there is a section like this. Therefore, I didn't do anything. What did you do in the assessment? I only took the legacy issues, sir. Whatever was there in legacy issues, same thing I did. I don't know what else to look at. I am an ITO. This is a company which has a turnover of 5,000 crores. I have never seen a company like this in all my life, an assessment like this in all my life. But it has been allotted to me by the system. And I am supposed to look at it. I don't know anything. Therefore, the number of cases that come up under 263 is also increasing. Now, when is a 263 permissible? Basically, I would look at mainly two circumstances. One, where an aspect has not been looked into by the assessing officer, or two, where he has taken an impermissible view. These are the only two circumstances. Ultimately, if one were to boil it down to real brass tacks, these are the only two circumstances in which a 263 may be permitted. Because that is an extraordinary jurisdiction. Remember that every jurisdiction vested in every authority which unsettles a settled is an extraordinary jurisdiction. So this can be looked at only in two circumstances under 263. One is when there is a failure to examine a particular aspect, or two, when the failure or when the examination has resulted in an impermissible view being taken. So two things. If an aspect has been examined, then you also need to examine whether a permissible view has been taken. If it is a permissible view, it need not be the correct view. Remember that each one of the powers are different. For example, if I were to look at a decision of the Supreme Court not having been followed by an assessing officer, that can be a subject matter of 154. But if I want to reopen an assessment on the basis of not following Supreme Court, it will amount to a change of opinion. Even if there is a Supreme Court in the matter and I have taken a wrong view as an assessing officer, I cannot reopen it because then it is a change of opinion that I am taking. It may not be permitted. But if I am a commissioner exercising powers under 263, maybe it will be permitted. That depends on, again, what was the law prevailing on the date of the order. Let's say on the date of the order, Kerala High Court is in your favor. Within the time for revision, Supreme Court reverses Kerala High Court, which is against you. Can a 263 be invoked? The answer is no. Because the assessing officer is duty bound to follow the jurisdictional high court. He is duty bound to follow the jurisdictional high court, and there can be no going back on this. So therefore, one has to look at, in the context of 263, two aspects. And these should be specifically urged at the time of appellate proceedings. One, whether the aspect has been examined. And two, whether a permissible view has been taken. It is not necessary that you must demonstrate that a correct view has been taken. It should be a permissible view. In fact, if one were to look at the decision of the Supreme Court in Max India, you see paragraph 5 of the decision of Max India of the Punjab and Haryana High Court. The Punjab and Haryana High Court says, on the day on which the order came to be passed by the assessing officer, there were certain tribunal decisions in favor of the assessing. But these tribunal decisions came to be reversed by the Supreme Court. And on the day on which the 263 was sought to be passed, the tribunal decisions had already been reversed. Though at the time when the assessment order was passed, those tribunal decisions were holding the fort. They said, no, this cannot be amenable to 263 because the assessing officer has taken a permissible view. And when should you see whether a permissible view was taken? You should see it on the day on which the order came to be passed by the assessing officer, not on the day on which the 263 order came to be passed. Now, these are aspects that we need to look at each and every stage to see that our grounds are properly framed, our arguments are properly made. Likewise, in every submission, whether there is a computer-enabled window, not there, whatever, one last line is always mandatory for me. An opportunity of being personally heard or heard through video conferencing before disposing of this matter. Whether I like it or not, see, there are some things which will automatically be drafted. The first ground of appeal will always say the order of the assessing officer is contrary to law of facts and circumstances of the case. In any case, is opposed to the principles of equity, natural justice, and fair play. If you ask me what that means, I also don't know. I'm not sure what it means, but all I know is I can fit anything there. Likewise, there was one case where there was an order made under 179 and we were before the High Court in a writ. And we had specifically written saying, give me an opportunity of being heard. And when this writ was being heard, the department was saying so many things and the judge was only harping on one thing. They have asked you for an opportunity. Have you given one? Show me that you gave an opportunity. Otherwise, I'll cancel this order and remit the matter back to you. You do whatever you want. That one sentence, in fact, I still remember that day was a holiday. It was Vinayaka Chaturthi. It was a holiday. My office sent me the draft. I said, add one line. You missed it out. And that one line was what the judge was harping on right through the writ proceedings. Saying, they have asked for opportunity. Give that. What are they asking for? Luck would have it now the 179 came to be quashed. It is now 4 years. And they have not issued me a fresh 179 notice either. And in the meantime, a few of them are no more. The directors are no more. Some of them have left the country. Everything has happened. So even if they issue a 179 hereafter, I don't know how much they are going to recover. The demand is very small, just 100 crores in tax and interest without 222. If you add the 222, because so far they have recovered 6 crore out of 100 crore, balance 94 crore is there, add 222 for the last 10 years. You can imagine what number we are talking. It's a very small number. Be that as it may, that one line protected us. So in every submission, try to make it a point to pray that you be given an opportunity of being heard. I'm aware that in assessment and appeal, you have to go and click a column. Whether you do that, don't do that, that is one thing. Right. Because you would still probably be able to justify an appellate authority or a court that you did ask for an opportunity. It may not be exactly in the process that the law requires, but you have asked. And that may suffice for the purpose of at least setting aside matters. Likewise, look at whether, as I said, 270A penalty, be extra careful, underreporting or underreporting as a result of misreporting. Now the amendments made by the Finance Act 2026 permit you to approach the assessing officer even if it is an underreporting as a result of misreporting. Earlier, only underreporting they said was permissible. I'm not entering into the mainstream 270 or 270AA. So if it is a case of underreporting of income, not as a result of misreporting, you could approach the assessing officer by filing a Form 68, claiming immunity from penalty and prosecution, provided you pay the entire tax and interest within the time allowed in the notice of demand, and there are timelines within which you need to file the Form 68. The Finance Act 2026 has amended the Income Tax Act 2025 as also the Income Tax Act 1961, permitting assessees to approach the assessing officer even where it is an underreporting as a result of misreporting, but the penalty at 100% has to be paid. That is a little steep, I think, because asking somebody to pay 100% penalty to avoid a possible 200% looks to be very, very steep. And most SSCs may not be willing, but wherever it is necessary, try to examine that possibility. Remember that the law in 270 AA has been not so happily worded in many ways. One of the things that it says, for example, is you move an application under 270 AA. If the 270 AA is rejected for any reason, then the time from the date on which you presented the Form 68 to the date on which the order is received by you stands excluded. So what happens? Say, for example, I am in underreporting. I am claiming that I am entitled to immunity because I have done an underreporting of income. The assessing officer feels otherwise. He feels that it is an underreporting as a result of misreporting. And he refuses to grant me the immunity, say. Then I need to present an appeal now against the quantum addition. When it comes to presenting an appeal before the quantum addition, there is no timeline that starts from the 270 AA rejection. The timeline that is standing excluded is the day on which you filed the Form 68 to the day on which it was rejected. Now, for example, I have to file the Form 68 within 30 days. I file it on the 30th day. You are the assessing officer, you reject this after, say, 1 month or 1.5 months or whatever, based on the time frames available. You reject it and tell me, no, I am not granting you the immunity. I have to file the appeal. Now, how many days do I have to file the appeal? Normally, I have 30 days to file an appeal before Commissioner. I have filed the Form 68 on the 30th day, so my 30 days is already gone. Now the time has stood excluded, but I still now today don't have even 1 day time left to present the appeal because my 30 days is already gone. So in such cases, you have to be very careful that you may lose your time. Probably keep your appeal ready if you anticipate, because the show cause notice would have come. Keep your appeal ready so that you can present it as soon as possible, and that could reduce your chance for a larger delay being occasioned. Of course, I even have cases where against the 270 AA I have filed a writ petition. And that writ petition is pending, notice ordered, nothing has happened because it was vacation court. Nothing has happened. Now, June is the time limit for passing the order of penalty. I have not filed an appeal because if I file the appeal, my writ is not maintainable because I have pursued alternate remedy. Therefore, I am not filing an appeal. I am taking a chance that I will probably get a favorable order from the High Court. Otherwise, I will get it condoned saying I was pursuing alternate remedy. So these are aspects that you must be very, very careful about in examining and being sure that we are taking the right decisions at every step. When you pursue an appellate remedy, or when you are already having a demand against you, see, normally an appellate remedy arises when you are already having a demand against you. And when that demand is already staring at your face, or an order under 12AB rejecting my registration in case of a charitable trust is already staring at my face, and a potential demand is already there on me, that much extra care needs to be taken to ensure that we pursue our alternate remedies, and all of it very diligently. All the care that is possible needs to be exercised. In fact, somebody comes to me and says, sir, can I file 154 or appeal? I tell them, do both. Filing a 154 is not bar on an appeal. Filing an appeal is not a bar against a 154. I say do both. In fact, I was telling you about a trust being a charitable institution. It is a school. So what I did was, there was a 143.1. There was a 143.1 again through which a demand arose where the CPC had taken the gross receipts as my income and taxed me. So on the one hand, they had filed a 119. Against the 119, which was rejected apparently in my case, I went and filed a writ petition because I don't have any other remedy. Second, I filed a 154 before the assessing officer saying the 143.1 be amended to tax the net income. be amended to tax the net income. And in any case, I said the Form 10B against the 143(1), I filed another appeal saying that filing of a Form 10B is not mandatory, it is only directory. Therefore, the delay should not result in my exemption being lost. Now, the 154 came to be rejected. The 143(1), against which I filed an appeal, came to be rejected by Commissioner. I carried these two in appeal independently. Now, the tribunal said, as far as the appeal against 143(1) is concerned, we are condoning the delay. Form 10B is not mandatory, it is directory. I direct the assessing officer to allow the exemption as claimed by SSE. As far as the appeal against 154, they said it becomes infructuous because there you are seeking only net income. I went to the High Court, withdrew my writ petition and came back. I am safe now. The demand was only 4 crores for 3 years. And a poor school, genuinely poor school, which charges 5,000 rupees per annum for a 12th standard student. 5,000 rupees per annum for a 12th standard student. So you can imagine how subsidized it was. But then, unfortunately, neither do the departmental officers sometimes, or definitely not the CPC or the computer, understand that the difference between a genuine institution and a non-genuine institution. Now, proceeding further, also look at monetary limits. See, now I have a simple case where I am in a trouble. I'll explain why I am in trouble. See, what happened was that the demand that arose as a result of the assessment order, say, was 1.5 crore. Now, the demand for the purpose of checking monetary limits is without interest and has to be looked into to see whether an appeal can be filed or not by the department. So, this is a case where the assessing officer raised a demand on me. I carried the matter in appeal to the Commissioner Appeal. Commissioner Appeal was against me. I carried it to the tribunal. The tribunal allowed my appeal saying DIN is not present. The DIN number is not found in the order. It is sent through a separate letter. That is not sufficient. Right? The demand, as I said, excluding interest, was 1.5 crore. Now what happened? The department carried this in appeal to the High Court. In the meantime, the Madras High Court had already passed an order saying that wherever there is no DIN, the order is invalid. Now when this matter was carried in appeal, the minute that the DIN issue was pointed out, the High Court said no substantial question of law and dismissed the appeal of the revenue. Nobody pointed out that there was a tax effect in this, because to present an appeal before tribunal, there should be a tax appeal of 60 lakhs, tax demand of at least 60 lakhs if the appeal is presented by the revenue. Likewise, if an appeal is presented by the revenue, before the High Court it is 2 crore and before the Supreme Court it is 5 crore, of course subject to certain exceptions. Now I don't fall under the exception. Now had this substantial question of law been rejected on tax effect, there is no way department can come back and do anything. Now department has filed a review saying we have amended the law. We have amended the law. DIN cannot be a reason for an assessment to be declared void. Because the amendment says notwithstanding anything contained in any law, any decision, any judgment, any court order, anything. Because the way they have made the retrospective amendments by the Finance Act 2026 are very widely termed. They say that notwithstanding anything contained anywhere, whatever we have done thinking it is right is right. All that is required is we should have thought it is right. If we think it is right, it has to be right. That seems to be the kind of language that is used, but then I am now in a difficulty. Now I need to point out to court that even otherwise the substantial question of law will not sustain because of tax effect. But then what if the court recalls the order and again the SC is put through the grind of having to argue all these points over again? Now this causes needless anxiety to an SSC because you really don't know whether this circular will remain tomorrow on tax effect. These are questions that always remain as aspects that have to be examined. Also remember that as counsels representing an assessee, we are always at an advantage, because you can raise any new aspect at any time. Again, giving you an example, I have a case where an assessee received 1 crore and odd as commission from a Singapore company. Now what he had done was, this 1 crore and odd was commission for selling a particular product or getting him customers to whom he could sell the product directly. So the agreement is with me. I have entered into an agreement with the Singapore company that I will provide you customers who will buy your product, give me commission. The Singapore company paid me commission, no quarrel there. Let's say my commission is 1 crore 30 lakh. Now what I did was, rightly or wrongly, I showed this 1 crore 30 lakhs as income from other sources, and I had paid 1 crore and 10 lakhs to my partnership firm in which I am a partner along with my mother, and claimed that as an expenditure incurred for the purpose of earning the income under 57. The assessing officer says, 1 crore 10 lakh I will not allow because you have not shown me what the firm has done to earn this, to help you to earn this commission. So I am stuck, because for me to show that the firm helped me, because I am the firm. My mother is an old lady. I am the firm. Right? Most of you would think I am an old man. So you can imagine what my mother is. She is even older, apparently. So if you call her and examine her, she does not even know what business she is running. She just has signed wherever she has been told to sign, that's all. So now it's very difficult for me to demonstrate the firm did anything to earn this income. Actually speaking, the difference was the surcharge rate was higher for the firm, for the individual than for the firm. Some 4 lakh or so would have been the tax reduction. For that they did this. And imagine, now the point is, this 1 crore and 10 lakhs gets taxed twice, because the 1 crore and 10 lakh is taxed in the hands of the firm. It is again taxed in my hands because the expenditure is disallowed. So I am stuck with a much bigger problem. I am stuck with a 50-60 lakh demand including interest. Now before tribunal, my argument was completely different. I did not even start on 57. I said, look, this is a partnership firm. The business of the partnership firm is to sell the same product which I have helped that foreign company to sell to customers. It is their business to sell this product. A. That 2 companies to whom the foreign company sold at my behest, where I introduced them, were both customers of the partnership firm. Now under partnership law, I cannot carry on a competing business with the firm. And if I do a competing business with the firm without the express consent of the firm, the entire income belongs to the firm. Now logically speaking, this entire 1 crore and 30 lakhs belongs to the firm, not to me at all. Even this 20 lakhs that I am seeking to offer in my hands is not taxable in my hands. Now the tribunal, I have only argued the matter, I don't know what will be the outcome, but at least I think they find some favor with what I am saying. And I have placed on record a decision of the Calcutta High Court saying that it belongs to firm, etc. Now these are aspects where you or we as counsels for an assessee are open to argue at any time. But the department is stuck, because at every stage, the role of the department, excepting at the level of commissioner appeal where the power of enhancement is there, which is also a restricted power, is only to the extent of defending the order of assessment. They cannot raise a new plea or a ground at any time. They cannot say, if not this, that. No. If the assessing officer has said this is the reason, that alone can be justified by an, for example, a department representative or a standing counsel. They cannot say, even if this is not there, something else is there, but I can. So remember that we as counsels for an assessee are at a slight advantage there, because we can raise something we are not here defending or negating an officer's order, and even assuming we are only negating an officer's order, we can negate it for any reason. But the department, particularly at the tribunal and higher levels, is only on the ground of justifying their order. They cannot travel beyond. The ground that I took, for example, when I talked about the example of a partnership firm and a partner, and I argued saying that this is a competing business, so the income should belong to the firm and not to me, cannot be done by the department. These kind of arguments can never be taken. There are also some very powerful tools when it comes to representing before the tribunal. One is called a cross objection. Now, what is a cross objection? The law itself, in the provisions relating to the income tax appellate tribunal, specifically provide that cross objections can be raised. Now, cross objections can be twofold, two ways rather. One, for example, I have challenged a reopening before the Commissioner Appeal. I have also challenged the merit of the addition. The Commissioner Appeal holds the reopening against me, but the merit he allows in my favor. So I apparently don't go in appeal. Department carries it in appeal. At that stage, I can raise a cross objection saying the reopening is bad. And the cross objection will be numbered as a separate appeal and will be heard accordingly. I'll come back to this aspect, but then there is another way in which I can file a cross objection. Let's say there are 3 additions made in my case. 2 of them the Commissioner allows in my favor, 1 he does not allow. I say, okay, I don't want to fight any further, leave it at that. Now, before tribunal, the department carries these 2 additions which have been deleted to the tribunal. I can file a cross objection questioning the first one also. So there can be 2 ways. Now, as far as the first example that I gave is concerned, that is with regard to, for example, raising a cross objection on a reopening, you can do it even without a cross objection. The reason being that Rule 27 of the Income Tax Appellate Tribunal rules will specifically provide that you can support the order of the lower authorities even on grounds that have been held against you. So you can argue anything. But as far as the second aspect is concerned, where you want to raise a completely new issue, it cannot be done through Rule 27. There you may have to file a cross objection only. If you lose your time to file a cross objection, of course it can be condoned, but subject to all that, you may lose your right to get that benefit. Now, Rule 27, as I said, is an extremely powerful rule before the Income Tax Appellate Tribunal. Likewise, you have a Rule 10 before the Income Tax Appellate Tribunal, which is again a very important rule. Now, this apparently does not arise merely from Rule 10. It is the general rule of affidavits. The general rule of an affidavit is that an affidavit is good evidence unless the contrary is proven. Unless the contrary is proven, an affidavit is good evidence. In fact, if one were to look at many decisions of the tribunal, there are affidavits that are filed. So, when you are in the tribunal, examine whether the facts as stated by the lower authorities, the assessing officer or the Commissioner of Appeal or any lower authority, is correct or not. And if those facts are incorrect, it is very important to file an affidavit in terms of Rule 10 of the Income Tax Appellate Tribunal rules. Now, that affidavit is taken as sacrosanct unless the department proves that the contents of those affidavits are incorrect. It is for the department to demonstrate that the contents of that affidavit is incorrect. So, if there is a fact that is contrary to records, ensure that an affidavit under Rule 10 is always presented. Now, as far as tribunal is concerned, as I was saying, you are talking about the aspect relating to Rule 27 and Rule 10. And as a general rule, it is always established that an order passed against a non-existent person is non-est, provided the revenue is aware of the non-existence of the person. If the revenue is aware, then the order that was passed is liable to be quashed. But if the revenue was not aware, then the order that was passed is only liable to be set aside. In fact, you have a single judge of the Kerala High Court recently also passing a similar order, saying that the person died, but the officer did not know about the death. Of course, the order goes to judgment goes to the extent of saying you can't expect the dead person to communicate before dying, nor do you expect the legal heirs to communicate, but that does not invalidate the order per se, but the order all the same is liable to be quashed and set aside for a fresh order. Now the reason is very simple. A died, the demand is on A's son or A's wife or A's daughter. Now apparently you cannot hear somebody who is not there and pass an order against me, because technically I am liable for the demand as a person who is representing the deceased. I am liable. Therefore you hear me. Also be careful about penalty orders on a deceased, whether the penalty was initiated before death or after death. If it was initiated after the death, then in my understanding penalty cannot be levied at all. If it was initiated before death, then probably the legal representatives can be heard and penalties can be levied. So at every stage examine whether the legal heirs are on record. There is a possibility that even you and I may not be aware of the death of a person, the assessee. Somebody comes and tells us, and today everything is done uploading. You don't even know that the person died, is alive. God only knows. The Qasim doesn't come and tell us and then die. He dies. So there are cases where we file appeal. We don't even know the person is no more. And then we realize, oh, the person is no more, and then you go and say, okay, set it aside. Now, had I been vigilant enough to tell this before at the earliest stage, probably I don't go through so much of process before I get back to the first stage where I have to go through this. Likewise, in the case of an amalgamation where the amalgamated entity ceases to exist, the amalgamating company ceases to exist, In all those cases, again, you have to examine whether the officer was aware, was not aware of the non-existence of the entity. If he was not aware, then it can be set aside. If he was aware, then the order is liable to be quashed. You have decisions of the Supreme Court itself on this aspect. Enhancement in an appeal. Remember that the second appellate authority, the tribunal or no higher authority, has the power of enhancement. But the first appellate authority has the power of enhancement. So, while choosing to go in an appeal, you also have to be wary about whether there is a scope for enhancement. And if there is a scope for enhancement, be careful to ensure that we decide whether to pursue the appeal or not, depending on whether there is a possibility for enhancement. In fact, people say we will withdraw the appeal. There is nothing called withdrawing an appeal. Once you submit yourself to appellate proceedings, I only as a commissioner should permit you to withdraw. You cannot withdraw, because I am sitting with the power of enhancement. If you don't subject yourself to appeal before me, I get no jurisdiction over you. But if you subject yourself to appeal before me, then I am sitting as a commissioner with the power to enhance your order. Then you cannot choose to withdraw. So the minute an enhancement notice comes, if you say I can withdraw at that time, probably if I were sitting as commissioner of appeal, I will not allow you to. I will not allow you to, because I am not required to permit you to withdraw. Withdrawing is at my discretion as a commissioner. You as an assessee are bound by the appeal that you have presented. Of course, I can permit you always. Now, the power of enhancement, if you see, is not available to tribunal. Now, somebody may ask, after all, tribunal is a higher forum than commissioner appeal. Why cannot the tribunal have this power? Rightly or wrongly, it is not there. Now, for example, if there is a traffic violation by the Chief Minister of Kerala, the traffic policeman, warden, can impose a fine on him. can the chief minister impose the same fine on that traffic constable if he violates the traffic signal? The answer is no. But who is bigger? Apparently not the traffic constable. So there are limits on how powers operate. An assessing officer can frame an assessment order on the President of India. President of India cannot frame an order of assessment on an assessing officer. That does not mean officer is bigger than president, no. So these are clear-cut, conscious decisions taken as to whether a power should or should not exist. Why I am making this so clear is, there are any number of decisions today which say that what cannot be done directly cannot be done indirectly. Now there are circumstances where the tribunal remits the matter back to the file of the assessing officer for a fresh order to be made. At that stage, the officer wants to make an enhancement from where he started. In the first assessment, he adds issue A. Matter goes back. Now he realizes, oh, I could have added so much more. Can he do it? The answer is no. Because what cannot be done directly cannot be done indirectly. Commissioner appeal could have. But then the Commissioner appeal's powers are also restricted in the sense that the Commissioner appeal can only make an enhancement in respect of issues or the streams of income that have been considered by the assessing officer. He cannot bring in a new source of income in an enhanced proceeding. Now, why is that so? Again, logical. See, if you look at it, dissecting each of it independently, you find that very, very logical. See, an commissioner under 263 cannot interfere with an issue which has been decided by commissioner appeal. But he can go into a new source. Therefore, that power is not available with the commissioner appeal. Commissioner appeal, because he is deciding a particular issue and that issue cannot be made a subject matter of 263, he is given the power of enhancement only in respect of those issues. So be very careful on the power of enhancement. Examine whether enhancement is possible A. If it is possible, take a reasoned call. If it is not, if it is still presented, an appeal is presented, before you receive at least a show cause notice, if you withdraw the appeal, probably the commissioner may not even realize. The commissioner appeal may not even realize the possibility of an enhancement. Likewise, examine whether a 264 is necessary or an appeal is necessary under 246A. Remember that 263 and 264 are powers of revision. 263 will always be in favor of revenue. 264 will never be in favor of revenue. I am being very careful in my choice of words. 264 need not be in favor of assessee. It will not be in favor of revenue, that's all. A commissioner can decline to interfere also. Now remember that when there is a 263 that is sought to be made, the law talks of what is called a partial merger. In the sense that issues considered and decided by the appeal commissioner cannot be subject matter of 263. But in a 264, there is a total merger. The minute you present an appeal and the appeal is adjudicated, there is no scope for 264 at all on any issue in that order. You are completely debarred. Now, why I use the language and the issue has been considered and decided is because there is a decision of the Madras High Court and also other courts where the courts have said that if you withdraw your appeal and come to the commissioner under 264, it is open for you to raise the issues in 264. Now also remember that 264 is not a bar against a 246A. You go in a 264, commissioner does not agree with you, you can still file an appeal. It is only the reverse that is barred and therefore be that much more careful. Now quickly before tribunal, you talk of what is called a paper book, you talk of what is called additional evidence. Additional evidences can be before tribunal, before commissioner appeal. Likewise, paper books can be before both authorities, but the rules are slightly different. When it comes to additional evidence, you have Rule 46A of the income tax rules for commissioner appeal and Rule 29 for income tax appellate tribunal. Income tax appellate tribunal, it simply says wherever the tribunal deems it fit. They can admit additional grounds. But remember, if you are raising additional evidences under Rule 29 of the Income Tax Appellate Tribunal rules, there is almost virtually only one outcome. Your matter will be set aside. You cannot get an order in any one particular manner because the tribunal does not have the mechanism to examine additional evidences. So they will remit the matter back. That is one reason why you must ensure that every possible evidence is presented at the first appellate stage. Of course, before the first appellate authority, you have Rule 46A. I don't remember the new rule number, but I have tabulated it. They say additional evidences will be permitted only in 3 circumstances. The circumstances being, 1, you are not in a position to present it, whatever be the reason, whether it was called for or it is presented by you. Or 2, the officer refused to accept it, or that there was a scenario where you could not obtain the evidence within the stipulated time. In all these cases, Rule 46A permits you to file additional evidence. So you need to make a specific petition in terms of Rule 46A with a prayer for admission of the additional evidence, and only then it can be made. A fresh claim can be made at any time before the appellate authority, before the tribunal, before the High Court may be difficult, but at least before these 2 persons, a fresh claim, a completely fresh claim can be made. For example, I may have omitted to make a claim before the assessing officer. Can I make it for the first time before Commissioner Appeal? The answer is yes, you can make it for the first time before Commissioner Appeal. You have a number of judgments on this, that a fresh claim can be made. In fact, you have a decision of the Supreme Court in a case called Goetz India, where the Supreme Court says before assessing officer, you cannot make a fresh claim excepting through a revised return. Now, after looking into this decision of the Supreme Court, there are a number of decisions like Abhinata Foundations, the Madras High Court, J. Parabolic, the Delhi High Court, all of which they have said that that is a bar only on the assessing officer. As far as appellate authority is concerned, you can ask for it at any time. And the appellate authority is normally duty bound to allow your fresh claim also. Likewise, the opportunity to examine or cross-examine. Remember that there are what you call witnesses of the revenue, witnesses of an assessee. So if you want to let in a witness, the evidence can be in the form of material or it can be in the form of a person. If you want to let in a witness as an assessee, then you must ask the assessing officer to issue summon and produce the person. The duty is on you to produce the person. And once you let in the person as a witness, the department has a right to cross-examine that person. Likewise, if the department is letting in a witness, see what happens is there is a search or a survey on a third party, they collect some information, somebody gives a statement, that is the witness of the revenue. The revenue is under an obligation to produce that witness before me if I ask for cross-examination. Now it is the duty of the revenue to produce the person, not me. I simply have to write to them saying, allow me to cross-examine. Again, remember that the power of cross-examination or the right of cross-examination is a very valuable power and it should not be used where it should not be used. If you are very sure the fellow will come and say statements against you, don't call him for cross-examination. Don't call him, get a statement against you and say, now what to do. Best is to keep saying, no, what he says cannot bind me. Don't ask for cross-examination because then you become susceptible, more susceptible to that evidence or witness being used against you. You can look at various aspects relating to filing written submissions. Before the Commissioner Appeal, of course, there is no difficulty. You can file written submissions and you do file written submissions, particularly in the context of faceless assessments, faceless appeals. Before tribunal, what we do is we don't prepare written submissions in advance. Wherever there are more complicated matters, we stand up, we argue, we finish everything. Once we are done, we take the leave of the tribunal and say within so many days we will file our written submissions and file. Because that way the advantage is I know exactly what the other side is talking. If I prepare ahead and go with the written submission, I don't know what you are going to talk on the other side. So my counter to your submissions will not be found in my written submissions. But if I am able to do it at a later stage, invariably the tribunal has been very, very accepting in terms of the fact that written submissions can be filed later, though they generally say you do it within stipulated timelines. Miscellaneous applications, of course, if there is a mistake apparent on record, the law permits you to file a miscellaneous application requiring the tribunal to rectify a mistake apparent on the record, but unfortunately the timelines are very tight. The timelines are very tight. The rectification petition has to be made within 6 months from the end of the month in which the order is received. That is one problem. But then there is also a possibility that the tribunal may have passed an ex parte order. If there is an ex parte order before the tribunal, remember that that is not an order which suffers from a mistake apparent on record. The recalling is in terms of Rule 24 and 25 of the Income Tax Appellate Tribunal rules, and that is not bound by any time limits. Likewise, before tribunal, you can not only seek stay of demand, you can seek stay of all proceedings under the Act. Now, normally a demand arises, you seek stay of the demand. But let us assume I have a 263 on me, directing the assessing officer to redo an assessment which has been set aside. I can seek stay of all further proceedings. In fact, there is even recently a Jammu and Kashmir High Court which says that you can seek stay of all proceedings under the law. Now, I will probably jump to the last aspect on whether I will choose to file an appeal or file a writ. Now, remember that writs are filed before the Supreme Court in terms of Article 32 and before the High Court in terms of Article 226 of the Constitution of India. Interestingly, you will find that the scope of a writ under Article 32 is much lesser than the scope of a writ under Article 226, which means the writ jurisdiction of a High Court is much more than the writ jurisdiction of the Supreme Court. The writ jurisdiction of a High Court is much superior and much higher than the writ jurisdiction of the Supreme Court. Now, when do I choose to go in a writ? Before I go there, the first question that invariably comes to my mind is, do I have an efficacious alternate remedy? Generally, as a rule, most courts don't permit you to move a writ petition if you have an efficacious alternate remedy. Now, what can be an efficacious alternate remedy? For example, sometimes we have tried telling the court, look, these are GST proceedings, if I must go in an appeal, then I have to pay this minimum demand, only then I can go in appeal. So I don't have an efficacious alternate remedy. The court say, no, that cannot be a reason. So you always have to demonstrate that there is a lesser scope for an efficacious alternate remedy. That does not mean that a High Court will not entertain a writ if there is an alternate remedy. They still can entertain a writ. When do they entertain writs? Generally, is when they find that there is a violation of the principles of natural justice, like for example, not giving an opportunity of being heard, not putting across material to me, not producing evidence to me, not allowing me to cross-examine certain witnesses of the revenue, etc., where it is a clear case of the violation of principles of natural justice. This is one large area. But then remember, if you go in a writ praying that there is a violation of the principles of natural justice, you will only get the matter set aside back to the file of the authority who has violated the principles of natural justice. You are not going to get a relief from the demand or whatever has arisen as a result of that order. Next, where there is a lack of jurisdiction. For example, you have a case where the sanction or the approval should be given by the Chief Commissioner. The sanction or approval has been given by Commissioner. Then again, you could say that there is a lack of jurisdiction in the sanction and consequently in the notice. Or the pecuniary jurisdiction. For example, your income returned exceeds a particular limit, but the notice is issued by the ITO as against by the Assistant Commissioner as warranted by the board's instructions. This could be a reason. Or where the effect or the remedy which you actually can get from the appellate authority is illusory or is ineffective. For example, if I am before the Commissioner appeal on an issue relating to the violation of principles of natural justice, Commissioner appeal does not have the power of set aside. So it becomes that much easier for me to file a writ. So I would look at these aspects. There are a number of other aspects that one may look at, but then, as I said, alternate remedy is a hurdle that you may have to cross, but it is not a hard and fast rule that the existence of an alternate remedy debars a writ from being filed. So weigh your options carefully. Now you have three options before you. You can choose to go in an appeal. You can choose a remedy under 264. You can choose a writ. It is not open to the revenue to say you should use only one of these remedies. Your remedy is your choice. But then remember that each forum is bound by certain rules that they follow. For example, in a 264, I can decline to interfere. In 246A, if I am in appeal, there are only certain things that I can do, but the power of enhancement is there. 264, the power of enhancement is not there. He may have to invoke 263 independent of that. And if the timelines are breached, the timelines are breached. So that may probably be an advantage. So each one of these have to be examined on a case-to-case basis. In fact, I always say, if you were a doctor, in why 99? 99,999 out of 1 lakh cases, the heart will be on the left only. The kidney will be here, the heart will be here, the stomach will be here, the lung will be here. Everything will be where it should be. Some one odd case, some cranky man can come with the heart on the right, lung on the left, something like that. But otherwise, they are in standard positions. But when we are representing an SSE, remember literally each SSE comes with a different set of facts. Even a case that is lost can be won, or a winning case can be lost. And it all depends on how and what we pursue before an appellate forum, and probably the manner in which it is presented. Now, what we have been trying to discuss over the last couple of hours is not merely what are the remedies available, but we have been trying to discuss what are the ways in which we can think of a representation so that it becomes more effective. Friends, I am aware that we are on the Income Tax Act 2025, but then there is not much of change in appeals between the Income Tax Act 61 and 2025. And honestly, I have yet to memorize the sections. I have tried my best, and my age is catching up. I am not able to memorize so quickly. In fact, I have now put one TV in my room where it will run through the sections differently, and whenever I get time, I look at it so that I am able to memorize. This seems to be the new method I have tried to find out. So friends, I am indeed very happy that I was able to be here with you, sharing some of my thoughts. I must definitely be grateful to the chairman and the office bearers for giving me an opportunity to be here. In fact, many of these aspects that I discussed today, I have not read before. I read it only yesterday. So to that extent, to the extent that of the fact that I learned what I did speak, some of what I spoke today, for the first time only yesterday and today, this morning, I am indeed grateful. Thank you very much for a patient hearing. If there are any queries, subject to, of course, the organizers, I'll try to take them. Thank you very much for the opportunity.
Thank you very much, sir, for that insightful and enriching session. May I invite CA Albhuta Jyoti M, Chairperson, Kozhikode Branch, to present CAT Bhanushekar with a memento as a token of our love and respect. Ladies and gentlemen, the floor is open for questions.
So before CIT appeals, we find it sometimes some difficulty that whether it's additional ground or original ground, or additional evidence or original evidence. Suppose our ground is original and we attach evidence, I think it's original evidence. Or if suppose we are not filed evidence before assuing authority, that becomes the criteria for determining whether its evidence is additional or original.
Additional evidence before the first appellate authority is concerned, it is governed by Rule 46A of the Income Tax Rule 62, and it specifically provides the circumstances. In fact, 46A, if you see, is negatively worded. It says no additional evidence shall be admitted except, and gives the circumstances in which additional evidence can be admitted. It is not positively worded. If you see Rule 29 of the tribunal rules, it says any additional evidence can be admitted at the discretion of the tribunal. Here it is not like that. It is actually negatively worded, saying these are the 4 circumstances in which additional evidence will be admitted. So in every case where an additional evidence is presented, that is an evidence which is not before the lower authority is presented, you should make an application in terms of Rule 46A, asking or praying for admission of that additional evidence. And only if the commissioner admits it, it will be taken on record. Of course, if he refuses to, you can always go to the tribunal and say he ought to have accepted it. But subject to that, it is at his discretion, but then normally he would call for what is called a remand report, because 46A3 specifically provides that additional evidences cannot be relied on without giving the officer an opportunity of being heard. Though 46A4 says the commissioner may call for additional evidences. So if he calls for an additional evidence, that does not have to be put across to officer. But if you are presenting the additional evidence, it has to be put across to the officer. But be that as it may, filing evidences per se without labeling it as additional evidences is not advisable. Kindly label it as an additional evidence and make a petition for its admission.
In tribunal, one more?
Yeah.
Online mode, we find it very difficult to hear the DR because they are not using mic. Whereas we can definitely hear the, the bench, the judge. Any solution for that? Or you find it
Sir,
any difficulty for that?
I am facing the same problem before the Kerala High Court. Not before the tribunal alone.
Oh.
I am facing this problem before the Kerala High Court where I cannot hear standing counsel. I can hear the judge.
Yeah.
But the standing counsel is standing from somewhere and speaking. I don't hear the standing counsel. This is a problem which you have not merely in the tribunal, but also in the courts.
No, they could use the mic.
I am afraid I will have to say this. I don't know if it is appropriate, but then I am afraid we have to say this, that the system of being heard online has still not become as effective as it should be. Now, if you are before Supreme Court, it is extremely audible. Madras High Court is audible. Kerala High Court, we have a problem. So each place is a problem. Now, for example, if you are before the Chennai Tribunal, there is not much of difficulty. The Kerala Tribunal bench, yes, there is a problem. Likewise, some benches you have problems, some benches are very well equipped. You take Delhi, for example. Delhi doesn't even use, the benches don't even use a paper. They don't have a file at all. They look only at the system. They look at the system. So each has grown in a particular way. In fact, filing of appeals itself, we are finding difficulty. If you take, for example, Chennai zone, you have to file it online and then present it in paper also. If you take Kochi, for example, you don't have to present it in paper again, physical form. Bangalore, you have to present it physically. Delhi, online. So each bench itself seems to be following a different mechanism. In fact, Bangalore and Kochi fall under the same zone. The vice president is the vice president of the Bangalore zone, who is the vice president of the Kochi zone. In Karnataka, in Bangalore, you have to file a copy physically, which is not required in Kochi. This is the extent to which we are now trying to, grapple with each scenario. So it's a fact that you are having problems. Whether you can find a solution, I think the system has to find the solution. As of today, online representation is not fully effective. It is there. So to seek an adjournment, to do small matters, yes. Big matters, difficult.
Then filing written submission before honorable tribunal, we also find it difficulty because there is no e-proceedings. We have to file through email, which they may not look at. Even if we argue online, they are on the order that will not appear.
No, honestly, sir, as far as filing written submissions are concerned, in fact, at least most of the benches that I have seen, they say you send it by email, that is enough. And they are taking it on record. But as far as possible, we try to file it physically because, again, you get an acknowledgement. You get an acknowledgement. And in any case, particularly with every station, you will have a rapport with somebody. Have it sent to them and have it filed. That may be a practical solution, but whether this should be the real solution over time, the answer is no. But as of today, we have it filed physically as far as possible, excepting where the benches are very, very tech savvy and say file, email only, it's enough for us. In fact, we have one member who is from this town of Kerala, who is from this state. He just sent by email. And the minute you send by email, he has it.
So, out of the 3 alternatives, we have chosen to file writ petition. What if the court dismisses our writ petition or if it is unfavorable to the SSC? What is the next course of action?
When there is a writ petition that is filed and when it is unfavorable to you, invariably we make a prayer to the court saying you permit me to file an appeal within so many days. And the court will invariably give you a time which will be normally about 4 weeks. File an appeal within 4 weeks and the commissioner appeal or whoever is the appellate authority shall consider this appeal without going into the aspect relating to condemnation. So the court gives you the leave. So when the writ is going against you, you make the prayer. But perchance if you have failed to make the prayer, and if you have not got any such order from the court, because sometimes what happens is the judge said reserved, and then he passes the order, at which time we don't have the option of making that prayer probably. In such cases, we go to the Commissioner of Appeal saying condone the delay, alternate remedy we were pursuing. In fact, there is a decision of the Madras High Court where they have condoned a delay of 13 years, 13 years for pursuing alternate remedy. And there is one tribunal decision where they condoned some 80 years, some 12A registration, etc., not filed, etc. They said, condone. So any amount of delay can be condoned. This is not like GST, fortunately. In GST, you have strict timelines, where the delay condonation itself is only up to 30 days. Here it is not like that. So any amount of delay they can condone. And if you are pursuing an alternate remedy, that is more than enough ground for condonation.
Sir, my question is, I have filed a revision petition under section 264 and it was rejected. And next remedy is to approach the Honorable High Court, or can I approach ITAT?
No. There is no appeal against an order under 264. You can only approach the High Court in a writ petition.
Okay, thank you.
Thank you, sir. Thank you, ladies and gentlemen. We shall now break for tea and reconvene at 11:45 for the inaugural session.
भी कभी भी।
और लंच टाइम में भी?
हाँ हाँ, लंच टाइम में भी। न्यू योनो देगा पावर टू एवरी इंडियन। ब्रॉट टू यू बाय SBI, द बैंकर टू एवरी इंडियन।
यार ये हम कैसे भूल गए? फिर से शुरू करना होगा।
वहीं से शुरू होगा।
अब सबको मिलेगा ऐप से शुरू करके योनो नेट बैंकिंग पे कंटिन्यू करने का पावर। न्यू योनो देता है ओमनी चैनल बैंकिंग का पावर टू एवरी इंडियन। ब्रॉट टू यू बाय SBI, द बैंकर टू एवरी इंडियन।
स्कैमर्स अब उतरे मैदान में नई रणनीति के साथ। दूसरी ओर डटे हैं अनुभवी बल्लेबाज।
हेलो, दिस इज कस्टम्स डिपार्टमेंट। आपके पार्सल में ड्रग्स मिले हैं।
कस्टम्स?
यस, कस्टम्स।
स्कैमर्स की यॉर्कर सीधी ब्लॉक होल में, लेकिन मुस्कुराते हुए किया सामना।
दिस इज सीरियस, मजाक मत करो।
शुरू तो आपने ही करा था।
और ये कमाल का ब्लॉक। बैट्समैन नॉट आउट, स्कैमर्स गेट आउट।
बी अलर्ट, बी स्कैम सेफ।
अब आ गया न्यू योनो ऐप से, नेट बैंकिंग से और ब्रांच से बैंकिंग करने का पावर। कहीं भी कभी भी।
और लंच टाइम में भी?
हाँ हाँ, लंच टाइम में भी। न्यू योनो देगा पावर टू एवरी इंडियन। ब्रॉट टू यू बाय SBI, द बैंकर टू एवरी इंडियन।
यार ये हम कैसे भूल गए? फिर से शुरू करना होगा।
वहीं से शुरू होगा।
अब सबको मिलेगा ऐप से शुरू करके योनो नेट बैंकिंग पे कंटिन्यू करने का पावर। न्यू योनो देता है ओमनी चैनल बैंकिंग का पावर टू एवरी इंडियन। ब्रॉट टू यू बाय SBI, द बैंकर टू एवरी इंडियन।
स्कैमर्स अब उतरे मैदान में नई रणनीति के साथ। दूसरी ओर डटे हैं अनुभवी बल्लेबाज।
हेलो, दिस इज कस्टम्स डिपार्टमेंट। आपके पार्सल में ड्रग्स मिले हैं।
कस्टम्स?
यस, कस्टम्स।
स्कैमर्स की यॉर्कर सीधी ब्लॉक होल में, लेकिन मुस्कुराते हुए किया सामना।
दिस इज सीरियस, मजाक मत करो।
शुरू तो आपने ही करा था।
और ये कमाल का ब्लॉक। बैट्समैन नॉट आउट, स्कैमर्स गेट आउट।
बी अलर्ट, बी स्कैम सेफ।
अब आ गया न्यू योनो ऐप से, नेट बैंकिंग से और ब्रांच से बैंकिंग करने का पावर। कहीं भी कभी भी।
और लंच टाइम में भी?
हाँ हाँ, लंच टाइम में भी। न्यू योनो देगा पावर टू एवरी इंडियन। ब्रॉट टू यू बाय SBI, द बैंकर टू एवरी इंडियन।
यार ये हम कैसे भूल गए? फिर फिर से शुरू करना होगा?
वहीं से शुरू होगा।
अब सबको मिलेगा ऐप से शुरू करके यूनो नेट बैंकिंग पे कंटिन्यू करने का पावर। न्यू योनो देता है ओमनी चैनल।
Ladies and gentlemen, we are about to resume the program. Please take your seats back in the hall. Ladies and gentlemen, I request all delegates to kindly take their seats. We are about to commence the inaugural session of the National Conference on Income Tax Act 2025, organized by the Direct Access Committee of ICAI and hosted by the Kozhikode branch of SIRC of ICAI. Today, we are privileged to be joined by distinguished leaders of the profession and eminent personalities who have graciously consented to be with us for this occasion. May I request CA P.A. Thangachan, Treasurer Kozhikode branch, to kindly accompany CA Deepa Varghese, Regional Council Member SIRC of ICAI, to the dais. I also request CA Ravi Chandrasekhar, Secretary Kozhikode branch, to accompany CA Jay Chhera, Central Council Member ICAI, to the dais. May I also invite CA Vinod N, Vice Chairman Kozhikode branch, to accompany CA Chandrasekhar Vasant Chitale, Chairman Direct Access Committee ICAI. May I also request CA Albhuta Jyoti, Chairperson Kozhikode branch, to accompany our chief guest, Dr. M.P. Abdus Samad Samadani, Honorable Member of Parliament Ponnani, to the dais. Ladies and gentlemen, I request you to stand up for the Institute motto.
Yaesha supteshu jagrati Yaesha supteshu jagrati Kamam 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 Pursho nirvimanaha Tadeva shukram Tada brahma Tadeva mritamucchate Tasmin lokaha shataha Sarve tadunatyati kaschan Etadvaita
Thank you, ladies and gentlemen. Please take your seats. To formally welcome the gathering, I request CA Albhuda Jyoti M, Chairperson Kozhikode branch of ICAI, to deliver the welcome address.
Respected Chief Guest Sri Abdul Samad Samdani, Honorable Member of Parliament, Distinguished Chairman of the Direct Taxes Committee, ICAI, CA Chandrasekhar Vasan Chittale, Guests of Honors, CA Jai Chaira, Central Council Member, ICAI, CA Deepa Varghese, Regional Council Member, ICAI, esteemed faculty members, my dear respected seniors and my dear other members. A very warm good morning to all of you. It gives me immense pleasure and privilege to welcome you to the National Conference on Income Tax Act 2025, organized by the Direct Tax Committee of ICAI and hosted by the Kozhikode branch of SIRC of the Institute of Chartered Accountants of India. Today's conference is being held at the landmark moment in the history of direct taxation in our country. The Income Tax Act 2025 represents one of the most significant legislative reforms in recent times. As professionals entrusted with interpreting, implementing, and advising our tax laws, it is essential that we remain informed, updated, and prepared to guide stakeholders through transformative phase. We are deeply honored to have with us as our chief guest, Sri Abdul Samad Samdani, Honorable Member of Parliament. Sir, thank you very much for accepting our invitation. A distinguished scholar, renowned orator, and respected public leader, you have inspired countless people through your wisdom, intellect, and commitment to public service. Your presence today adds immense value to this conference, and we are truly grateful for your encouragement and support to the professional community. We welcome you, sir. Today is indeed a proud and memorable occasion for the Kozhikode branch. It is a rare privilege to us to have a chairman of the Data Committee of ICAI, CA Chandrasekhar Vasan Chittale, present with us for this conference. The Direct Taxes Committee plays a pivotal role in shaping tax knowledge dissemination, professional development, and policy representation across the country. His presence underscores the importance of this conference and reflects the confidence that the Taxes Committee has reposed in the Kozhikode branch. Having the chairman with us today is a matter of great pride and encouragement for all our members. We heartily welcome to you, sir. We are equally honored by the presence of CA Jai Chaira, Central Council Member, ICAI, a dynamic leader whose contributions at the national level have significantly strengthened the profession. His presence is a source of inspiration to all members gathered here today. We welcome you too, sir. We are privileged to have CA Deepa Varghese, Regional Council Member, ICAI, whose constant encouragement and unwavering support have always strengthened the activities of our branch and the profession throughout the region. Her presence means a lot to us. We welcome you, Madam. At this juncture, I would like to make a very special mention of CA Babu Abraham Kalivelil, Central Council Member, ICAI, in his absence. Today's gathering is a reflection of his vision, tireless efforts, and meticulous planning. It is because of his dedicated leadership and unwavering support that events like this and such fine speakers could be experienced by us. His contribution extends much beyond this conference. He has consistently supported the Kozhikode branch in its growth journey. His leadership was instrumental in facilitating the purchase of land for our branch and in obtaining council approval for building plan with an area exceeding present norms, thereby laying a foundation for modern, spacious, and future-ready ICAI Bhavan for our members. On behalf of the entire Kozhikode branch, and dear members of the Kozhikode branch, I express our heartfelt gratitude to his vision, leadership, accessibility, and unwavering support. A heartfelt welcome to our distinguished faculty members. CAT Banishekar sir, CA Chandrasekhar Vasant Chitale sir, C. J. Chaira sir, C. Arjit Shiordas, C. Rishabh Agarwal, C. A. Viramnath, and C. A. Gopal Krishna Raju. Each one of you is widely recognized for your expertise, thought leadership, and valuable contributions to the profession. We are grateful for your willingness to share your knowledge, insights, and practical experience with us. I am certain that the technical deliberations over the next 2 days will provide immense learning and professional value to every participant. I also warmly welcome our past chairpersons, managing committee members, senior members of the profession, and all members who have traveled from different parts of the area with us today. This conference has been thoughtfully designed to address critical aspects of the new legislation, including appellate representation, transition issues, data tax reforms, exemptions, capital gains, tedious provisions, taxation of firms, and professional practice development. The knowledge and perspectives shared during these sessions will undoubtedly equip us to navigate the evolving tax landscape with greater confidence and competence. I take this opportunity to express my sincere gratitude to the Directors Committee of ICAI, the Income Tax Department, the Managing Committee of the Kozhikode branch, our volunteers, sponsors, and all those who have worked tirelessly behind the scenes to make this conference a reality. To all delegates, thank you for your enthusiastic participation. Your commitment to continuous learning and professional excellence strengthens our profession and enhances its contribution to the society and nation building. As we commence this national conference, let us embrace this opportunity to learn, collaborate, and prepare ourselves for the evolving landscape of direct taxation. May these 2 days inspire new ideas, deepen professional knowledge, and strengthen our commitment of excellence. Once again, I extend a heartfelt welcome to our dignitaries, faculty members, and delegates. I wish each one of you a highly enriching, productive, and memorable conference. Thank you. Wishing you all a very successful and memorable conference.
Thank you, Madam Chairperson. Friends, lighting the ceremonial lamp symbolizes the triumph of knowledge over ignorance and wisdom over uncertainty. As we gather to deliberate upon one of the most significant developments in direct taxation, it is fitting that we invoke the light of learning and professional excellence. I request our dignitaries on the dais to kindly join us for the ceremonial lighting of the lamp. Thank you all. May I request the dignitaries to kindly resume their seats. May I invite Dr. MP Abdus Samad Samadani, who needs little introduction amongst us. Sir, please.
വേദിയിലും സദസ്സിലുമുള്ള ബഹുമാന്യരെ, our esteemed chief guest who is going to deliver the keynote address, respected Shri C.A. Chandrasekhar Vasant Chitaleji, Chairman, Direct Taxes Committee, ICAI, my esteemed sister, the chairperson of the Kozhikode branch of ICAI, CA Albhuda Jyoti M. I think our आप लोग समझ सकते हैं अल्बुद ज्योति, इसका जो मतलब अल्बुद ज्योति, विस्मय, अल्बुदा विस्मय, वंडरफुल, अद्भुत, संस्कृत का अद्भुत. Respected CA Jai Chairaji, CCM, ICAI, who is going to make special address here, and Mr. CA Vinod and Vice Chairman Kozhikode branch ICAI, Mr. CA Ravi Chandrasekhar, Secretary Kozhikode branch of ICAI, and CA Mr. Thangachan PA, Treasurer of ICAI, my esteemed friends, dear brothers and sisters, I feel honored in this very august assembly, where the Institute of Chartered Accountants of India is conducting a 2-day seminar on Income Tax Act of 2025. It's a very important session, very important program. These 2 days you are going to ponder upon a very important subject and topic of our country, our economy, that is the Direct Taxes Committee's 2 days seminar on Income Tax Act of 2025. It is a highly technical session. Subject-wise, you have arranged very important sessions in which various topics will be discussed. And I am not a person very much acquainted with this field of yours, but I feel honored and I have immense respect to the chartered accountant friends. In our society, in our social hierarchy, everybody is important, but certain areas, certain professions, certain fields of activity have much more importance and relevance. For example, I sometimes think who is the first citizen of our society, the most important one. Sometimes I think and I feel it is the teacher, the first citizen, teacher, the guru, adhyapak. And sometimes I feel it is the doctor who treats, who is devoted to the healing of the mankind. Without a doctor and without a treatment, without the systems of medicine, the society may not be able to survive. So in the society, sometimes I feel that the first citizen the teacher, and sometimes I think the first citizen is the doctor. वैद्य जो होता है, वैद्यराज नमोस्तुभ्य. There is a shloka, Vaidyaraja Namostubhya. Namo, I salute, I adore Vaidyaraja, the physician. And sometimes, and there is another very important person in the society, lawyer, vakil, whose position is also very important because he comes to the rescue of the people to establish justice, equity, equality, സമൂഹത്തിൻ്റെ സന്തുലിതാവസ്ഥ. അന്യായമായിട്ട് കഷ്ടപ്പെടുന്നവരുടെ മുമ്പിൽ ഒരു വക്കീൽ വരുമ്പോൾ, ഒരു ജാമ്യം എടുത്ത് കൊടുക്കുമ്പോൾ, ആ വക്കീലിൻ്റെ റോള് എത്ര പ്രധാനമാണെന്ന് മനസ്സിലാക്കാൻ സാധിക്കും. അതുപോലെ തന്നെയാണ് ചാർട്ടേഡ് അക്കൗണ്ടൻ്റ് എന്ന് പറയാനാണ് ഞാൻ ഇത്രയും പറഞ്ഞത്. He or she is very important in the society, especially in the economic fabric, in the formation, protection of the economic fabric of our society. The chartered accountant is very important. He is a friend to many. He helps, he guides, and his wisdom prevails. His or her wisdom. ഒരു ചാർട്ടേഡ് അക്കൗണ്ടിൻ്റെ ബുദ്ധി, അദ്ദേഹത്തിൻ്റെ ഇടപെടലുകൾ, ഇൻ്റർവെൻഷൻസ് ചില സന്ദർഭങ്ങളിൽ വളരെ വളരെ പ്രധാനമായി തീരുന്നു. ഇങ്ങനെയൊക്കെയാണ് ഞാൻ ചാർട്ടേഡ് അക്കൗണ്ടൻസിനെ കാണുന്നത്. എനിക്ക് നിങ്ങളോട് എന്തെന്നില്ലാത്ത ബഹുമാനമുണ്ട്. നമ്മുടെ സമൂഹത്തെ താങ്ങി നിർത്തുന്ന ചില സ്തംഭങ്ങളുണ്ട്. There are certain pillars supporting our society, our social system. ഈ പറഞ്ഞവർക്കൊക്കെ അതിൽ പങ്കുണ്ട്. And you are leaders. You are leaders. നമ്മളെ നാട്ടിലെ ഒരു തെറ്റിദ്ധാരണയുണ്ട്. Leadership is meant only to the politicians. It is a gross misunderstanding, very serious misunderstanding, which has to be corrected and undone, I believe. രാഷ്ട്രീയ നേതാക്കൾ മാത്രമല്ല നേതാക്കൾ, സമൂഹത്തിൻ്റെ വിവിധങ്ങളായിട്ടുള്ള മേഖലകളിൽ ലീഡർഷിപ്പ് വഹിക്കുന്നവർ. എ സ്കൂൾ ടീച്ചർ ഈസ് എ ലീഡർ, എ പ്രിൻസിപ്പൽ ആൻഡ് ഹെഡ് മാസ്റ്റർ ഈസ് എ ലീഡർ, a lawyer is a leader, a social activist is also a leader. Even the Vittamma, the mother leading the house, the home, who is there in the kitchen, she is leader, very very important leader of the family. ഞാൻ അങ്ങനെയാണ്, this is the way I used to see the leadership. And you are very important leaders of the society. You think and you guide, you intervene in the social affairs. എനിക്ക് ആഗ്രഹിക്കാനുള്ളത്, നമ്മുടെ സാമ്പത്തിക ഘടനയുടെ രൂപീകരണത്തിലും അവിടെ ന്യായം സ്ഥാപിക്കുന്നതിലും നിങ്ങളുടെ റോള് ശക്തമായി നിങ്ങൾ നിർവഹിക്കണം എന്നാണ്. നയരൂപീകരണത്തിൽ വരെ സ്വാധീനിക്കാൻ നിങ്ങൾക്ക് സാധിക്കണം. You have to make your impact in the policy making related with economic affairs. That is my very important suggestion and proposal which I have to make in this very august assembly. You have to influence. You have to. നമുക്ക് പലപ്പോഴും സംഭവിക്കുന്ന ഒരു സംഗതി, ഇപ്പോൾ പാർലമെൻറ്റ് പല ബില്ലുകളും പാസ്സാക്കുന്നു. Many bills are passed. I sometimes think on this. It's a very unfortunate situation. പല ബില്ലുകളും പാസ്സാക്കുന്നു. അതൊരുപാട് ചർച്ചകൾ നടക്കുന്നുണ്ട്, ഞാൻ നിഷേധിക്കുന്നില്ല. പാർലമെൻറ്റിൽ ചർച്ച നടക്കും, സ്റ്റാൻഡിംഗ് കമ്മിറ്റിയിൽ പോയിട്ട് അവിടെ ചർച്ച നടക്കും. എന്നിട്ട് പോലും ആ ബില്ല് പാസ്സാക്കി വരുമ്പോൾ there will be many loopholes, many defects, many shortcomings, because the lack of direct experience with the reality of the situation. എനിക്കിത് പലപ്പോഴും തോന്നിയിട്ടുണ്ട്. ഞാനൊരു ചെറിയ ഉദാഹരണം പറയാം. ഈ മൃഗങ്ങൾ മനുഷ്യരെ വന്നിട്ട് ആക്രമിക്കുന്ന സ്ഥിതി കേരളത്തിലൊക്കെ വളരെ രൂക്ഷമാണ്. കേന്ദ്രം ബില്ല് പാസ്സാക്കിയിട്ടുണ്ട്. ആ ബില്ല് അടിമുടി തകരാറ് നിറഞ്ഞതാണ്. മനുഷ്യനെ കാണാത്ത ബില്ലാണ്. I was a member of this Parliamentary Standing Committee of Tourism and Environment and Forest. I tried my level best to convince on my own capacity that assembly, that committee, be with the people, try to learn their sentiments. ഒന്ന് ആലോചിച്ച് നോക്കൂ, നമ്മുടെ നാട്ടിൽ പന്നിക്കൂട്ടങ്ങൾ ഇറങ്ങി വന്നിട്ട് കൃഷി നശിപ്പിക്കുന്നു. മേലോട്ട് നോക്കിയിട്ട് കർഷകൻ കരയുന്നു. നമ്മൾ വലിയ ജനാധിപത്യത്തെക്കുറിച്ച് പറയുന്നു. ആകെ തകരുന്നു. അവനെ രക്ഷിക്കാൻ ഇപ്പോഴും നമ്മുടെ പ്രബുദ്ധമായ രാഷ്ട്രീയത്തിന് സാധിക്കാത്ത അവസ്ഥാവിശേഷം വരുന്നു. അതിൻ്റെ ഒക്കെ കാരണമായിട്ട് എനിക്ക് തോന്നുന്നത് ഓരോ രംഗത്തും പ്രവർത്തിക്കുന്നവരുടെ ഡയറക്റ്റ് എക്സ്പീരിയൻസ് ഇത്തരം നിയമനിർമ്മാണങ്ങളിൽ ഉപയോഗപ്പെടുത്താൻ കഴിയാതെ പോകുന്നത് കൊണ്ടാണ്. ഇപ്പം ടാക്സ്, ഒരുപാട് സാമ്പത്തിക കാര്യങ്ങൾ നിങ്ങൾക്കറിയുന്ന പോലെ ഒരു ജനപ്രതിനിധിക്ക് പോലും അറിയാൻ കഴിയണമെന്നില്ല. നിങ്ങൾ നേരിട്ട് അതിൽ ബന്ധപ്പെടുന്നവരാണ്, ഇടപഴകുന്നവരാണ്. യു ആർ ഇൻവോൾവ്ഡ് ഇൻ ദാറ്റ് പ്രോസസ്. യു ഹാവ് ഡയറക്റ്റ് ആക്സസ് with the business people, with the business community, with the traders, with even agriculturists, farmers. You know the problem. You know the crux of the problem. You know the sentiments. ഇത്തരം കാര്യങ്ങൾ നിങ്ങൾ പഠിച്ച് മനസ്സിലാക്കി, you have to make your efforts to influence the law making process of the country. എനിക്കതിലപ്പുറം ഇവിടെ ഒന്നും പറയാനില്ല. ഇത്തരമുള്ള വലിയ ദൗത്യമാണ് നിങ്ങൾ ഇന്ന് പ്രതീക്ഷിക്കുന്നത്. എന്തുകൊണ്ടാണ് ഓരോ ബില്ലും പിന്നെയും ഭേദഗതി ചെയ്യുന്നത്? പാർലമെൻറ്റ് പാസ്സാക്കി വരും, പിന്നെയും ഭേദഗതി ചെയ്യും. ഭേദഗതി ചെയ്യണം. കാരണം ജനങ്ങൾ, മനുഷ്യൻ, സമൂഹം, മാനവ സമൂഹം അവരുടെ പ്രശ്നങ്ങളെ മനസ്സിലാക്കാൻ സാധിക്കണം. ഒരുപാട് കാര്യങ്ങളുണ്ട്, ഞാൻ അതിലേക്കൊന്നും പ്രവേശിക്കുന്നില്ല. തെരുവുനായ എത്ര ആൾക്കാരെ കടിച്ചു കൊന്നു. ഞാനിങ്ങനെ ആലോചിക്കും, ഞാൻ വളരെ വേദനയോടെ ആലോചിക്കും. ഞാൻ ലോക്സഭയിൽ ഒരിക്കൽ പോയിട്ടൊരു കുട്ടിയെ, ആ കുട്ടിയുടെ വീട്ടിൻ്റെ മുമ്പിൽ നായ കടിച്ചു കൊന്നത് അവതരിപ്പിച്ച ആളാണ്. ഈ പറഞ്ഞു പോരുന്നു, നിയമം എതിരാണ്. നിയമം നായയുടെ കൂടെയാണ്. നിയമം മനുഷ്യനെ കാണാൻ കഴിയാത്ത ചിലരുടെ കൂടെയാണ്. നമ്മൾ പ്രബുദ്ധതയെക്കുറിച്ച് പറയുന്നു, നമ്മൾ പുരോഗതിയെക്കുറിച്ച് പറയുന്നു. നിയമങ്ങൾ ഉണ്ടാക്കുമ്പോൾ ഓരോ മേഖലയിലും ദുരിതമനുഭവിക്കുന്നവരെ കണ്ടറിയാതെ ഉണ്ടാക്കുന്ന നിയമങ്ങൾക്ക് നിലനിൽപ്പില്ല. ഇതിനൊക്കെ ഗാന്ധിയുടെ സമീപനമാണ് ശരി. ഗാന്ധിജി ഒരിക്കൽ പറഞ്ഞു, നിങ്ങൾ when you make a legislation, when you are involved in a legislating process, when you are making a law, please think of the most sorrowful person of the country who is in the low level. ഏറ്റവും ദുഃഖിക്കുന്നവൻ്റെ പ്രയാസം കണ്ടുകൊണ്ട് നിയമമുണ്ടാക്കണം എന്നാണ് ഗാന്ധിജി പറഞ്ഞത്. ഗാന്ധിജി വേറൊന്നും കൂടി പറഞ്ഞു, when you make a law, you have to see the last man in the queue. ഇത് ഗാന്ധിജിക്ക് മാത്രമേ പറയാൻ കഴിയുള്ളൂ. വേറെ ഒരു രാഷ്ട്രീയ നേതാവിൽ നിന്നും അങ്ങനെ പ്രതീക്ഷിക്കണ്ട. ഇറ്റ് ഈസ് ഗാന്ധിസ് ഹ്യൂമണിസം. It is Gandhi's compassion. It is Gandhi's ethical philosophy. It is Gandhi's commitment to humanity. In the final analysis and the final evaluation, what matters is only the commitment to humanity. So I expect I anticipate from a very learned assembly of this kind, your interventions, this kind of seminars, your wisdom, your experience, your matured experiences may be helping a lot for the formation of the economic system of our country and its protection. In simple words, I will try to say something and I will conclude my remarks, humble remarks, because you have to start your various sessions. That is with regard to tax. ഈ ടാക്സ് എന്ന് പറയുമ്പോൾ ഡെവലപ്മെൻറ്റുമായിട്ട് നേരിട്ട് ബന്ധപ്പെട്ട സംഗതിയാണ്. വാട്ട് റിയലി മാറ്റേഴ്സ് ഇസ് ഡെവലപ്മെൻറ്റ്. ടാക്സ് റേറ്റ് ഹാസ് എ ഡയറക്റ്റ് ആക്സസ് വിത്ത് റവന്യൂ, സ്റ്റേറ്റ് റവന്യൂ. ഇറ്റ് ഈസ് ഇൻ്റർലിങ്ക്ഡ്. You cannot separate tax rate from the state revenue. So that is, tax rates affect state revenue and economic incentives. ഒരു രാജ്യം, ഒരു ഗവൺമെൻറ്, അങ്ങനെയാണ് ഫിലോസഫേഴ്സൊക്കെ പറയുന്നത്, സാമ്പത്തിക ചിന്തകന്മാർ, എക്കണോമിക് ഫിലോസഫേഴ്സ് ഓർ പൊളിറ്റിക്കൽ ഫിലോസഫേഴ്സ്. ഒരു രാജ്യം വളർന്നു വരുമ്പോൾ വലിയ ടാക്സ് റേറ്റ് ഉണ്ടാവില്ല. സിവിലൈസേഷൻ ആൻഡ് നാഷൻ, അതിന് ചില നിയമങ്ങളുണ്ട്. ദർ ആർ സർട്ടൻ ലോസ് അബൈഡിങ്, ദർ ആർ സർട്ടൻ ലോസ് കൺട്രോളിങ് ദ പ്രോസസ് ഓഫ് സിവിലൈസേഷണൽ ഗ്രോത്ത്, കൾച്ചറൽ ഗ്രോത്ത്, പൊളിറ്റിക്കൽ ഗ്രോത്ത്, ബർത്ത്, ഗ്രോത്ത്, ഡീകേ, കൊളാപ്സ്. ഉത്ഭവം, വളർച്ച, തളർച്ച, തകർച്ച. ഈ ഒരു നിയമം ലോകത്തെല്ലായിടത്തും ഉണ്ട്. ആർക്കും അതിന് അതിലംഘിക്കാൻ കഴിയില്ല. ഇന്ന മാതിരി പോയാൽ ഇന്ന മാതിരി ആയിരിക്കും. പഞ്ചസാര കൂടുതൽ കഴിച്ചാൽ പ്രമേഹം വന്നിരിക്കും. ഇതുതന്നെയാണ് എക്കോണമിയിലും. എക്കണോമിക് സിസ്റ്റത്തിൽ ഇന്ന പോളിസി സ്വീകരിച്ചാൽ ഇന്ന റിസൾട്ട് ഉണ്ടാവും, ഇന്ന ഇമ്പാക്റ്റ് ഉണ്ടാവും. അതിൻ്റെ അടിസ്ഥാനത്തിലാണ് ചിന്തകന്മാരായിട്ടുള്ളവർ ഇതിനെ കണ്ടിട്ടുള്ളത്. അപ്പോൾ ഒരു രാജ്യത്തിൻ്റെ തുടക്കത്തിൽ കൃഷി വർദ്ധിക്കും, ട്രേഡ് വർദ്ധിക്കും. വെൻ എക്കണോമിക് ആക്ടിവിറ്റി ഫ്ലറിഷസ്, the total tax base grows massively. There is no doubt about that. When economic activity flourishes, there will be a massive growth of tax base. And അതേ സമയം ഒരു രാജ്യം തകരാൻ പോകുമ്പോഴോ, തകരാന്ന് പറഞ്ഞാൽ ഒരു രാജ്യത്തിൻ്റെ തകർച്ച ഒരുപാട് കാര്യങ്ങളായിട്ട് ബന്ധപ്പെട്ടതാണ്. ഒരു രാജ്യത്തിൻ്റെ എക്കോണമി തകരുന്നത് എങ്ങനെയെന്ന് നമ്മൾ ശരിക്കും മനസ്സിലാക്കണം. അതൊക്കെ നന്നായി മനസ്സിലാക്കിയവരായിരിക്കും ഇവിടെ. അതിൻ്റെ മുഖ്യ കാരണം ലക്ഷറിയാണ്. അത് സാധാരണക്കാർക്കുള്ളതല്ല. സമൂഹത്തിലെ ദി അഫ്ലുവൻ്റ് സെക്ഷൻ, ദ ക്രീമി ലെയർ ഓഫ് ദി സൊസൈറ്റി, ദയർ ലക്ഷറി വിൽ സ്പോയിൽ ദി എക്കണോമിക് ഗ്രോത്ത് ഓഫ് ദി സ്റ്റേറ്റ്. അത് യാതൊരു സംശയമില്ലാത്ത കാര്യമാണ്. I quote from a great political philosopher of 14th century. Quote, "It should be known that at the beginning of the governance, taxation yields a large revenue from small assessments." 14ാം നൂറ്റാണ്ടിൽ ഫിലോസഫറാണ് ഈ പറയുന്നത്. At the end of the governance, taxation yields a small revenue from large assessments. ഇതാണ് പലപ്പോഴും നടക്കുന്നൊരു സംഗതി. നമ്മുടെ രാജ്യത്തേക്ക് വരുമ്പോൾ ഇന്ത്യയിൽ ലാഫർ കർവ് ഈസ് വെരി ഇമ്പോർട്ടൻറ്റ് പ്രിൻസിപ്പിൾ. യു നോ ദാറ്റ് ദ ലാഫർ കർവ്. ഈ ലാഫർ കർവ് ടാക്സേഷനിൽ വളരെ പ്രധാനപ്പെട്ട ഒരു തത്വമാണ്. India's modern tax policy explicitly wrestles with this practice, with this Laffer's curve. Historically, 1970s, in 1970s, India experienced an extreme phase of high taxation in 70s. Tax bracket peaking at an unsustainable 97.75%. Predictably, this did not result in massive state wealth, and it fueled a massive parallel economy. ടാക്സ് റേറ്റ് കൂടുമ്പോൾ സമാന്തര സാമ്പത്തിക ഘടന വരും, ബ്ലാക്ക് മണിയൊക്കെ വരാൻ തുടങ്ങും. അതാണ് ഈ പാരലൽ എന്ന് പറയുന്നത്. അതുകൊണ്ട് ടാക്സിനെ നേരെ ലെവലിൽ ബാലൻസ്ഡ് ആയിട്ട് നിർത്തുക എന്നുള്ളത് എക്കോണമിക്ക് മാത്രമല്ല രാജ്യത്തിൻ്റെ സുരക്ഷിതത്വത്തിനും വളരെ ആവശ്യമാണ്. പിന്നെ ലോക അവസ്ഥ മെച്ചപ്പെട്ടാൽ മാത്രമേ ഏത് എക്കോണമിയും മെച്ചപ്പെടൂ. ഇപ്പം നമ്മുടെ നാട്ടിലെ എണ്ണയ്ക്ക് വില കൂടിക്കൊണ്ടിരിക്കുന്നു, ഹോട്ടൽ പൂട്ടിക്കൊണ്ടിരിക്കുന്നു, ചെറിയ മുറുക്കാൻ കടകൾ പൂട്ടിക്കൊണ്ടിരിക്കുന്നു. ഞാൻ ഈ യുദ്ധം തുടങ്ങുന്ന സമയത്ത് ലോക്സഭയിൽ ഈ വിഷയം അവതരിപ്പിച്ചതാണ്. ഈ ഹോർമൂസ് കടലിടുക്ക് അടച്ചപ്പോൾ അവിടെ നിന്നാണ് ഇത് തുടങ്ങുന്നത്, മാസങ്ങൾക്ക് മുമ്പ്. അപ്പോൾ വേറെ സ്ഥലത്തുനിന്ന് എണ്ണ വാങ്ങാനുള്ള അതല്ലാത്ത സ്ഥലങ്ങൾ നടപടി സ്വീകരിക്കണം എന്നാണ് ഞാൻ ലോക്സഭയിൽ ആവശ്യപ്പെട്ടത്. ഞാൻ പറഞ്ഞുകൊണ്ട് വരുന്നത്, ആ ഒരു എണ്ണ എവിടെയൊക്കെ ബാധിച്ചു, ഈ കോഴിക്കോട്ടെ റോഡ് വക്കത്തെ പാവപ്പെട്ട മുറുക്കാൻകടക്കാരൻ്റെ വരെ കടയെ അത് ബാധിച്ചു. ഓയിൽ ഇറ്റ് അഫക്ട്സ്. അപ്പോൾ ലോകത്ത് സംഘർഷമുണ്ടായിരിക്കുന്നിടത്തോളം കാലം, പ്രത്യേകിച്ച് ആഫ്റ്റർ ഗ്ലോബലൈസേഷൻ, there is nothing like a separation. It is a global world. It is a global village. Whatever happens there will have its impact here. Whatever happens here, it will have its impact there. അതുകൊണ്ടൊരു സംഘർഷമില്ലാത്ത ലോകത്ത് മാത്രമേ സാമ്പത്തിക സുരക്ഷിതത്വവും സാമ്പത്തിക നീതിയും സ്ഥാപിക്കാനായിട്ട് സാധിക്കുകയുള്ളൂ. ഈ ടാക്സ് വർദ്ധിപ്പിക്കുന്ന പ്രധാനപ്പെട്ട ഒരു ഘടകം ഞാൻ പറഞ്ഞു ലക്ഷറിയാണ്. മറ്റൊന്ന് മിലിറ്ററി എക്സ്പെൻഡിച്ചറാണ്, സൈനിക ചെലവ് കൂടേണ്ടി വരുന്നത് എപ്പോഴാണ്? ധാരാളമായിട്ട് യുദ്ധവും സംഘർഷങ്ങളും വർദ്ധിക്കുമ്പോഴാണ്. അതുകൊണ്ട് ഞാൻ ദീർഘമായിട്ട് സംസാരിക്കുന്നില്ല. അതുകൊണ്ട് ബ്രെഡ്ത്ത് ഓഫ് എക്കണോമിക് പാർട്ടിസിപ്പേഷൻ ഈസ് വാസ്റ്റ് ആൻഡ് ദി ബേർഡൻ ഓഫ് ഈച്ച് ഇൻഡിവിജ്വൽ ഈസ് ലൈറ്റ്. അങ്ങനെ ആക്കി തീർക്കണം ടാക്സ്. ബ്രെഡ്ത്ത് ഓഫ് എക്കണോമിക് പാർട്ടിസിപ്പേഷൻ ഈസ് വാസ്റ്റ് ആൻഡ് ദി ബേർഡൻ ഓഫ് ഈച്ച് ഇൻഡിവിജ്വൽ ബേർഡൻ ഈസ് ലൈറ്റ്. വ്യക്തിയുടെ ഭാരം കുറക്കണം, അതാണ് ഡെമോക്രസി. ഇൻഡിവിജ്വലിൻ്റെ ഭാരം കുറക്കണം. ഡയറക്റ്റ് ടാക്സ് ബേർഡൻ കുറച്ച് കൊണ്ടുവരണം. അതുകൊണ്ട് ടാക്സേഷൻ ബിക്കംസ് ഡിസ്ട്രക്റ്റീവ് നോട്ട് ജസ്റ്റ് ത്രൂ ദി റോ പെർസെൻറ്റേജ് ടേക്കൺ ബട്ട് ത്രൂ ദ കോംപ്ലക്സിറ്റി ആൻഡ് ഫ്രിക്ഷൻ ഓഫ് കളക്ഷൻ. ഇനിയിപ്പോൾ ഞാൻ എൻ്റെ വാക്കുകൾ ചുരുക്കുകയാണ്. ഇനിയിപ്പോൾ നിങ്ങൾ എല്ലാ രംഗത്തും, എൻ്റെ ബഹുമാനപ്പെട്ട CA സുഹൃത്തുക്കൾ മാത്രമല്ല, എല്ലാ രംഗത്തും ഇനി അനുഭവിക്കാൻ പോകുന്ന മറ്റൊരു വളരെ വലിയ പ്രതിസന്ധി എന്ന് പറയുന്നത്, ഞാനതിനെ പ്രതിസന്ധിയായിട്ട് തന്നെയാണ് കാണുന്നത്. അതിനെ പ്രതിസന്ധി എന്ന് പറയുമ്പോൾ എല്ലാവരും അംഗീകരിച്ചെന്ന് വരില്ല, അത് ആർട്ടിഫിഷ്യൽ ഇൻ്റലിജൻസ് ആണ്. ഇറ്റ് വിൽ ബിക്കം എ ക്രൈസിസ്. I don't know whether everybody will be agreeing with this kind of an argument, with this kind of a view. There will be various divergent views which we welcome, which we admit, but still, I believe personally, this will lead to a great crisis, and that crisis will not be economic crisis, it will not be financial crisis, it will be human crisis. ഹ്യൂമൻ ക്രൈസിസ്. ഇപ്പോൾ ഫേസ്, നേരത്തെ ദീപ പറഞ്ഞില്ലേ എന്തായിരുന്നു ഫേസ്, എല്ലാം യന്ത്രങ്ങൾക്ക് വിട്ടുകൊടുത്ത് ഈ AI, ആരാ ജ്യോതിയാണോ പറഞ്ഞ, ആരാ നിനക്കറിഞ്ഞു? ജ്യോതി ആയിരിക്കും പറഞ്ഞു. നിങ്ങളെ ഫേസ്ലെസ് അസസ്മെൻറ്റ്. ഇത് സത്യത്തിൽ അനുഭവിക്കാൻ പോകുന്ന വലിയൊരു തകരാറാണ്. ഇതുകൊണ്ട് ജോലി നഷ്ടപ്പെടും എന്നൊന്നും ഞാൻ വിശ്വസിക്കുന്നില്ല. AI വരുന്നതോടുകൂടി കുറേ ആളുകൾക്ക് ജോലി നഷ്ടപ്പെടുമെന്നൊരു വലിയ വാദഗതി ഉണ്ട്. അതിനെ പൂർണ്ണമായി നിഷേധിച്ചുകൂടെങ്കിലും അങ്ങനെ ആകണമെന്നില്ല. പക്ഷേ ഇത് സൃഷ്ടിക്കുന്ന റെപ്പർക്കഷൻസ്, കോൺസിക്വൻസസ് വിൽ ബി വെരി ഡീപ്പ്, ഫാർ റീച്ചിങ് ആൻഡ് സംടൈംസ് വെരി ഗ്രേവ് കോൺസിക്വൻസസ്. ബിക്കോസ് man's cognitive capacity, കാര്യങ്ങൾ ധരിക്കാനുള്ള മനസ്സിലാക്കാനുള്ള മനുഷ്യൻ്റെ ധാരണാശക്തിയെ ഇല്ലാതാക്കുക എന്നുള്ളതാണ് ഈ ആർട്ടിഫിഷ്യൽ ഇൻ്റലിജൻസിൻ്റെ പരിപാടി. നിങ്ങൾക്ക് തലച്ചോറ് വേണ്ട, നിങ്ങൾക്ക് ബുദ്ധി വേണ്ട. അപ്പം തന്നെ ഈ കുട്ടികളൊക്കെ തുടങ്ങിയില്ലേ, സ്കൂളിലും കോളേജിലും പഠിക്കുന്ന കുട്ടികൾക്കൊരു എന്തെങ്കിലും ഒരു കാര്യം ചെയ്യണമെങ്കിൽ, എന്തെങ്കിലും ഒന്ന് പഠിക്കണമെങ്കിൽ നേരെ AI ചോദിക്കും, അവിടുന്ന് ഒരു ആൻസർ കിട്ടും. അത് ഡീപ്പായിട്ട് ശരിയാവണമെന്നില്ല, അത് വിസ്ഡം ഓറിയൻറ്റഡ് ആവണമെന്നില്ല. എവിടെയൊക്കെയോ കിടക്കുന്ന ചെതറിക്കിടക്കുന്ന ഇൻഫർമേഷനാണ് ഈ പാത്രത്തിലാക്കി തരുന്നതെന്ന് മനസ്സിലാക്കിയാൽ നന്നായിരുന്നു. എവിടെയൊക്കെയോ സ്കാറ്റേഡായി കിടക്കുന്ന ഇൻഫർമേഷൻസ് അതാണ് ഈ തരുന്നത്, നമുക്ക് തരുന്നത്. നമ്മളൊരിക്കലും ഇൻഡെപ്ത് പോയിട്ട് പഠിച്ച് മനസ്സിലാക്കുന്ന ജ്ഞാനം ന ജ്ഞാനേനൈവ കൈവല്യപ്രാപ്തി. ദർ ഇസ് എ ശ്ലോക, ന ജ്ഞാനേനൈവ കൈവല്യപ്രാപ്തി. ഇറ്റ് ഈസ് ഓൺലി ത്രൂ വിസ്ഡം ആൻഡ് ജ്ഞാന യു വിൽ ഹാവ് ലിബറേഷൻ. കൈവല്യം, അറിവിലൂടെ മാത്രമേ മോചനമുള്ളൂ. ആ അറിവ്, ഗ്നോസിസ്, അതൊരിക്കലും AI ലഭിക്കില്ല. AI ഒരു കൃത്രിമമായിട്ടുള്ള താൽക്കാലികമായിട്ടുള്ള അറേഞ്ച്മെൻ്റാണ്. മനുഷ്യൻ്റെ കഴിവുകളെ ചോർത്തിയെടുത്ത്, വികാരങ്ങൾ അതിനില്ല എന്നുള്ളത് പോട്ടെ, അവൻ്റെ മസ്തിഷ്കം ചോർത്തിയെടുത്ത്, അവൻ്റെ ഹൃദയശേഷിയെ ചോർത്തിയെടുത്ത്, ഇത് എല്ലാ രംഗത്തും വലിയ ക്രൈസിസ് സൃഷ്ടിക്കും. മനുഷ്യനെ കാണാതെ ഫേസ്ലെസ്, ആ വാക്ക് തന്നെ ആലോചിച്ച് നോക്കിയാൽ മലയാളത്തിൽ പറയുകയാണെങ്കിൽ മുഖരഹിതൻ, മുഖമില്ലാതാക്കുക, നമ്മളെ മുഖമില്ലാതാക്കുക. നമ്മളെ മുഖമാണ് നമ്മുടെ ഐഡൻറ്റിറ്റി, നമ്മുടെ മുഖമാണ് നമ്മുടെ ഐഡൻറ്റിറ്റി. ഇങ്ങനെയുള്ള വെല്ലുവിളികളുടെ മധ്യത്തിൽ പുതിയ ഒരു സംസ്കാരത്തെക്കുറിച്ച് അന്വേഷിക്കേണ്ടി വരും, പുതിയ വിജ്ഞാനത്തെ തേടേണ്ടി വരും. അതിനെ ഇല്ലാതാക്കാനൊന്നും കഴിയില്ല, AI ഒക്കെ വന്നുകൊണ്ടേയിരിക്കും. പക്ഷെ അതിൻ്റെ അപ്പുറത്തെ ഒരു എത്തിക്സ് വിൽ ഹാവ് ടു ബിൽഡ് എ ന്യൂ എത്തിക്സ്, എ ന്യൂ എത്തിക്കൽ ഫിലോസഫി, എ ന്യൂ എത്തിക്കൽ അപ്രോച്ച് ഫോർ ദി സർവൈവൽ ഓഫ് ഹ്യൂമാനിറ്റി. എൻ്റെ വാക്കുകൾ ദീർഘിപ്പിക്കുന്നില്ല, ഞാൻ നീട്ടി പറഞ്ഞു പോയോ എന്ന് എനിക്കറിയില്ല. വളരെ സുന്ദരമായിട്ടുള്ള ഈ സന്ദർഭത്തിൽ ഇവിടെ വരാനും നിങ്ങളെയൊക്കെ കാണാനും നിങ്ങളുടെ ഇടയിൽ ഈ വിലപ്പെട്ട സമയം ചെലവഴിക്കാനും എനിക്ക് ലഭിച്ച ഈ സുവർണാവസരത്തിൽ ചാരിതാർത്ഥ്യം രേഖപ്പെടുത്തിക്കൊണ്ട് ഇത്രയും പ്രധാനപ്പെട്ട ഒരു സഭയിൽ വന്നത് എനിക്കെൻ്റെ ജീവിതത്തിലെ വളരെ പ്രധാനപ്പെട്ട ഒരു അനുഭവമാണ്. യു ആർ വെരി ലേണഡ്, വെരി എക്സ്പീരിയൻസ്ഡ്, യു ഹാവ് മെനി ഐഡിയാസ്. ഐ അഗെയിൻ റിപ്പീറ്റ്, യുവർ ഐഡിയാസ്, യുവർ കൺസെപ്ഷൻസ്, your views, you have to inculcate in such a level by which you have to be able to influence, to make impact on the policy making process of the nation. നമ്മുടെ രാജ്യം വളരെ വലിയ പുരോഗതിയിലേക്ക് പോവാണ്. And India is not only a great country, but it is a great civilization. It has a great future. And you have a major role to play in the upbuilding of that, in that great future. നമ്മുടെ രാജ്യത്തിൻ്റെ ഭാവി കെട്ടിപ്പടുക്കുന്നതിൽ വളരെ പ്രധാനപ്പെട്ട പങ്ക് വഹിക്കുന്ന സാമ്പത്തികം എത്ര പ്രധാനമാണോ, സാമ്പത്തിക പ്രക്രിയ എത്ര പ്രധാനമാണോ, അത്ര പ്രധാനമാണ് നിങ്ങൾ ഓരോരുത്തരുടെയും ദൗത്യം. നിങ്ങളുടെ ജോലി എന്ന് ഞാനതിനെ വിളിക്കില്ല, ജോലിക്കപ്പുറത്തുള്ള നിങ്ങളുടെ മിഷൻ, നിങ്ങളുടെ ദൗത്യം. ആ ദൗത്യത്തെ അഭിവാദ്യം ചെയ്തുകൊണ്ട്, നിങ്ങളുടെ ക്ഷണത്തെ ഏറെ വിലമതിക്കുന്നു എന്ന് നിങ്ങളെ അറിയിച്ചുകൊണ്ട്, നിങ്ങളുടെ നേരിട്ടുള്ള അനുഭവങ്ങൾ ഈ രംഗത്തുള്ള പ്രശ്നങ്ങളെ പരിഹരിക്കുന്നതിന് സഹായകരമാകട്ടെ എന്ന് ആശംസിച്ചുകൊണ്ട്, നിങ്ങളുടെ എല്ലാവരുടെയും സമ്മതത്തോടെ, with the permission of our honorable guests who are present here, അവരുടെ എല്ലാവരുടെയും സമ്മതത്തോടെ ഇതിൻ്റെ ഉദ്ഘാടനം നിർവഹിച്ചതായി അറിയിച്ചുകൊണ്ട് എൻ്റെ എളിയ വാക്കുകൾ ഉപസംഹരിക്കുന്നു. നമസ്കാരം, അഭിവാദ്യങ്ങൾ.
Thank you, sir, for those inspiring thoughts and for formally inaugurating this conference. May I request the chairperson, Jyoti ma'am, to adorn the chief guest with a ponnada and give him a memento as a token of our respect. Thank you, everyone. The Income Tax Act 2025 represents an important milestone in the continuing evolution of India's direct tax framework. To share the professional perspective, we have with us a leader who has been closely associated with the profession's engagement with the new legislation. CA Chandrasekhar Vasant Chittale is chairman of the Direct Taxes Committee of ICAI and a member of the Central Council of ICAI. Sir, your precious words.
Yeah. Good afternoon. Honorable Chief Guest for this seminar on direct taxes, Dr. A.P. Abdul Samad Samdani ji, Member of Parliament. मैं आपको तहे दिल से स्वागत करता हूँ. We the chartered accountants, the knowledge is only capital for us on which we thrive. And you are the reservoir of knowledge, knowing so many languages, also knowing law, having doctorate, teaching the students and upbringing them. So I compliment the branch team for inviting you as a chief guest, and I'm sure with your words of wisdom, definitely all the audience is benefited and will carry it for our, as a reservoir for our future. Honorable Chairman, Honorable Chairperson Jyoti, my colleague in Managing Council, CA Jay Chaira, the other Managing Committee team, Chandrasekhar is generally intelligent, I know. Vinod, and the treasurer, and ladies and gentlepersons who are present here. Sir, as far as the Institute of Chartered Accountants is concerned, you would be aware that it is not an association of professionals, but it is created under an act of parliament. And even before the constitution was adopted in 1950, in 1949, the Chartered Accountants Act was passed, and we are working under the Ministry of Finance, corporate laws. So, पहले जो प्रेसिडेंट हो चुके हैं अपने इंडिया के, उन्होंने कहा है कि the chartered accountants are partners in national big deal. Abdul Kalam साहब ने बताया है, and accordingly we are functioning on that particular path. And when we were created in 1949, we started with 1700 membership, and today our membership crosses 5 lakh. So we are the world's largest institute as far as the profession is concerned. और ये सिर्फ numbers के बारे में नहीं है, it is also in the matter of professional contribution across the world. In fact, we organized 3 years ago World Congress of Accountants, which was awarded to India after 100 years. At that particular time, the president and team of Institute of Chartered Accountants of Singapore was present. For earlier 10 years, we were trying to have memorandum of understanding with them, but that was not happening. And when they saw the organization of WOFA, our office at BKC Mumbai, that WOFA happened in December, and in next February, we received a letter from the Institute of Chartered Accountants Singapore कि अगर कोई चार्टर्ड अकाउंटेंट जो ICAI का पास हुआ है फाइनल एग्जाम, वो अगर 6 महीने सिंगापुर में रहता है, तो he will be considered equivalent to the chartered accountant in Singapore. And again, that was unilateral. उन्होंने ये नहीं कहा कि if their chartered accountant come here, treat him equivalent. So we have been honored, we have been recognized. तो जो न देते थे हमारे खत का जवाब उनके सलाम आने लगे, जो न देते थे खत का जवाब उनके सलाम आने लगे, मेरे नीम के पेड़ पर आम आने लगे. That's what our president said. As far as the chartered accountants are concerned, they are indulging into accountancy, audits, and several other feats. I had a brief discussion with the local members from Ernakulam. So there are two aspects where your contribution would be solicited. One is about the audit of cooperative societies, which is state subject, और उनके accounting के बारे में. It needs to be stepped up. Some committee can be set up. Maybe the representative of the government, representative of cooperative societies, and that of the Institute of Chartered Accountants, so that yet 3% can come together and they can give upliftment to these particular issues which are there in cooperative society, maybe accounting, auditing, accounting standards we have made. If they are made mandatory, many of the shortcomings would be coming to fore. And secondly, as far as this local self-government is concerned, it is world over recognized that whenever accounts are maintained on double entry system, the loopholes get lost and assets, liabilities, income, expenses are known on a transparent basis. So across India now this double entry system is being embraced. So state of Kerala also, a forerunner educational background. So here also I am told that these initiatives are there, but they are not really taken concrete shape. So अगर आपके leadership में our representatives will meet you, for local self-governments, if this conversion of double entry system and their audit is announced, I think that would be a great contribution to the stakeholders. In case of other states, in some states I was there, tender was issued for the purpose of the entire state to convert into double entry system. But we would recommend that if tender is issued per tahsil, per gram panchayat, then maybe local members can participate. Otherwise, firms from big cities will come and they will do. Maybe they will not be knowing vernacular language. So if a local chartered accountant gets this particular assignment, maybe he would be doing it because he is the native as far as that gram panchayat or that local self-government is concerned. He will be able to render better services, and even after the assignment ends, and there are some issues with the management, they can also consult him and he would certainly be doing justice to that. So sometime appropriately, maybe the region, the branch can take sir's appointment and take these two aspects forward. Maybe if there are any other issues, that also we can discuss. As far as these direct taxes are concerned, as we are aware that from 1st April 2026, the new law has come into force, Income Tax Act 2025. Now there can be debate whether there should have been new law or should not have been. Because as far as government's any initiative is concerned, it follows certain demand. Nobody demanded that there should be a simple law. I had occasion to appear before the earlier committee which proposed this direct tax code. And at that time it was pointed out that at that time the population was some 120 crore and taxpayers were 6 crore. So as far as income tax law is concerned, only 5% are the takers. Out of that, for 5 crore 50 lakhs, salary and house property and ATC is the only income tax law. They understand it. And for the balance 50 lakhs, chartered accountants and consultants are sufficient. And secondly, the law is simple, but the anxiety of the people makes it them complicate because everybody wants to save taxes. And that I explained only with the definition of transfer in clause 47 of section 2. You are aware that transfer means simple sale, exchange. So that was the definition, but then there was conversion of capital asset into stock in trade. There was escapement of capital gain confirmed by Supreme Court. The law got changed. In case of immovable property, if conveyance is executed, then the transfer takes place. So people were not executing conveyance. Agreement for sale was made, possession was given, and maybe for 10-15 years, conveyance was not executed. So that was again brought into the definition. Like 53A of Transfer of Properties Act, the agreement for sale with possession. Thereafter, people started not executing agreement for sale, giving only power of attorney, and again defeated the definition of transfer. Then again the law was amended, and it became the enabling of enjoyment. So whenever the law is there, there is an anxiety with the taxpayer to save taxes by finding the loopholes. And on the other hand, as far as the tax gatherers are concerned, they are looking at those tax planning aspects and then making several changes. And maybe today we have this particular piece of legislation as is informed that it is simple, but then maybe after 4 or 5 years it is going to be the same complicated, because when in August it was passed, we were told that there are only numeric sections, but before the law took its birth, already there is one alphanumeric section, 2 sections were omitted, several amendments are made. So there is always going to be a tug of war between the tax consultants, taxpayers on one hand, and the tax gatherers on the other hand. Yes. So only one I will say, as far as tax gatherers are concerned, yes. अभी tax consultant में also should think that आपको करीम चाचा की आपको जो कैब बेचता था, तो वो जंगल में सोया, उसके कैप्स बंदर लेके गए और उसने कैप नीचे डाला, सबने नीचे डाला. तो अभी ये करीम चाचा का युग नहीं है, अभी उसके ग्रैंड सन्स आ गए हैं. तो ग्रैंड सन भी जाने वाला था जंगल से, जंगल कम था मगर उसने बोला बेटा सोना मत, सीधा चला जाना. फिर भी वो ग्रैंडसन है, वो अगर उसके दादाजी का सुनेगा तो थोड़ी वो ग्रैंडसन कहलाएगा. तो वो भी सो गया, उसके भी कैप्स चुरा लिए. तो उसको पता था कि दादाजी ने बोला कि कैप डालने का, नीचे फेंक देने का, तो ऑटोमेटिकली मंकी भी नीचे भेज देंगे. तो उसने देखा उसके भी कैप्स चुरा है, नीचे डाल दिया, कुछ नहीं हुआ. फिर 2-3 बार डाला, कुछ भी नहीं हुआ. फिर एक बंदर ने कहा कि भैया हमारे भी ग्रैंडफादर है. तो whenever you think of any tax planning, I think the other side also is equally intelligent and we have to mind it. जी. Thank you. Yeah.
बहुत धन्यवाद. Thank you. Okay, sir. Meet at another occasion.
Yes.
Okay, thank you. Namaskaram.
Let him get it, then we will. अभी टी ब्रेक है क्या? टी ब्रेक है? तो फिर लेके आओ ना, ये क्या बोलते हैं? नहीं अभी नहीं, सेशन तो भी इसके बाद है, तो लंच ब्रेक के बाद है सेशन. फिर ठीक है, फिर नहीं मेरा लैपटॉप लाना पड़ेगा. So friends, there is session after lunch where I will be talking, so I rest my words here and I thank you for joining this particular seminar. Thank you.
Thank you. Thank you, sir. May I request CA Vinodan, Vice Chairman, Kozhikode branch, to adorn our guest of honor, CA Chandrasekhar Vasant Chittale, with a Ponnada. Thank you, sir. Ladies and gentlemen, it is now my privilege to introduce and invite CA Jay Chhera, Central Council member of ICAI, a distinguished professional leader with an extraordinary academic and professional journey. CA Jay Chhera has served the profession in numerous capacities and continues to inspire members across the country through his leadership and vision. May I request CA Jay Chhera to kindly address the gathering.
A very good afternoon to all of you. the dynamic chairperson of Kozhikode branch, CA Al-Buda Jyoti M, my colleague in the council, very knowledgeable chairman of Direct Tax Committee CA, Chandrasekhar Chitle sir, my good friend, regional council member from Kerala, CA Deepa Varghese, and CA Vinod N, CA Ravi Chandrasekhar. Chandrasekhar Chitle sir very rightly said that Chandrasekhar people are very intelligent. Galaxy of past chairmen who actually don't look like past chairmen. Here people are very young. Many people would introduce, I am the past chairman, and you look at them, they don't look like past chairman at all. So that's a compliment to all of you. And all my dear colleagues. First of all, let me compliment the branch for organizing this wonderful program and giving me an opportunity to be with you. I must be thankful to them. Well, I already have my session, so I'll not be taking time here. I'll only, in absentia, thank Babu Abram Kalivallil for providing this opportunity. He called me. Generally, when Babu Abram calls any of us and says, you have to do this, we do that. Fortunately, I joined council along with him, and I must thank you for providing such a wonderful friend and such a sincere council member from Kerala. Friends, I have seen that Babu Abram Kalivallil, as such, is a very gentleman. As such, very gentle. Always very soft-spoken in the council. But when it comes to the issues related to Kerala branch, Deepa, what happens I don't understand. He becomes very fierce. The same happened with Arnakulam land. Chitle sir knows, I know very well. Right? I am from Surat, he is from Pune. How both these cities faced so many challenges for infrastructure. But thanks to Babu Bhai, we could get infrastructure across various branches in Kerala and even Kozhikode this year. He had told me, and sir, well in advance, that somehow we have to get it passed through the council. I want this branch to have the premises. So I think it would be appropriate for me to remember him at this point of time. And I have a very beautiful topic, scaling up the practice. Right? While technical skills, we chartered accountant possess in terms of taxation, in terms of audit and all, but somehow what the member of parliament, he talked about is leadership. He talks about the global vision and like that. I think some few aspects we have to improve upon, and I'm sure we can scale up our practice to the best extent. So I'll be coming back to you when my session is there. Thank you very much.
Thank you, sir, for that energetic address. May I invite CA Ravi Chandrasekhar, Secretary, Kozhikode branch, to adorn CA Jay Chera with a Ponnada. Thank you, sirs. Ladies and gentlemen, it is now my privilege to introduce and invite CA Deepa Varghese. No introductions necessary. May I invite CA Deepa Varghese to address the gathering.
Thank you so much. I said no introduction because I'm from Kerala. I'm sure all of you know me, and that is enough. I'm CA Deepa Varghese, Treasurer SARC right now. Most respected Central Council members, Chitale sir, Jaychera sir, my dear friend Albuda Jodi, and other dignitaries on the dais, galaxy of ladies, senior past chairman, senior members, ladies and gentlemen. I was just thinking of what Jaychera sir was saying about Babu sir being very passionate about Kerala. Trust me, sir, every one of us is. You talk about any branch, every one of us is extremely passionate, which is why you see so many past chairmen here. They had come to say thanks to Babu sir and other Central Council members who have come here in helping them and buy the land. And yes, any branch in Kerala, if you have a problem, the first thing the chairman would do is to call the past chairman. And every one of the past chairmen will come, sit together, decide what is to be done, and will advise the chairman. Chairman will just act on it, and things get resolved very quickly here. I Like I said, I'm in SARC now, and I'm blessed to be the ex officio member of 9 branches of Kerala. The branch which I love the most when I come here is Calicut. And this is not, I'm not saying this because I'm in Calicut, I say this wherever I go. Because Calicut branch, the love and affection when they call, when they invite you for a program, what they give you when you reach here, you feel like you are one of them. Even though I have been interacting only after times of Mujib. When Mujib was a chairman here, I was a chairman in Ernakulam. So that is when I actually started interacting with the members in Calicut branch. But the kind of love and affection which you feel is really great, and so it makes you keep wanting to come back again and again. I just came back from a long travel and I was really tired, but you know how Jyoti is. If she says you have to come, you have to come. Just like when Babu sir says something, Chera sir said they do. If Jyoti says something, every chairman in Kerala will do, and it's that simple as that. I would also like to take this opportunity to congratulate Jyoti and her entire team in organizing this wonderful this conference. When GST came in 2017, we were all wondering how it is going to get implemented. But who burnt the midnight oil? Who toiled? Who shouted? Who got tensed? Who got heart attacks? It was only us. As so long as the business people gave you whatever information, little information they had, their duty was over. Government just wanted the money and the data. It was us who took the pressure. And today, once again, we are here to take the pressure of learning direct access from scratch. Without forgetting, everybody says unlearn and relearn. I'll say please don't forget, because 1961 is there, litigations are going on, assessments are going to come, so we cannot unlearn 1961 completely. But we have to learn a new thing, and remember this is 2025 Act and not the 1961 Act. So I congratulate Jyoti Madam and her team for organizing this, and for all of you for attending this. It's going to be 2 days of wonderful learning. And I would like to introduce a young member here. He's not so young, but then young member, Ajit Shivdas. I met him through a committee which was formed to give a feedback on, and meeting the parliamentary committee and give a feedback on the draft income tax 2025. The way this youngster came prepared, there were very seniors also, but who were not so prepared. I'll be very honest about it. This is family here now. But they were not so prepared, but of course their experience and knowledge spoke. But this gentleman came so well prepared. So when Jyoti called me and asked me for a faculty, I said, just call Palakkad Ajit Shivadas, tell him I gave his name, he will come. And here he is, and you will, I'm sure at least 5 of you will call me and tell me, yes, Deepa, Ajit was wonderful. So wish you all the very best for Ajit's session and all the others who are going to speak to you in the next 2 days. I'm sure Bhanushekar sir has already given you a feast. And my goodness, when I was the secretary of Ernakulam branch, it was COVID time, so we had an online session. I've heard a lot of people talk just like that about general topics, poetry, but not income tax. Sir took an online session. He just sat on a chair, crossed his leg like this, and you know the tall frame. So he crossed his leg like that, and he was sitting there in all his grandeur and talking income tax like it was some 1 to 10, 100 that he was teaching us to count. What a fantastic delivery, and I'm sure you have experienced that today also. So happy learning to each and every one of you today and tomorrow. Now, 2 words about SARC. First one, if any one of you would like to present a paper or write an article and publish it in the SARC newsletter, please come forward and give the details to me. You can give me your article along with your profile, and I will ensure that it comes out in the magazine. Now, when one of us are there, only then can we promote our own brethren. Especially a request to the young members here, please use this opportunity and do right. And the second thing about SARC, the SARC conference this year is going to be held at Guntur on 7th and 8th of August. We have organized a wonderful list of speakers and an amazing program. There will be temple visits also and other activities. And for the ladies, Mangalgiri saris come from there. So we welcome each and every one of you. if you, there is group, the registrations have already started and there is group registration possible. You will still get your input on GST. So if you have any problem in joining and registering and all that, please be in touch with me or in Jyoti. She will contact me and we'll get it organized. But please come in large numbers and enjoy the conference as well as the venue. Thank you so much for having me here. Once again, wishing all of you a happy 2 days of learning. Thank you.
Thank you so much, ma'am. May I request CA PA Thangachan, Treasurer Kozhikode Branch, to adorn CA Deepa Varghese with a ponada. Thank you, sir. Thank you, ma'am. Ladies and gentlemen, we also have a pleasure and a privilege, that of the unveiling of the Satsang logo. Satsang is the longest running annual student mega conference in Kerala, which we have been privileged to host. We have members of the SICASA here, and we request CA Chandrasekhar Vasant Chittale, Chairman Direct Access Committee, and CA Jay Chair as CCM, to unveil the Satsang logo for 2026. Thank you all. Satsang will be held on July 17th and 18th. May I request Mr. Sabu MR, AGM SME, who represents State Bank of India, who is our main sponsor for today, to address the gathering.
A warm good afternoon to all. I am Sabu, AGM representing State Bank of India. The distinguished guest on the dais and off the dais, and the ICAI members and the other guests gathered here. See, we are associating ICAI for the last so many years. I am a regular person who is attending these programs. So this time, I'm not taking much of your time. I just want to convey two messages to entire the CA family here about the bank only. The first one is our one of the newly introduced product which is running for the last 2-3 years. That is BRE, Business Rule Engine, which is aimed for up to 5 crore working capital requirements of any SME units, which can be sanctioned in 45 minutes journey. We need only 3 things. One is IT return of the firm. Second is their GST return. Third is their last 1 year account statement. So 1 year experienced any SME functioning, any SME is functioning more than 1 year, they can get their business loan approval within 45 minutes. And if up to 10 crore we are providing CET MSC, if the customer is opting for CGT MSC, within next 2 days we will sanction it and disburse it. This is our guarantee. So this message I request each one of you to pass on to your customer. I know everyone is having minimum one SBI customer, at least one SBI customer. Without that, I don't think any of us are here. So please convey this message first. Second, now government has come out with the ECLGS scheme. So that scheme provides 20% of the working capital limit as a 5-year term loan for easing their present West Asia crisis. So we are taking the highest outstanding, that is 1st January to 31st March 2026. What was their highest utilized limit into 20%, we are straight away giving no guarantee, no security is required, no additional collateral is required, nothing is required. 8.65% SMEs are getting a 5-year loan with a 1-year moratorium. First 1 year they need to pay only interest, and the next 4 years they have to pay the equally contributed payment with the interest. This is the latest scheme. We have informed to all the customers. If any customer is asking you about this, please tell them, if at all not required this amount as of now, because there is some cap on the credit guarantee given by the government of India. Those who are first applying, they will get it. Once the cap is completed, crossed, we cannot extend this facility. So they can take this amount and keep it in their working capital account, so that they can, whenever they want, they can utilize, and they won't lose any interest. Since they are paying in their CC account, there the outstanding will come down, so interest burden will not be there. Sometime their interest, present rate of interest may be more than 9%. They are taking at 8.65 and remitting in their 9% CC account. So these two things I just want to get a support from each one of you, and our team is there. So please, they will be approaching you so that they will get your numbers. They will be in frequent contact with you. The customers which need credit requirement, please refer to our bank. Many of you are associated in various ways, stock and receivable audit, and Babu Abraham sir was our board in our local board in Trivandrum, as well as in the audit committee of the bank in corporate center also. So every way many of you are associated, and we have so many other openings also that I usually send it to Jyoti madam by WhatsApp whenever some openings are there for CA, FAMs and all. So many things we are entertaining outside agencies like CA, FAMs. So whenever opportunity comes, we will convey to you. So please be with the State Bank of India, being a national bank. So requesting all of your support and blessings. Thank you. Thank you, madam, for the opportunity.
Thank you, Mr. Sabu. May I now request CA Ravi Chandrasekhar, Secretary, Kozhikode Branch, to deliver the vote of thanks for the inaugural session.
The most important part of this thing is saying thanks to all the dignitaries. But as we are running behind the schedule, I'll make it very short. Chief Guest, Dr. MP Abdul Samad Samadani, Member of Parliament from Pannani, CA Chandrasekhar Vasant Chitale, Chairman Direct Taxes Committee, CA Jay Chairia, Central Council Member, CA Deepa Varghese, Treasurer, SARC, other dignitaries on the dais, my fellow office bearers, and invited guests and members. On behalf of the Calicut branch of ICAI, I wish to thank everyone for being here and participating with a lot of vigor and enthusiasm. As our CA Chandrasekhar Vasant Chitale is mentioned, that our chief guest today, Dr. Abdul Samadani, is a reservoir of knowledge. And I want to thank him for sharing his wisdom here, in spite of his busy schedule, and being with us, spending time with us. Thank you, sir. CA Chandrasekhar Vasant Chitale, who had come all the way from Delhi, and he was very enthusiastic about spending time with us and sharing ideas. And I want to thank, on behalf of Calicut branch of ICA, our appreciation and thanks. Jay Charya, our Central Council member, is an avid traveler. He said he is very thrilled to be in Calicut. I wish that he comes here more often and share his knowledge with us. And I want to thank, on behalf of this Java Calicut branch, I want to thank him full-heartedly. Deepa Verghese, our SARC treasurer, is like a family member. Her presence always gives us a lot of confidence, and she is always welcome, and I want to thank her on behalf of Calicut branch of ICA. And Babu Abraham Kaliwal, he could not be here, but he is always there in our mind, and his presence we can always feel, because his backing always gives us a lot of confidence in undertaking huge projects like this. I wish to thank him for his all support. And a big thanks to all our sponsors, especially our State Bank of India. And I want to thank each one of you once again, each one of you for being here and sharing our enthusiasm. Thank you.
Thank you, sir. Ladies and gentlemen, we shall now break for lunch. And since we have slightly exceeded the time, may I request you to come back to the hall by 1:45, 1:50. Thank you. Like was earlier reported, CA Chandrasekhar Vasant Chitale is chairman of the Direct Taxes Committee of ICAI and a member of the Central Council of ICAI. With decades of experience in direct taxation and professional leadership, he has played an important role in shaping the profession's understanding of contemporary tax developments. May I hand the stage over to sir?
Good afternoon, friends. Honorable Chairperson, and all of you professional brothers and sisters. It's indeed a pleasure to engage this particular session relating to transition from 1961 Act to 2025 Act. Although the PPT is available, I will not present PPT for want of time. I will leave the PPT with the branch chair, which can be circulated. I'll touch upon 5 important points relating to this transition. See, firstly, if you consider the Finance Act or the Union Budget that was presented in February 2026, there was absolutely no rate change. So people were happy. But then if you have to consider the smartness of government, to that effect, let us consider a couple of provisions relating to rate. Although there is no change in rates relating to, say, individuals, HUF, etc., there were 2 rate changes and they were reduced. The one rate change is relating to 115 BBE, so where section 68, 69, those additions are made, then the rate was enhanced to 60%, 25% surcharge, and then whatever cess is there. And this was enhanced at the time of demonetization, because in number of bank accounts it was understood by the government that cash is deposited just like that without any source. So in order to curb those practices, they enhanced the rate from 30% to 60%. So along with surcharge, it was almost 75%. And then as far as penalty is concerned, in this particular addition, the penalty was 10%. So if any such unreported income is there, unexplained cash credit, unexplained money, jewelry, assets, then 75% tax and 10% penalty, that was the formula, 85% was the outflow. Subsequently, it was pointed out to the government that as far as those rate enhancement was concerned, that was in the wake of demonetization. So now number of years have passed post demonetization. So why not address this particular rate? So the rate was brought down from 60% to 30% and people were very happy. But then as a tax council, if we analyze this particular reduction in rate, one will understand the other scenario, because now rate is reduced to 30%, surcharge 25% continues, so maybe along with the cess it comes to 39% as opposed to 75%. But then after presentation of budgets, when the Finance Act 2026 was enacted, 2 more changes were made. One is, as far as the section is concerned, which said that in such circumstances there would be 10% penalty, that section was omitted. So this particular addition or reporting went into the concealed income and it attracted 200% penalty. And whenever such addition is made under section 68, 69, 69A, etc., then penalty is certainly imposed. So in place of 85%, now the rate became 99%. So maybe over and over one may be jubilant that okay, rate has come down from 60 to 30, but if you consider the economics of penalty, then really outflow would be much more than in the earlier era. So this is how the government has become like a businessman. Yet another example of government being a businessman, that in case of minimum alternate tax in corporates, the rate of tax was 15% on book profits. Now this rate of 15% has been reduced to 14%. So maybe corporates should be happy, but really if you analyze, they should not be happy. For the reason that in earlier era, supposing you have paid minimum alternate tax of 1 crore rupees as a corporate, and in subsequent year when you come to normal tax liability, if your tax liability is 1 crore 50 lakhs, then you get reduction of this 1 crore rupees minimum alternate tax which is paid in earlier period, and you could pay only 50 lakh rupees. But now it is stated that if you want to claim such a benefit, then you have to come to new tax regime. That is one condition. And secondly, if supposing the tax is 2 crore rupees, then 1 crore rupees reduction you get, 1 crore rupees anyway you have to pay. And the second condition they have put for the purpose of MAT set off is only 25% of the current tax liability can be claimed as a credit. So in a given example, supposing in earlier era, if 2 crore was the normal tax and carry forward MAT benefit is 1 crore rupees, one could end up paying 1 crore because 2 crore minus 1 crore, that was the liability. But now it says that only 25% of the tax liability you can claim as a set off. So now 25% of 2 crore, so it would be 50 lakhs. So only 50 lakhs you will get deduction. 1 crore 50 lakhs you will have to pay. The balance 50 lakhs, of course, you can carry forward to the term which is prescribed under those sections. So whenever government is giving by one hand, it is taking out by another hand. There was a demand that as far as revised returns are concerned, you are allowed to revise return within 9 months of the close of the earlier financial year of the assessment year, commencement of assessment year. So maybe 31st December of the assessment year was the last date for the purpose of revised return. Now that assessment year, etc. has become tax year. So now they said that, okay, as far as this revised returns are concerned, you are allowed 12 months, maybe 9 months of tax year fine of a subsequent tax year, and you are given additional 3 months. But those additional 3 months are not free. They are for the purpose of payment of fees. So fees will attract, additional tax will attract. In case of various statements which are required to be filed for purchase of immovable property, for allotment of shares, securities, and generally people forget to file those statements. If the statement is not filed, then in that case, there was penalty of 100 rupees, 200 rupees. Now this penalty has been removed and it has been substituted by fees. Because for the purpose of imposition of penalty, there was a process to give hearing, then reasonable cause. If reasonable cause is there, penalty doesn't attract. So those things were there. Even if penalty is imposed, it was agitated in appeal. So they have dispensed with this penalty and substituted it by fee of 100 rupees per day. So it is compulsory, no need of any argument, but then you have to shell out more. So that way law has become simple, but at a cost. So as a chartered accountants also, we are much informed about the principle of conservatism, but there from government we have to learn, as a professional, while charging fees, you should abandon this conservatism. You should be giving justice to your hard-earned professional qualification and maybe charging appropriately. And that is the reason that we have Jai Chaira with us, and he will be taking us to this particular nuances, how to do that. Then when we start reading this particular section, Income Tax Act, this 2025, there are two things that we will discuss. One is about how to read the act, and secondly, how to interpret any particular provision. So firstly, as far as reading of act is concerned, it will be appreciated that at this particular point of time, maybe two acts one will have to learn, they will run parallelly. Because Income Tax Act 1961 has been repealed, and that is repealed from 1st April 2026, and that is provided in section 536 of 2025 Act. So our study has to start from examination of this section 536. So 536 tells us that from 31st March 2026 onwards, Income Tax Act 1961 will be inoperative. And this Income Tax Act, of course, 2025 has come into play. But what about the penalties, assessments, proceedings, grants, which are given under the earlier period, and now the subsequent period has come? So in case of a charitable institution, if the institution has been recognized for section 11, 12, 13 deductions, maybe 12 a registration is granted, and 2 years have elapsed, and 3 years are remaining, then what that trust should do? Should it apply again? How it will be processed with? So for all such matters, section 536 is a guide, and that informs us that whenever any proceedings is there, any grant of concession is there, recognition is there, under 1961 Act, it will continue under parallel provision of 2025 Act for the remainder period. So in case of charitable institutions, if 2 years have elapsed on 31st March 2026, they don't have to do anything further because 3 years are remaining. So for remaining 3 years, that registration will continue under new provision of the subsequent act, that is 2025 Act. If any appeal is there, if any assessment is there, penalty proceedings are there, all those till the period 31st March 2026 would be governed by 1961 Act. Let us assume that maybe tomorrow or after 3 months, an assessment order is passed for say assessment year 24-25, 25-26. And in that case, the assessee is aggrieved and he has to prefer an appeal. Now, if he has to prefer an appeal on say October 26 or November 26, at that point of time, 1961 Act already stands repealed. So what he should do? So there, this section 526(2) guides us that although subsection 1 says that it is repealed, subsection 2 clauses A to V are there. They tell us that for all matters which have to do with 1961 Act, 19 provisions of 1961 Act will be operative if the income, expense, penalty, etc. is up to the period ended 31st March 2026. So everything under that act we have to consider. There is only one exception, and that exception is charging of interest and paying of interest. Now if the assessee is eligible for refund, government pays interest to the assessee, and if the demand is there, the assessee has to pay interest to the government. So in that case, what rate of interest should be followed? So there it says that any interest calculation up to the period up to 31st March 2026, one has to apply the rates and provisions under 1961 Act, and for a subsequent period, parallel rates and provision given in 2025 Act should be followed. Now at present, the interest on refund as well as interest on demand is at the same rate. Therefore, today it may not impact much arithmetically, but going forward, if the rate of interest is reduced or enhanced, in that case it would make a difference. But that is what the provision says. If the interest is to be paid or refunded up to 31st March 2026, under earlier provision, for earlier years, it would be 61 Act, and for that year or those years, from 1st April 2026, interest will be calculated under the subsequent Act. Then, couple of more innocuous provisions were made, and one important is about the sovereign gold bonds. As you are aware that if there is a gain from sovereign gold bonds, that gain is completely exempt under section 10. In present era also, this particular exemption remains untouched. But then one more condition has been added, that let us assume that maybe the gold bond period is, let us say, 5 years. One assessee purchases it for say 10 lakh rupees, and after 3 years he sells it for 1,50,000. Then another assessee takes it, and after 2 years he redeems it at 1,80,000. So for the assessee selling it in secondary market, assessee buying it in secondary market, selling it on redemption, both were enjoying the exemption. But now the provision is made that this for the purpose of availing this exemption, the person should hold the branch bonds right from the original subscription till the date of maturity. So if you have purchased in secondary market, you will not be eligible for exemption. If you have sold in secondary market, you will also not be eligible for any exemption. So that change they have made, but lot of assessees who have purchased in secondary market, they are at a loss. And there was one compensation if the immovable property is acquired for the purpose of infrastructure, roads, dams, etc. Then that compensation was completely tax-free, but that was under the notification of the government. That notification has now brought in the section as far as 2025 Act is concerned. As far as this section 536 is concerned, it also says that the circulars, notifications which are issued in earlier era, they will be binding in a subsequent era as well, or they will be applicable unless there is a change in act. If there is change in act, obviously one will have to revisit the circular, but if there is no change in act, generally the circular will be binding. There the issue arises, like supposing in 1994 there was one circular that in what circumstances if there is delay in submissions of appeal or any other application, it can be delayed. So the subject matter was delay, and there is no provision specifically in this act that circular was issued in 1994 under 61 Act, so that will continue to operate, and various other circulars. I am just mentioning one for the purpose of example. But then there is yet another celebrated circular, circular number 14 issued in 1954. And that circular tells us that if the assessee has forgotten to claim any benefit, any relief, deduction, then assessing officer should not take advantage of his ignorance. He should guide him. That supposing he finds that the national saving certificates are purchased but ATC deduction is not taken, or certain payment is made for which it has remained to claim deduction, then he should guide the assessee that you must claim, you consider claiming the deduction, and then with that guidance the assessee can move forward, or assessment can move forward. Now that circular is issued, circular number 14 in 1954, that is not issued under 1961 Act. So the issue arises, would that circular be binding? So there, if you consider 1961 Act, there is section 297, and section 297 says that whatever circulars they were issued under earlier Act, they will be binding under this particular Act. So via this section 197, for the current period also, this particular exemption can be considered as applicable, or such circulars also can be considered as applicable. As far as decisions are concerned, whether the decisions rendered under earlier Act, 1961 Act, can be used effectively under subsequent Act. So there one will have to really consider what is the genesis of that particular decision. And if that genesis remains unaltered, then that decision also shall be applicable in a subsequent period. Now take example of section 48(3), where there is a common belief that if I make payment exceeding 10,000 otherwise than through banking channels, then the expenditure is liable for deduction, come what may. But let us try to appreciate that one enterprise has paid maybe lakhs of rupees to another because he demanded that it should be given in cash, and then the deduction was claimed, and that deduction was disallowed by the assessing officer. Matter was agitated, and gradually it went to Supreme Court. As you are aware, under Article 14 of the Constitution, there should not be any unreasonable restriction on carrying on of business. You should be able to freely carry on the business. So there the assessee agitated that I am purchasing a particular item, the buyer is telling me pay in cash, and I am paying him cash, I am incurring expenses for business. So this is directing me to pay by account pay check is unreasonable restriction on carrying on of business, and it doesn't gel well with Article 14 of the Constitution. There, when the Supreme Court, when the CBDT argued the case before Supreme Court, in case of Attar Singh Gurmukh Singh, there the CBDT said that you cannot read section 48(3) in isolation. There is rule 6DD, and under 6DD there is clause J. Clause J tells that if under unavoidable circumstances, if the assessing officer convinced that the assessee had to make payment in cash, and the payee acknowledges receipt of cash, he has accounted for that cash, then this is okay, because 48(3) is not an absolute provision. It is to be read with real 6GDs, and it is rule of evidence, because CBDT has said that we want to unearth the black money, and if it is paid through banking channels, generally there is a presumption that black money is not involved, so we easily understand it. So this is a rule of evidence. So even if payment of cash is made, and if better evidence is produced that payee is saying I have received money, he is saying I have paid for the purpose of expenses, and he has accounted for, then disallowance will not attract. And section 48(2) is to be read with that 6GD clause Z. In a subsequent period, subsequent to this decision, that Z clause itself was omitted. So now, again the issue came when these exceptional circumstances cannot be agitated before the authority. So earlier clauses are payment to government the agencies, etc. So this particular clause, exceptional circumstances, was omitted. So in that case, how it will operate? So in Gujarat, there was one enterprise selling prepaid cards for mobile phones from Tata Indicom. And then that particular enterprise was maybe outside Ahmedabad in some town, and he had account in a cooperative bank. So when he gave check to the Tata Indicom in a cooperative bank, it took 3-4 days to realize in those days. So Tata Indicom told him that we will not accept your check. You deposit cash in our bank account, and then only we will give you prepaid cards. So accordingly, he deposited cash in the bank account of Tata Indicom, some 22 lakh rupees, and then accordingly filed the return. And then the return of income, while assessing, that amount of 22 lakh rupees was disallowed. Then the matter came before the Gujarat High Court in case of Anupam Teleservices. There the clause J was not there. Still the Gujarat High Court ruled that section 40A3 is a rule of evidence. It cannot be absolute for the purpose of deduction. So come what may, under each circumstances it should be disallowed. That is not the case. If the assessee is able to prove that he has made the payment, the recipient acknowledges that he has received the payment, then in that case deduction cannot be disallowed. So although verbatim law says that you must disallow the deduction, this case law says that this is rule of evidence, and accordingly deduction cannot be denied. So such type of decisions, even under subsequent era, that is 2025 Act, will continue to hold the field. I am citing only one decision, but there are, as you are aware, thousands of decisions. So while considering whether this particular decision is applicable or not, one has to consider what are the wordings under that act, what are the circumstances, and whether the similar circumstances are prevailing under this particular act. So while commencing reading, because maybe another 2-3 years we will be negotiating with 1961 Act. And in order to address how the interplay of 1961 Act vis-a-vis 2025 Act goes, 536 section is very important. So maybe if one starts reading this Income Tax Act 2025, he has to start that reading not with section 1 but with section 536. Then coming to simplicity, it says that, okay, this law is very simple, we have not made much changes. Is the law made simple? So there are certain instances where tables are made. So at times it adds to the complicality. Now first blush with Income Tax Act 2025 came for assessees, for consultants, with the factor of TDS. So in case of TDS, now supposing somebody asks that, okay, we are paying airlines commission for the purpose of ticketing, so whether TDS is applicable. Then in earlier era what used to happen, I will read section 194H. That 194H will tell me what is meaning of commission, in what circumstances I have to deduct, what is the threshold, and what is the rate of TDS. And I will know everything. I can address the query. But in new era, they are saying it has become very simple. But in order to interpret in new era, what I have to do, I have to read one section 393 for any TDS, for commission also and other things also. So when I start reading 393, it says that if payment is to be made to resident, then the TDS is to be made as per table 1. So you have to go to table 1. In table 1, you have to see whether commission appears. So in table 1, first entry itself is commission. Then under that Roman 1, it tells that commission for insurance business. So this is not insurance business. Then go to entry 2. Entry 2 tells that any other commission other than insurance business. So here your commission comes. But then you have to understand what is meaning of commission, because at that time it was under 194H itself the definition was given. So for the purpose of reading any act, understanding the concept, you have to understand the meaning of that concept as per Income Tax Act. Now, as per Income Tax Act, definitions are given in section 2, where commission is not defined. Or for any act under the particular section, they have defined the meaning of that particular concept. There also, commission is not defined. Then for any purpose, at the end of the chapter, the definitions are given in the form of interpretation. So for TDS, we have section 402, where these interpretations are appearing. So in interpretation, the word commission is there, and you can interpret the commission. And there it says commission, it includes, there are 3-4 entries, but generally those entries are relating to commission paid for the purpose of one is selling to another, and you are in between the mediator, and he is selling the product. Then whatever remuneration a person receives is a commission. But here it is not the product, it is a service. So service is nowhere stated in those 4-5 clauses. Then again a question mark comes whether it is commission. So again when we start reading, we say commission includes. So whatever commonly we understand as a commission is a commission. Besides that, whatever explicitly stated is a commission. So if we feel that, okay, commonly commission for services is also commission, then we come to the conclusion that yes, it is a commission and it is liable for deduction under that table 1, entry 1, Roman 2. Then who should deduct? The second column says specified person. Now what is specified person? Section 2 does not define specified person. That section 393 does not define specified person. Then again you have to go to 402. There they say any person other than individual and HUF, and individual and HUF if their prior year's accounts are subject to tax audit. So all those things you will have to do for the purpose of interpretation, particularly as far as TDS is concerned. And therefore, the claim that tables have made, really it's simple. I think it is a challenge, but then again we will have to gear up for that. That takes me to yet another issue which normally CA firms or others are facing, that is 194T, the deduction of this particular TDS from remuneration and interest to partners. Of course, in earlier commission, it is not the conclusion you can draw with just reading table 1, because again table 2 talks about non-resident subsection 2, so it is not applicable. Then table 3 talks of any person. So there also you have to read. Then table 4 and 5 tell you in what circumstances TDS is not to be made. So if person is such or circumstances are such that table 4 or 5 apply, then TDS does not apply. So everything you have to read. And in that background, as far as this table, insurance partnership interest and remuneration is concerned, there is general complaint that there is a problem that accounts are finalized in the month of say August, September. At that point of time, if the remuneration is say 40% of profit, 60% of profit, the amount of profit is known and then the remuneration gets crystallized. So how am I expected to deduct on 31st of March? Because although it gets crystallized in August or September, it is liability appearing on 31st of March. So it is necessary that deduction should be made. To that, there is one proposal which are given by the professionals for consideration, that supposing the profit is 1 crore rupees and there are 3 partners, ABC, each is entitled to remuneration of 20 lakh rupees. So 60 lakh rupees is remuneration. So if you write in profit and loss account, debiting the remuneration account and crediting them 20 lakh rupees, then under 194T and 393 subsection 3 table 3, tax is deductible. But take an example. Supposing you close the profit and loss account with profit of 1 crore rupees without debiting remuneration, so you are not crediting remuneration to the partner's capital account. Then in that case, your profit and loss account will show profit of 1 crore rupees. While furnishing return of income, you start profit as per profit and loss account 1 crore less remuneration accrued to ABC 60 lakh rupees and your taxable income 40 lakh rupees. In that case, whether the deduction would be available. Now, in order to get the deduction, three things. One is the expenditure should be wholly and exclusively for the purpose of business. The answer is yes. The liability should have accrued during the year. At the year end, that should be a liability. So liability has accrued during the year because as per partnership deed, they are entitled to this remuneration. So as far as 31st March is concerned, the liability has accrued. And thirdly, if the tax is deductible, then it is deducted, and if it is deducted, it is paid. Now here, whether the tax is deductible, because the law says there are 2 points of time to decide whether the tax is deductible. Earlier of two would be the point. One is payment and one is credit to the account of the partner. So here payment is not made, so that event is not, has not occasioned. And credit to the account of the partner, credit is not made because even debit is not made, so credit is not made. So occasion for TDS does not arise. So if occasion for TDS does not arise, the deduction cannot be disallowed under section 40A3. So a view can be taken that in such circumstances, if you directly claim in your computation statement, the deduction is available. Now if one wants legal support, now supposing there are sale of 1 crore rupees which happened in say last 7 days or 10 days of March, your accountant was on leave, he came on 11th of April and on 11th of April he accounts for entire 1 crore rupees sale which was really from 20 to 31st March. Will the income tax officer accept that in my books of account it is appearing in April, so tax in April? So that will not happen. So books of account do not decide what is the income, they are the vehicle to reach the destination of taxable income. And at several occasions we do. In case of depreciation, whatever rate we may charge depreciation, ultimately we add back that depreciation and calculate on block of assets, and that is allowed. So books of account do not decide the profit, but they are vehicle to calculate the income. And also the Supreme Court has endorsed these provisions in case of Kedarnath jute and metal box. That was case of 1964-65 financial year. Payment of Bonus Act was enacted. Payment of Bonus Act 1965, and which got enacted in somewhere June, July 65. And the liability was there created for the financial year 1964-65. So in such circumstances, the accounts were closed, and when the law got enacted, the company realized that on 31st March 1965, liability for bonus arises. So in the return of income, they said profit as per profit and loss account minus bonus liability and claimed the deduction. Income tax officer disallowed, telling that there is no entry in the books of account, so no deduction. And Supreme Court came to the conclusion that entry in books of account is not determinative whether the income has been earned or not. You have to calculate income. If there is error in books of account, you have to rectify it by allowing the deduction. Here, the liability arises on the year ending date, and therefore deduction would be available. So, if there is a foolish provision, then there are nonsense compliances. So, I am not suggesting that one should plan accordingly, but accidentally it remains. Then maybe there can be way out. So, as far as TDS is concerned, one would appreciate that it has not become really simple. Then two more aspects I would like to deal with. One is relating to tax audit, and another is search and seizure. In case of tax audit, the provisions continue in section 63, which is parallel to section 44AB. Form 26 is there. There are 4 parts, A, B, C, D. Part A is present 3CA. Part B is present 3CB. Part C is first 8 questions of 3CD, that is name, address, PAN number, etc. And part D is the remainder part of 3CD. I am inviting attention to tax audit, not because I want to discuss tax audit, but because the onerous responsibility that has been cast on the professionals and the time consumption by the professionals. So what generally we believe that if this year I am charging 50,000 rupees as a tax audit fee, when the assessee comes for the purpose of tax audit, one should be bold enough in telling that next year fee will not be less than 1 lakh rupees. Let me illustrate why. Because as far as, let us consider the quantum. As far as quantum is concerned, in that part 3CD, part C and D, there are about 57 questions. All those 57 questions you have to answer, and not only answer, but relating to each question, if some particular is there, again there are 50 schedules. In those 50 schedules, you have to give details of those particular things. So if the office took, say, 8 hours to write down various figures, words, etc. in Form 3CD, as far as Form 26 is concerned, not less than 20 hours will be consumed. So if more hours are required for verification also, more hours would be devoted. And secondly, and more importantly, substantial responsibility is assumed by the auditor. And that is because if you read those sections, say 3CA, what is the present responsibility? Audit has been done by XYZ company, or we have done the audit under Companies Act, and we have annexed the audit report. And that is end of it. Now the note below part A says that if you are attaching the audit report, then in that case, you have to state the tax impact of the qualification included or the reservation included in that audit report. So under Companies Act, where some qualifications are made, some remarks are made, you are not simply to attach, but you have to read it and interpret what are the changes and why it should not be, how it should be dealt with as far as tax returns are concerned. If you go to further form, part D particularly, there also every qualification, every statement which you are making in a negative manner or reservation, you have to give reasoning. And if you complete this particular filling up of form A, B, C, D of 26, then virtually the assessment is complete. So if there is any error, that would be problematic for the purpose of professional. And as far as Income Tax Office is concerned, now examination of those tax audit reports is not confined only by physical verification, but they are subjected to artificial intelligence where no error is, remains unturned. So maybe tax audit is going to be a challenging subsequent period, and if you really want to, I am not saying you don't accept challenge, but you accept that challenge, one will have to devote more time, and if you have to devote more time, assume more responsibility, one should be entitled to compensated adequately. So that point one should bear in mind. And as a profession as such, if we tell to clients, then certainly everybody will interpret the tax audit in the same manner. Lastly, about search, seizure and survey. Although it is stated that there is no change in income tax law by and large, but when you come to search, seizure and survey, there are changes. Now, particularly in case of, say, search, let us say survey. In case of survey, generally statement is not taken, that is not authorized. If voluntarily anybody wants to declare income, that's fine. But now, under survey also, the authority to take statement on oath has been confirmed to the survey team. There the question was asked to CBDT that you are giving such an onerous authority to the income tax officer to take statements. What about protection to the assessees? There they answered, no, we will come up with SOP which will afford that protection to the assessee. The ground rules we will give, but till today those ground rules have not come. About search, the definition of asset, particularly substantially increased. It includes now reason to carry out the search. The search can be carried out not only because if one finds asset, but if information, computer system, email, etc., where the incriminating information is likely to be there, then the search can be conducted at such places, and those who control that information, on those also search can be undertaken, their statements can be taken, As far as taking of statement is concerned, anybody about to enter the search premises or who has left the premises or who is there, their statement can be taken even if a driver is there, because driver knows much more where the owner has gone than the CFO. So driver statement also can be taken. I am not concerned about drivers, customers, suppliers. I am concerned about the professionals, you and me. Now, within this sweep, since the virtual digital asset, computer system, everything gets defined, the search also is knocking doors of professionals. Because what happens, whenever any search party comes and a question is asked, where are your books of account, where is your computation? And the answer is, it is with our chartered accountant. The moment he answers it is with our chartered accountant, search can happen at your place as well. As far as confiscation is concerned, stock in trade cannot be confiscated, but computer is not stock in trade. Computer can be confiscated, your computer can be confiscated, assessee's computer can be confiscated. And if CA's computer is confiscated, maybe for another 3-4 months, it would be very difficult for him to practice because he will not be having any data. So, care has to be taken about documentation, that whenever we receive any data, whenever we receive any document, maybe there should be one communication authenticating that he has received the data, and similarly other communication that that data has been returned and nothing is with us. So even if the client says that we have data is with chartered accountant, he should be in a position to demonstrate that data is with not me, this is how I have returned, and you cannot come to my place or you cannot take my computer. Of course, this particular answer also may be insufficient. There are other things also. For want of time, I will just restrict myself to that. But what attention I want to invite of the August gathering is to the DPDP Act, Digital Personal Data Protection Act. Under DPDP Act, a chartered accountant is a data fiduciary, because the data belongs to the client, his data principal. He hands over to the chartered accountant for maybe maintaining accounts, for preparing returns, for uploading returns. So in this process, he becomes a data fiduciary. So there has to be documentation for that, there has to be secrecy protocol. If supposing my 2 articles are working out of 10 on that particular job, other 8 have no business to deal with that data. So it should not be known to them. So there are various secrecy protocols. If there is breach of a secrecy protocol, it is need to be informed to the board that is to be appointed, to the client and everybody. And there are various other responsibilities. And why I am inviting attention to DPDP Act, maybe one can have another seminar for DPDP Act, is if security protocol is not maintained, the maximum penalty is 250 crore rupees. If there is breach of security protocol and the follow-up procedure is not adopted, maximum penalty is 200 crore rupees. And if there is any offense, any non-compliance of DPDP Act, the maximum penalty is 50 crore rupees. So these penalties are knocking your doors as a data fiduciary, as a data processor. So one will have to take care, because if supposing such computer goes in the hands of the assessing officer, and for a particular client there are 5 types of balance sheet. One is after reducing stock by 1 lakh rupees, one is by increasing, say, creditors by 2 lakh rupees. Then in that case, whatever music the assessee faces, assessee will face. But maybe as an compliance, the chartered accountant also would be answerable. And where this data protocol has not been followed, the DPDP Act would be enacted in a serious manner. Now, in November, these DPDP rules have also been passed. Within 18 months, it will come into play. So one will have to be very careful. Again, there is a rule that supposing the data is given to you for the purpose of furnishing of return, and it is no tax audit case, so by August, you will be furnishing the return of income. So after you have done with the purpose for which the data was handed over, within 3 months, you have to return that data. And again, what is proof that you have returned? So ultimately, in order to establish that you have returned within 3 months, you will need certain document. So all these things one would have to seriously look into in order to protect their own skin, leave aside charging and earning thereafter. So hereafter, one will be more vigilant as far as this DPDP Act and its compliance is concerned. And I'm sure that maybe it was suggested in some seminar that after the season is over, one should wash the computer, in a sense, because even if you delete the files, mind well, the income tax department is more smarter, they can retrieve all the deleted files. But by wash means one has to employ the services of software personnel and reformat the hard disk. Thereafter, the data cannot be retrieved, because from anybody's balance sheet, if anybody's hard disk, if 3-4 balance sheets emerge, if 3-4 tally backups emerge, then what will be his case? I think he would be devastated, his practice would be really at a risk. So friends, although we are transiting from 61 Act to 2025 Act, in the year 2025, because the DPDP Act is also coming into force, I think one will have to take some extra caution. And I think if I am able to arouse this particular thought in your mind, my purpose of coming here is served. Thank you.
Thank you, Chitale sir. It is indeed a pleasure to hear this topic from the DTC chairman himself. May I request the session chair to kindly escort the speaker of the dais? May I request CA Vinod N, Vice Chairman, Kozhikode Branch, and Session Chair for the next session to kindly escort CA Jay Chera to the dais. Friends, our next speaker is a distinguished leader of the profession who has served ICAI in several important capacities, including as a Central Council member and the current Chairman of Financial Markets and Investor Awareness Committee. Ladies and gentlemen, because of the time constraints, we are cutting short the introduction. Please join me in welcoming CA Jay Chera for his session.
A very good afternoon to all of you. And we do understand there were test matches some point of time, and today the most important form of cricket is 2020. I am also left out with 20 minutes, because if we all, I, Chitle sir and Deepa, we have to catch the train, then exactly 20 minutes are there. So within that, I'll be covering up a few aspects that I want to discuss. Maybe this is an opportunity for me to be called back so that I can complete my remaining points, maybe in the next conference next year. Well, skill up, scale up. This was the topic suggested to me by Babu Abram sir. And why do I take this topic? Friends, around I think 2-3 decades back, I was a student at US. I was with UCLA, that is University of California, Los Angeles. And the dean, on the very first day, Mr. Uday Karmarkar, you can understand from this name, a person of Indian origin. He asked a question, you are from which place? I said, sir, India. And he made 2 statements. Now these 2 statements are very important. Number 1, you Indians are very intelligent. What a wonderful thing. And that is said about chartered accountant, right? You Indians are very intelligent. And second statement, so you cannot earn. You cannot make money. You cannot accumulate wealth. That is what he's saying. Seems very contradictory, right? Yes, no. Seems very contradictory, right? But what he tried to say, let me put it in a very simple way. Very simple way. Go to an average Indian restaurant. I am not very sure what happens with Kozhikode, but most of the Indian restaurants, in their menu, you will find 400 items. You have South Indian, North Indian, Chinese, this, that, Mexican, Italian, whatever, etc., etc. What about McDonald's? What do they produce? Effectively, 1 item? Effectively? Who is conquering the world? Just look at it. Starbucks. Do they have more knowledge or chartered accountants? Please understand one thing. Knowledge is only one of the aspects for getting success. Before going to US, after completing my chartered accountancy, I was very studious. I used to keep on studying. There was a time before I joined the Central Council, I was a speaker on income tax, section to section, subsection, clauses and everything, cases, whatever. I would go to the Chartered Accountant Journal and Management Accountant Journal and so many things. But after listening to this, I understood one thing, and a very simple way I'm going to put it up to you. In the game of cricket, if you have only a good batting side, it is not sufficient. Similarly, for a professional, only knowledge or intelligence is not sufficient. Is not sufficient. This is the point I wanted to make. Let me continue with it. How does it work? Yeah. So very quickly, the presentation was for 90 minutes, but I'm going to make it very short. Can you shout out the name of the people? See, it is possible. We chartered accountant can shout out, right? Madam, allowed to shout, no? Chartered accountants don't have to be serious. They have to be only sincere. They have to be always smiling. So the first one is, in Kerala, you don't follow cricket or what? Bumrah. Okay. He is famous for what? Pace bowling. Okay. The second one, Virat Kohli, famous for centuries, batting, fine. The third one, Dhoni, famous for captaincy, okay, wicket keeping. The fourth one, Dravid, right, the wall of India, cool guy for longer innings. And the fifth one, Kumble, famous for googlies. Okay, I'll come to this part. Let me move further. Actually, this is the evening things, but whatever it is. Now from this, you have to tell me what do you think is there in the glass. The first one, what is there in this glass? What is happening? Madam, what is happening? Why everybody is mute? In the first glass, what do you say? What is it? Whiskey. Fantastic. You can shout. Chartered accountants are allowed to do that. Second one, what do you say? Tequila. Tequila shots. Fine, fine. The third one, beer. Fantastic. Fourth one, vodka. Fine. That is also one of the possible answers. Fifth one is fine. Fine. The knowledge is good. Chitle sir, there is very good ample knowledge here. We are not actually required here. Well, I'll come to this point what I want to make. Now when I have made all these things for males, I assume males only. I only assume. So what about females? Females will say, what about us? So let me come to that. The first one is, you can shout out whatever it is, lipstick. Yes. The next one, eyeliner. And the third one, fantastic. So I'll come to this part. Now, we have to understand one thing. We have assumed that once you become a chartered accountant, the entire world comes to you. Right? I am a lion. Right? I am a lion. But I must sit in my den and all the animals have to come and become prey to me. It never happens. So you have to understand one thing. Look at all the successful enterprises. What do you think? They spend more time on operations, on marketing, or on strategy. What do you say? Initially operations. Over a period of time, they shift to marketing. Right? And then it is strategy. Where are we working as chartered accountants? How much time we give to marketing or strategy? How much? More or less? So how do we grow? I have a simple question, a very, very simple question. If you make a list of 100 richest persons in Kozhikode, 100 richest, how many chartered accountants are there? How many? At least 10 should be there. At least 10. Youngsters, please listen to it. At least 10. I don't know what it is here in Gujarat. I come from Gujarat. And in Gujarat, the definition of chartered accountant is note chhappanu machine, means money making machine. I am not very sure. See, when I joined CA way back in 92, at that point of time, it was like, you know, they earn very much. Chartered accountants are very rich people. So that was also one of the reasons for my joining this particular course. What I'm trying to say is, I'm not trying to tell you to become greedy, but we'll have to think about it. If we have knowledge, if we have intellect, are we in a position to utilize it? and create something out of it for us, for our clients, and for our nation? That is a big question. Or is it so, in the morning I'm going to my office, doing the same routine work, coming back. Once again I'm going to my office, doing the same work or coming back. These are some questions we'll have to think about. So marketing, when I talk about this, the first thing that comes is, institute does not allow marketing. Institute does not allow marketing. Fortunately, Chitle sir is here. Last year, he was heading the ethical standard board, and I think whatever was done in the ethical standard board in last 2 decades, more than that happened in the last year. He opened up so many things for chartered accountants. So marketing, by marketing, what do you understand? You say institute does not allow, but I have a question. Is it actually a reality that institute is not allowing? The answer is no. Most of our suffering is only our imagination, not the reality. Let us look at it. Do you want the marketing like this? Huh? Behind an auto, audit for 2,000 and 1 income tax return free. No, we don't want such type of marketing, right? Then what are the ways for marketing for us? Please understand one thing, and this is what I learned from management consultants, from very good entrepreneurs, that when you start business, the skill set is different. And for continuing business, skill set is different. And for scaling up, they are totally different. So initially when you start, of course, you have to dirty your hands with every damn thing. But over a period of time, a senior person would always keep on see to it that more and more market he accumulates. And there is a team which works, yes or no? Find out, even in Kozhikode, if you make the 10 richest chartered accountants, you will find one interesting thing. They have a team. They have a team. They only work out all those top level chartered accountants. They only work out with a few clients, right? All the work is done by the teams. Yes or no? Delegation. See, if you want to grow, then you have to learn what are the growth agents. Without that, whatever you do, you can have the entire income tax act, you can have entire GST, everything, you can have all the knowledge, but the growth would be limited, right? And I always believed that as a council member, rather than talking on the technical aspect, let me take up an initiative that I discuss about what is happening globally or what are the skills that we chartered accountants require working upon. Well, so one of the ways of marketing is, just imagine if I was a practitioner in IPO, maybe in Chamber of Commerce or maybe in some other organization, there would have been a very big topic on IPO. All those people who are interested in that, prospective people would be there. And if I am a speaker and I speak very well and touch upon some few emotional aspects with people, what will happen? These are my future clients. Are we doing anything like this? No, once again, client must come to us. It never happens. If you really want to grow, and am I talking this to Kerala? Where people from Kerala, I think nearly from every household, has gone in some other part of the world. They have gone or not? If they would not have gone, what would have happened? Imagine that. So you have to go out of your office. You have to learn that at least half of your time is spent on marketing. And I repeat, marketing is not about sales or something like that. It's a very intellectual process. And what is wrong about it was, I have my ability to provide certain services. I have to see to it that I emotionally, marketing is not about intellectual pitch. It is more about emotional pitch. Unless I understand that and I pitch it well, new clients will never join me. So this is a very important science. And we are not working on that. Or, let me give a very interesting example. One of my chartered accountant friend, a very senior chartered accountant friend, he is so simple, and I asked him, where are you? He said, I am on the golf course. I said, you? You are such a simple man. I have never seen you with, any colorful clothes or like that. You're so simple. How come you on a golf course? He said, in my partnership firm, we are 8-10 partners, and my senior partner has told that the type of clients we are looking for, they will always be available on the golf course only. And if you play golf on the golf course, what you can contribute to the firm is much more than reading many of the books. I am not opposed to reading the books and all these things, acquiring knowledge. I'm also a chartered accountant. My point is that, are we working on the second aspect? Along with the betting, are we working on the bowling side? That's a big question. Content marketing, right? Today, there are many people. Whenever the students' conferences are there, then you know what happens? Even members' conference, most of the chairperson and chairman would say, I want some one person, he's a big face, so that I can attract the crowd. Yes or no? That means we chartered accountant cannot attract crowds. Very unfortunate. In my own city, in all the conferences, my chairman would say, sir, I want one person who is big, who is very well known, a very good speaker. And I wonder, I have given you 8 chartered accountants, very smart one. No, sir, somebody who can, attract the crowd. Do you understand what I'm trying to say? My own chairman, my own team is telling about that. So these are some questions. There are people who have created themselves this way. So one of the aspect is marketing. Now our problem is that once I do an FAFD certification, I believe the entire world should come to me. And this is a certificate to abuse the institute. I've done this course, why I'm not getting any work? You will never get. There is no institute which gives work. I've never seen medical council going to doctors that, see, you get 50 operations, this 25 you will get. No. Bar council does not do that. You will never get work like this. Just because you have done 10 certificate courses does not ensure you are going to get work. Betting side once again. You have not done anything bowling side. How do you get it? Right? ICAI allotment. Right? We are just dependent on somebody allotting us. That's a question. ICAI will do whatever is required to be done, but what are we doing? That's a big question. Attending conferences. Many times people attend a conference so that they get work. If I learn this thing, then I'll get the work. It is not going to come that way. Surely not. You have been attending conference for many years. Compulsion by government. See, that is not how you grow. This is something very, very crucial. So, we have to decide whether we want to be a lion in a cage, maybe a golden cage, or you want to hunt for our own prey. That's a very, very, very important question. I tell you, those professionals, see, everybody has to do marketing. Everybody. Right? Even if you want to get married, you have to market yourself on maybe some website or whatever it is. Everything is marketing. Everything. Please understand. And I'm not trying to make you greedy or overemphasize marketing. Why I'm talking about it is, this is something we have ignored till today. This is something which we have ignored. Now, my daughters, both my daughters are chartered accountants, and they tell me, Father, you are obsolete. You are obsolete. Why? You don't exist on Instagram, so you don't exist. I also agree. Somehow I am also chartered accountant only finally. So I am going to be like this. They say that if you're not on social media, and sensible social media, if you are not into that, how do you create that buzz? They are very right. They are very correct. But somehow, I am not taking that step going ahead. So you will have to hunt. Believe me, tell me one thing. Today, you know very well, there are some chartered accountants who are teaching only one subject, but they have made empires. They have made empires. Their businesses are purchased at 150 crores, 250 crores. Have you heard about it? Yes or no? Only one subject and 250 crores. Why? They went out. They created their brands. That's why they were purchased. Do you think you or I have less knowledge than those people? No. But we did not understand that science and art of marketing and branding, so we did not create that empire. Technology. I'm not going to speak more about technology because on technology I know very well any AI program of ICAI is booked. AI is a very hot selling cake, right? But when it comes to AI, I'll just put up it in a different perspective. I was a speaker in Doha some time back, and before me there were some 4 or 5 speakers. They all said that, because of this AI, this practice is going to go away, that is that, and all the chartered accountant spaces were long. Oh, our work is gone. No, it is never going to happen. I was the 6th speaker, and I told them that I come from a small city known as Surat in Gujarat, where diamond merchants are there. They have never gone to even schools. They are not even cleared second standard, but they are all above 1,000 crores. And this AI is not even going to touch them. We are just creating unnecessary buzz around that. The only point is that how are we going to look at AI? How are we going to look at AI? Well, in terms of AI, you are neither required to be like a total stranger to AI, nor you are required to become Sundar. Sundar, you can become Sundar Pichai, not required as such. We have to understand one thing. I have to learn driving the car. I don't have to understand how to repair it. If you can understand this difference, even at the age of 70 years and 80 years, you can use AI very well. You should only know what are the AI tools available, what are the facilities available in your client's place, in your office, in industries, where you are going to use these things. Once you decide that, you have so many youngsters who will work for you. You just have to tell them, do this for me. Do this for me, and they'll do it. This is what is supposed to be done. Do you think Mr. Ambani, when he comes into telecommunication, he understands anything about tea? No. You don't have to understand that. You only have to understand what are the available tools, what are the facilities available, how I can enhance something for the clients. And as Chitle sir rightly said, if I'm doing something wonderful for my client, I have a reason to charge handsome. See, I'm not going to exploit him. I'm not going to exploit him. But if I'm going to create very good value for him, I have a reason to charge him well. I should be compensated well. So, for AI, what is relevant is that you have to drive the car and you don't have to be a mechanic. Next important skill is networking. Now, if you really want to scale up, then networking is something very important. Now, by networking, what happens? People believe networking means going into some meetings, exchanging the cards, talking very, very, very big things, and going away. It never works. So, according to me, networking is something like this. This gentleman, a sage from India, Ramana Maharshi, he was asked a very important, very beautiful question. How do you treat others? How do you treat others? And I think the answer that he has given only an Indian can give. I have never seen a better answer than this. He was asked, how do you treat others? And his answer was, there are no others. There are no others. I was called, somehow this is the last branch in Kerala for me to visit. I've been visiting Arnakulam, that is Kochi, Arnakulam branch from 2012 onwards. I visited other branches, Alapura and Thiruvananthapuram on. Now what happens, when I go to Kochi, right, I don't go with any purpose of getting any business or something. It's very natural. That's why, I can name out 40, 50 chartered accountants very easily in Arnakulam, right? I don't have any purpose. But believe me, once you start having that nature of getting, connected with people. See, if you are connected only to a few selected people, what will happen? Neither your vision broadens. And when I say scale up the practice, I am not only talking in terms of money. I am not only talking in terms of money. I come in as a council member, unfortunately. I have to come with this thing. Otherwise, in my personal life, I have never put any air conditioner at my home, no TV at my home. I have no dining table at my home. I am very happy with the age-old house, which my father could afford. He was doing a routine job. I am happy with that. So it's not only about money. Of course, I have made it a lot. Otherwise, I would not have come here. I started number of entrepreneurship initiatives. And once again, this question arises. Now just look at it. This particular area is very much known for tourism, that is medical tourism, right? Ayurveda and all these things. Why is it so that only few people are doing that particular business? Why are we chartered accountants not thinking about? And I have a simple question. Suppose after completing my chartered accountancy, okay, forget, if I am an MBA, and if I start a school, is it fine? Yes or no? Yes. If I start an NBFC, is it good? Bad? Is it fine? If, as an MBA, if I start a chain of beauty parlor, is it fine? Now put it aside, I am a chartered accountant. Tell me, if I start a chain of restaurant, what will you say? Then why did you do CA? That means we are thinking this way. We ourselves have created our life very small, that my life has to be confined only to income tax, GST and audit. Why not? If an MBA could go ahead with a chain of restaurants, with a chain of beauty parlor. Now suppose I start chain of beauty parlor. Do I still remain chartered accountant or not? I'm not going to do the manicure and pedicure work, of course. What I'm going to do is branding, which is a discipline, right? Marketing, locations, right? Policies. These are some very important issues. Why are we not discussing in that direction? Anyway, time I think I have very limited, so I have to quickly forego many things. Let me come back to this, because I was left out only with 20 minutes, no other options. So why I told this thing. Now, tell me one thing, Bumrah is a fast bowler. Do you expect batting like Kohli from him? No? No. Okay. And Dhoni, do you expect Dhoni to bowl like Bumrah? No. Do you expect Dravid to become like maybe Kumble? No. Everybody has specialization. But you know, these people are very ordinary people. These people are very ordinary people. We are great people. I am a chartered accountant. I can do income tax. I can do GST. I can do audit. I can do concurrent audit. I can do FAFD. Whatever comes up, I'll do this, I'll do that, everything. And still I want to grow. That's the problem. Just look at it. They don't go out of their zone. If Kohli is a batsman, he does not try to become a bowler. But I'll do everything. I'll do everything. At the age of 50, I'll read the new Income Tax Act, even though I'm not into income tax practice. If I'm solely into income tax practice, then there is no option. I have to go into it. But I'll read everything. Whatever new comes up, I'll read it. Why? I don't know. Specialization. Very simple example. Similarly, in accounts we have learned, this is my last point, in accounts which you learn is substance over form. But in the marketing world, it is always form over substance. If form was not important, this is the most useless thing. And males know very well this is more costlier than shirts. Unfortunately, we have to purchase still. Why? Don't know. So it is form over substance in your, just look at its psychology. iPhone has established in the psychology of youngster that iPhone is different from other mobiles. Is it different? Probably the answer is no. It performs the same thing. But how does a youngster look at it? Different? Psychology. Right? So similarly, well, I'll skip this also. I have to skip many things. What happened? Because of want of time, somehow come to this. Now, substance over form. That means you can take any of this in any glasses. Try out red wine. Get some very premium friends at your home, invite them, and give them red wine in a steel glass. Look at it, how it looks like. It looks like you have offered them medicine, kada. Do you understand? Just look at it, how the Western world has defined very clearly that, you know, the first impression that you create is not by substance. Substance a person will understand only after getting with you. You will come to know about my substance only after 4 to 5 times meeting with me. Otherwise, you will only judge me by my appearance. So, what about the presentation? Have you worked on the presentation skills? Have you worked on the communication skills? Do we have persuasive communication? That whatever, you know, client sunta hi nahi hai. Client does not pay fees. That means you are not smart in conveying that particular idea. So, these are certain questions. Because of want of time, somehow I went very zigzag. My purpose is not to say anything bad to any of you, because I am also amongst you only, right? But if everyone is going to tell that we are great, we are great, we are great, we will not do actual SWOT analysis. We will not try to understand what is required. So maybe some other day, I'll be in a position to discuss with you, if at all you are interested in this particular science, how to actually grow your practice. And by way of that, it is not growing in terms of money, in terms of lifestyle. If along with your wealth, you don't have time at your disposal. If even today I have to work in my office till 9 o'clock every day, I think it is a pitiable life. I'm nowhere professional by any means. So having a very good health, good wealth of course, having time and a lifestyle. That is what I always believe my chartered accountant should have. And with this intention, I keep on moving across the country and try to see to it I interact with my chartered accountant friends. Thank you very much for being such a wonderful audience. Thank you.
Thank you so much, Jay sir. वो टाई वाला एग्जाम्पल याद रहेगा. May I request the session chair to kindly escort the speaker off the dais. May I request CA Ravi Chandrasekhar, Secretary, Kozhikode Branch, and the session chair for the next session to kindly escort May I request CA Ravi Chandrasekhar, Secretary, Kozhikode Branch, and session chair for the next session to kindly escort CA Ajit Shivadas to the dais. Friends, to guide us through a very important area, we have CA Ajit Shivadas, a chartered accountant, cost accountant, and holder of the advanced diploma in management accounting from CIMA UK. He has addressed over 450 seminars on taxation, accounting, and management topics. He serves as chairman of the Direct Access Committee of AIFTP South Zone and is also a member of the ICAI Task Force reviewing the Income Tax Bill 2025. Please join me in welcoming CA Ajit Shivadas. Ajit sir, the floor is yours.
Very good afternoon, one and all here. Thank you, Kozhikode branch of Institute of Chartered Accountants of India, giving me a chance to discuss quite an important, rather a complex topic in the area of assessment of partnership firms. So before on to the devoted topic, definitely as the theme of our session today, national seminar to be on swapping from Income Tax Act 1961 to Income Tax Act 2025. Let me throw light onto this transition period sort of things that we, the professionals, has to take care on the basis of my a little experience. So I was part of, or I was being privileged enough to be the part of the Income Tax Bill Review Committee. And I was also forming part of Prarambh 2026, the official campaign of Income Tax Department to convene Income Tax Act 2025. The fundamental objective we know, in order to simplify, in order to make the compliance of income tax provisions easier, in order to make it to be transparent, the new Income Tax Act 2025 is proposed. And we know right from the inception of Income Tax Act 1961 up to Budget 2026, you can see more than 4,000 amendments which made the law bulkier. Even though chronology-wise, serial number-wise, 297 sections are there. If you count, more than 833 sections are there in Income Tax Act 1961, wherein in proposed act or the proposed new act, not proposed, the new act as implemented, to have got 536 sections. But due to that amendments, as I was mentioning, the erstwhile act became bulkier. I was wondering, seeing this budget 2026, even before implementing this Income Tax Act 2025, in February 2026 itself, there were, can anyone guess, number of amendments in budget 2026? There were 69 amendments. 69 amendments are there. Proposed in budget 2026 itself, that too, before the date wherein it was being implemented, that is on first day of April 2026. Even though the intention of lawmaker is to simplify the same in order to make it more transparent, I don't know whether that would suffice or not. The time would tell. Over and above, the fundamental thing that is being proposed by the department is there are no policy changes at all. What were there in Income Tax Act 1961 has been in a more simpler way convened in Income Tax Act 2025, the essays. Whether the changes are cosmic or cosmetic, that we have to check with. At prima facie analysis, definitely as if we go through, we may consider all these changes to be cosmetic changes only. At a bird eye view, definitely yes, at a nutshell, we may feel that all those changes proposed are in cosmetic form. But if we dive into that comparison between the old and the new proposed or the new one, the changes are not that much cosmetic. Rather, you can see various cosmic changes, I would call. Radical changes are there. But word by word comparison, if you go by, I would tell you one example. Even though that is not the intention, may not be the intention of lawmaker, but while redrafting the old act to the new act, so many things has happened in such a way that, as I was mentioning, instead of all these cosmetic changes, the cosmic changes, however, have entered into this new taxation regime. One classic example I would tell you, erstwhile section 194N, TDS on cash withdrawals. Before budget 2026, we know 2 slabs were there for defaulters, for non-defaulters, 20 lakh and above, 1 crore and above was there. After budget 2026, no 2 types of persons, only a single person. Irrespective of whether you are a return defaulter or not, only if you are withdrawing more than 1 crore rupees, 2% TDS would be there. Okay, up to there, okay. If you see amended 194N, it says so only. But the same section in New Income Tax Act seems to be in section 393, subsection number 3. 393 subsection number 3 gives this parallel section to 194N. But if we go to that section, the fundamental difference between the existing 194N and the new 194N is, this TDS would be triggered when the total cash withdrawal is more than 1 crore rupees. And the TDS would only be applicable on incremental portion. Incremental portion meaning, suppose you have withdrawn 1 crore 5 lakh rupees. On 5 lakh rupees only what would be applicable? TDS would be applicable. But somehow or other, while redrafting the same in Income Tax Act 2025, what has happened is, if the total amount of withdrawal is more than 1 crore, on the entire amount, what would be applicable? TDS would be applicable. That impression comes. So during that Praram 2026, I was mentioning, I was representing our sister institute regarding TDS, TCS provisioning. And the Commissioner of Income Tax TDS, who was in charge of converting the old law to the new law, Bombay CC80 TDS was there, Madam was there. So I was asking her whether it is intentional or not. Why? Because you had already told there is no policy changes as such. So by doing this, whether the government intends to deduct the TDS on entire portion or is a drafting error. So that time, madam told that, no, the intention is quite clear. There are no changes in what? The TDS rate. There is no change in the policy of deducting the TDS. But somehow or other, while drafting the same, it seems to be what? This way. The intention of lawmaker is quite clear. There is no change. But we don't know how a Palakkad jurisdictional assessing officer, Kozhikode jurisdictional assessing officer, or a faceless assessment officer would go through all these provisions. I wondered, after that meeting, 2 months over, I got a call from one of my clients. The bank is insisting to deduct the TDS on entire amount of 1 crore 2 lakh, he says. So that is the way that is being interpreted by the industry. That is the way that is being interpreted by the deductors and all. So whether or not the intention of lawmaker is being given or not, all these small changes we know in direct taxes, especially in income tax, all these punctuations, all these commas, all these full stops, everything do have got that much a weightage. So a small, without any intention also, the industry would take it in another form. Take another example, say section 33 of the new act, which is nothing but section 32 of existing act or old act, depreciation. Under that section depreciation, if that asset is being used partly or wholly for the purpose of business, yet again you would be eligible to get what? Depreciation is the existing provision. Say for example, I am a chartered accountant in practice, I am a proprietor. My car I am using, say 60% for my professional purposes and 40% for my personal purposes. Out of the total depreciation, repairs, maintenance, insurance, whatever it is, 60% I can what? Allow it as expenses, and the remaining 40% I have to disallow. But if you go in deep to this section 33 new, which is Depreciation in Income Tax Act 2025, you would be eligible to get the depreciation on that an asset if that asset is exclusively and wholly used for what? Business or profession. Meaning, all these sorts of partial sort of deductions and disallowabilities are done and dusted as far as what is concerned. Depreciation is concerned. Likewise, if you go by provision, as I was mentioning earlier, whether the changes are cosmic or cosmetic, prima facie, even though you think that instead of notwithstanding anything, the term irrespective has come. Instead of provisos, additional provisos, everything has been converted to subsections. My dear professional colleagues, my dear senior friends, the point is not so. Definitely, yes, there are chances for huge litigation, I would tell, right at this point of transition from 1961 provisions to this 2025 provisions. With one more change, I would definitely indulge it to my topic. The third point that I want to envisage is nothing but our bread and butter section, section 44AB, tax audit. The parallel section in New Income Tax Act 2025 for 44AB is section 63. No major changes. At the outset, there was some rumors that sister concern cost and management accountants can also become an accountant. It is not so the case. Chartered accountants only till now is the persons who can do all those things. The point of change is there is an interplay between erstwhile 44AD with section 44AB. So those three presumptive sections, 44AD, 44ADA, and 44AE, now has been clubbed under a single section, section 58. All those sections have been tabularized. 3 serial number column has been given there. Now, as per the present Income Tax Act 1961, for section 44AD, if you have opted in, you have to continue at least for 5 years. After opting in, if you are opting out, then only for the next 5 years, you would be required to maintain books of accounts under section 44AA, and you have to do what? Tax audit under section 44ABE clause. That is the present position. So the thing is, only when you have opted in and you are going to opt out, then only what would be applicable? 44ABE clause would be applicable. But that is not the case for section 44ADA or section 44AE. Irrespective of whether you have opted in for 44AD or AE in previous years, this year if you are declaring less than 50%, this year if you are declaring less than 7,500, 1,000 per ton, whatever it is, you would be required to do the audit provided your income is more than basic exemption limit. But after consolidating all these sections under section 68, what has happened is 44 ADAs and AEs tax audit provision has been given the color for what also? 44 AD color also. In that sense, under the current 44 AD, you have opted in and you are opting out, then only what would be applicable? E-close would be applicable. But here 44 AD is also getting the same status of ADA as well as AE. Indifferent whether you had opted in for 44 AD in the previous years or not, if you are a partnership firm, if you are having 40 lakhs to be as what? Turnover, 40 into 8. 2,40,000 rupees you would be required to declare as profit, even though your turnover is less than 1 crore limit, even though you have not done 44 AD in the previous years. Now, if you are having that turnover less than 1 crore, if you have not opted in for 44 AD in the last years, even though you are declaring it less than 8% or 6%, simply you can upload what? Return without tax audit after giving profitability statement as well as balance sheet. 44 AA books of accounts only you would be required to maintain with. But if you see the new provision, section 68, you can see a tremendous shift from the existing one to the new one. So with these three small examples, what I want to convey is, in case of 194N, it was crystal clear. So the person who has written the act, she had told me that that was not her intention. So we have to wait at least till February 2027. Yes, you heard right, sir. We have to wait till February 2027. 2027 budget, that budget is only going to fix what? The new Income Tax Act 2025. As I was mentioning, even before all those things, the bill was being converted into act. Within 3 months, 4 months span, 69 amendments were being provided. I won't wonder if there are at least 500 amendments in income tax bill. Oh, not income tax bill. Finance bill 2026, budget 2027, 2027, finance bill 2027. So in that context, this act is still trying to get its own seat. So we have to wait at least for the next budget in order to know whether all these amendments, all these changes from old act to new act are intentional or not. So with this prelude, let me on to the topic allotted for the day. Is nothing but taxation of firms and potential challenges. Yes. So a partnership firm defined under the old act under section 2 clause 23. The same definition remains in the new act also, 2 clause 45. It just refers to the Indian Partnership Act 1932 section number 4. So what the term partnership firm has been defined under the old act is the same which is being defined under the new act also. So in that partnership firm, all these reconstitution happens at the time of admission, at the time of retirement, death, dissolution, or even change in profit sharing ratio. All these would make reconstitution to the firm. And we are trying to cover up the potential challenges on the taxation perspective for all those transactions which were being covered there with regarding to admission, retirement, dissolution and all, along with conversion of partnership firm to a company. What are all the things that we have to do with? What are all the conditions to get exemptions and all? The next remaining possible time we are trying to cover with. As I was mentioning, no change as far as the term definition of partnership is concerned. Whatever it was there in 2 clause 23 remains to be continued in 245 also. Then we know a partnership, relationship between 2 or more persons, it need not be even written in nature, even oral can become what? A partnership. It need not get registered also. Unregistered partnership firm is also a partnership firm. Why? Because even an oral partnership is a partnership. So whether all those general conditions are applicable for income tax purposes also, if you ask why, the answer is big no. Because you see, in this Income Tax Act 1961, Section 184 or a new Section 325 specifies a partnership firm conditions in order to assess that entity to be in nature of partnership firm. The first and foremost condition being there should be an evidentiary instrument, which is nothing but an partnership deed. Then at the time of submitting the first return, you have to accompany the return with the copy of partnership deed. At the time of reconstitution also, the copy has to be transferred with. And there should be specification of shares within that partnership deed mentioned also. But due to this e-filing and all, while filing the return, even it is an original return or after reconstitution, that uploading of partnership deed is not a must though. But anyhow, the old provisions under the Act has been recopied in the new Act 325 also. So definitely yes, there should be a return deed, plus the profit sharing ratio of partners must be specifically mentioned in that partnership deed. Then only the partnership firm would be treated as a partnership and it would be assessed in such a manner after getting remunerations and all. That's it. So this is what the requirements of a partnership firm under this Income Tax Act. Then section-wise section comparison if you go by, definition of firm already I was mentioning. Then comes the critical sections, the sections for discussion of our day, while admission as well as while reconstitution of firm in form of retirement and all. So the erstwhile, these two sections actually we are going to concentrate for the day. Erstwhile, section 9B along with section number 45(4), we know. Up to assessment year 2021, this 9B section was not there. From assessment year 21-22 only, this section 9B was being introduced and section 45(4) was being what? Amended radically, I would call. In that sense, those two sections are concerned at the time of reconstitution of firm. At the time of retirement, at the time of death, at the time of dissolution, subject to certain conditions, the applicability of section 9B as well as section 45(4) differs. Section 9B is attracted at the time of retirement. Suppose say for example, ABC partnership with 3 partners A, B and C. Mr. C is getting retired and Mr. C is getting a capital asset in form of consideration at the time of retirement. At that time of transfer of capital asset from partnership firm to Mr. C, there are 2 taxable events, deeming fictional sort of taxable events are there in form of 9B as well as section 45(4). The fair market value of that an asset has to be taken into consideration for fixing the amount of taxable in under this 45(4) as well as 9B. Here, the actual amount of book value is being treated to be the cost of acquisition, and that would be deducted from fair market value of that an asset to get profitable figure under section 9B, and the fair market value of assets taken over by the partner plus any other monetary consideration received by the partner at the time of retirement. From that figure, you have to deduct the capital balance on the date of retirement, and the residual amount would be taxed under the section 45(4). So these are the 2 sections deeming fictions at the time of retirement. What would be there? Capital gain would be there. And interestingly, under two situations, it would be the partnership firm's liability to make the tax. At the first instance, which is nothing but fair market value of asset taken over minus cost of acquisition or whatever, cost of transfer, whatever you can deduct with. Nowadays, after 23rd of July 2024, the concept of indexation is not there. So whatever the book value of that an asset is, you can deduct with, and the differential amount 12.5% plus cess plus surcharge would be what? The tax liability. That tax liability would not be the liability of the partner who is going to take away that capital asset. Rather, it would be the firm's liability to make the tax payment. And in second tranche also, while withdrawing that an amount from partnership firm, the amount of value of capital asset withdrawn by the firm, by the partner from the firm, plus cash withdrawn minus closing balance of that partner capital balance would be the capital gain amount. That capital gain amount again, the firm would be liable to make the payment. So this is the position. To this simple principle, definitely as we would be giving more illustrations, more tricky situations, more case studies we would be discussing. But for the time being, I am just setting the pace, what these sections are, 45.4 as well as 9b. So those sections 45.4 as well as 9b, 9b has been replaced by section 8, and this 45.4 has been replaced under section 67.10. So these are the changes. Difference in section numbers as far as these two sections are concerned in New Income Tax Act. Those sections again I would come back. Then while transferring this partnership firm or this thing to a company, exemptions are there subject to various conditions, which must be mentioned under section 47.8 clause. Now it is 71 set D in the new act. That also we would be discussing. Then while transferring the laws for that conversion, the act simply says for the next 80 years, definitely yes, or the expired period, you can carry forward the laws. That was been discussing in 72A, now it is in 116.8. Then the notice of dissolution. After dissolution, you are supposed to give to the jurisdictional assessing officer within 15 days from the days of dissolution. That also is being discussed under section 176.3. Now it is in 323. Then our partners remuneration, which was been under section 40B, now it is in 35E. 40B is not an eligible section, it is a disallowable section. Over and above this amount, if you are giving, that would be disallowed. The same disallowance are being proposed under section 35E. So whenever we are drafting a partnership deed after 1/4/2026, that partnership deed, old 40B, you have to replace with this section 35E. Then, especially for those two sections, 45.4 as well as this 9b, these rules as well as these forms also were being changed. So in connection to that 45.4 and 9b, these two rules, 8AA as well as 8AB was there, now converted to Rule 6 as well as Rule 50. And while doing the same, for accretion of income, accretion of asset value, that amount has to be certified, valued by a registered valuer, and that form has to be submitted in order to get that additional cost of acquisition. Erstwhile, that was Form 5C. Now the form is Form 27. Now, these are all those things that we are going to discuss with. So in a slow pattern, definitely yes, we would be indulging to each and every part of those points that we are going to discuss with. First part, regarding admission of a partner. We know, erstwhile it was section 45.3, which was being concerned at the time of a partner who is investing an asset to a partnership firm while getting admitted to the same. The same provision under 45.3, now it is under 67.9. Same provisions which were there in old act remains intact in this new provision 67.9 also. So what was the position? While admission, say A, B were partners, C has been admitted. C is coming into the firm by contributing an asset to the partnership. While contributing an asset, definitely yes. They have shown the value of contribution in his capital account to be 50 lakh rupees. Suppose C has purchased that asset 3 years before for 40 lakhs. 50 lakh minus 40 lakh without indexation, that amount 10 lakh rupees. Here in this case, at the time of admission, it is not the firm's liability to pay the tax. Definitely as it would be partner's liability to pay the tax. On that differential amount of 10 lakh rupees, definitely yes, C would be required to make the tax payment. So which is nothing but section 45(3), the asset introduced by the partner to the partnership firm as capital at the time of admission. The fair market value at the time of conversion shall be the sales consideration minus the cost of acquisition in the hands of the admitted partner can be deducted, and the differential amount would be treated to be as taxable income. But the point that I was mentioning was, while discussing 45(4) and all, it was the firm's liability to pay the tax. But in this instant case, definitely as it is not the firm's liability, definitely the partner's liability to make the payment. Now comes various other questions. Say for example, asset transferred by partner to the firm. Partner would be liable, I was mentioning. Whether there is any separate treatment if that partner is contributing stock in trade to the partnership. So there were a lot of judicial pronouncements were there, within which it has been categorically mentioned the transaction of contribution of such stock in trade by partner to that partnership itself is a capital transaction. Thereby, irrespective of whether the asset that is being transferred by the partner to the partnership is capital in nature or not, that transaction fair market value has to be taken. You can reduce the cost, differential amount you would be required to make the payment under section 45, capital gain. The same principle is being followed under the new act provision also. So this is what the point that we have to take care while accounting for the admission stage of partners if he is contributing any assets to the partnership. After that simple topic, now on to our reconstitution topic. As I was mentioning, retirement, death, dissolution, as well as change in profit sharing ratio. Now, reconstitution, dissolution. You see, two sections, 9B, 45(4), 9B to 8 and 45(4) to 67(10), I have already mentioned, within which if you see, at the time of change in profit sharing ratio, admission or retirement of partner, then both these sections would be applicable. But the time of dissolution of the firm, only single section, which is nothing but 9B would be applicable. There, the capital gain section 45(4) or new section 67(10) would not be applicable. So all other reconstitutions other than dissolution, then only there would be an interplay between these two sections, 45(4) as well as 9B, 8 as well as 67(10). Then again, at the time of retirement, at the time of death, whatever it is, if the settlement is only in means of cash or bank, no assets are being transferred, no capital assets are being transferred, no stock in trade has been transferred to the retiring partner, then definitely yes, this 9B section, section 8 would not be applicable. At the time of settlement in monetary terms alone, then section 45(4) or 67(10) only would be applicable. Then, if you are giving stock in trade only, so first situation cash I was telling, second situation stock in trade I am pushing in. So if you are transferring stock in trade alone to the retiring partner, then it would be section number 8 and 9B that would be applicable. There would not be any taxability under section 45(4) in that case, wherein the partner is being settled in form of stock in trade also, second situation. Now comes the third situation. If the partner is being settled with a capital asset, land, building, capital asset is being given to the partner at the time of retirement, reconstitution, then definitely yes, both 9B, which is section 8, as well as 48.4, which is section 67.10 would be applicable. So this many permutations and combinations are there for calculating the capital gains under both of these two sections. So all those points that I have been mentioned are been there in the presentation which I have shared on the screen. So in short, at the time of dissolution, 45.4 would not be applicable. If the consideration is only settled in cash or bank, then 9B would not be applicable. Stock in trade alone, 45.4 would not be applicable. Capital asset, then both 45.4 as well as this 9B would be applicable. Yes. Now comes section 8. So I was mentioning the parallel section 2, section 9B, section number 8. At the time of dissolution or at the time of reconstitution, if the partner is being settled using stock in trade or using capital asset, this section would be applicable. At the time of settling the same via cash alone, bank alone, this section would not be applicable, I was mentioning. So with this prelude, let me go to this section, section number 8. Income on receipt of capital asset or stock in trade by specified person from specified entity. So these two terms, specified person as well as specified entity, due care has to be taken. Specified person is nothing but members, partners, members or partners of partnership firm or AOP, BOI, etc. And the specified entity being partnership firm, AOP, BOI, etc. So only when these specified entities admission or retirement, all these reconstitution happens, and if only that an amount has been distributed to specified persons, then only these sections would be applicable. Lot of illustrative issues are there. Say for example, suppose a firm has been converted into a company. A firm has been converted into company, and before that conversion, from that firm, one partner gets what? Retired. At the time of retirement of that partner from that partnership firm, that amount due to the partner is not being what? Settled. That is being kept in the partnership firm as payable to whom? The partner. And after getting converted this firm to a company, 2 years, 3 years later, the company is paying to whom? Partner. Then the person who is paying is not a what? A specified person. It would be whom only? Non-specified person only. So under that situation, whether this section would be applicable or not. Hope you are getting the point that I am trying to do with. Because only at the time wherein specified entity is paying to a specified person, then only what would be applicable? These sections would be applicable. In my instant example, the partnership firm got converted to a company. Company is not a specified entity, but the amount which was been due to that partner while retiring from the firm is not only been what? Paid by that company. So at the time of receipt from that company, whether this section would be applicable is the thing that you have to solve with. Then, suppose say for example, specified person includes partners alone. So at the time of death of a partner, if authorizer representative is receiving some amount from the firm, then that authorizer representative is not what? A specified person. So whether that amount received by specified person would become a taxable amount under section 45.4 would be the question. So lot of practical intricacies are there under that two terms, specified person with that of the term specified entity. So in short, only at the time wherein the payments are being made by specified entity to the specified firm, only under those situations this section 9B as well as 45(4), new section 8 as well as 67(10) would be applicable. So by a specified person to specified entity, the core provision, as I was mentioning, the deemed transfer, the amount of that asset or stock in trade, fair market value, less the value appearing in balance sheet, differential amount, the firm would be liable to make the tax payment. That stock in trade transferred would be taxable under the head PGBP, and that capital asset transferred to that partner would be taxable under the head capital gain. All the other provisions of section 45(1), every other sections would be applicable. Every cost of transfer, all those acquisition, whatever cost it is, can be deducted while deriving the capital gain tax there also. Then as I was mentioning, the quantity of consideration, quantum of consideration is nothing but fair market value. So if you see this new Income Tax Act 2025, it specifies that value has to be taken by registered valuer only. Again, do I repeat the change between the existing with that of the new one? Under the new one, it has been categorically specified that the value has to be taken by the registered valuer itself. So in that sense, the fair market value would be the quantum of consideration. And specified entity, already I have mentioned. Specified entity is a partnership firm, limited liability partnership, AOP, BOI, excluding companies and cooperative society. Specified person is nothing but partner, member of a specified entity. So only those transactions between specified entity and specified person would come over these sections. Then reconstitution, already I have mentioned. One or more partner ceases to be the partners. One or more partners are admitted. All partners continue, but there is change in profit sharing ratio. So under all these situations, this section would be applicable. Then definitely yes, this section 8 is having an interplay between 67(10), which is nothing but erstwhile 45(4), we know. So that interplay we would be discussing later. So dissolution versus reconstitution, I was mentioning. Section 8 would be applicable in both dissolution as well as reconstitution, wherein erstwhile 45(4), 67(10) only would be applicable at the time of reconstitution, not the time of dissolution. Then I was mentioning when the capital asset is being transferred to a partner, both sections, 8 as well as 67(10) would be one applicable. Again, there was a circular, another issue, circular number 14/2021, isn't it? Circular number 14/2021 was there in order to reduce the confusions between interplay between this section 9B with that of this section what? 45(4). So after introduction of this new Income Tax Act 2025, the first section that we the tax professionals have to read is, which means the first section that we have to read? Any idea? Yes, somebody. The first section that we have to read is, some voices came from somewhere, it is 536, which is nothing but repeal and what? Saving clause. Repeal and saving clause. In that repeal and saving clause, whatever it is there in Income Tax Act 1961 is going, whatever the provisions or whatever deductions, whatever exemptions, whatever losses, whatever circulars, whatever notifications which are there in Income Tax Act 1961 are being slowly and smoothly swapped to 2025 provisions also. If we see only the Income Tax Act 1961, the new Act, Income Tax 2025 notified, rules 1962, new rules 2026 has been what? Notified. But for those circulars, notifications, etc., which were there in the old provisions, there are no new circulars which has been notified. Have you ever seen those circulars have been notified to be as a new circular? No. Because all those circulars, all those notifications, all those guidelines, whatever it is for 1961, by virtue of the section that I was mentioning, 536(2)(j), by virtue, all those things would be applicable for what also? The new Act 2025 also. So by regarding to this Section 9B, as I was mentioning, in order to reduce the difficulties, removal of difficulties guideline was been issued as per circular number 14/2021, which was been categorically mentioned under section 9B also. So here the perpendicular section, section number 8, if you see, there also there is specific mention that in order to remove the difficulties of these sections, a separate circular would be what? Issued by the department, and that has to be presented before Parliament within 30 days from the date of an issue. But fortunately or unfortunately, today being what? June 3rd, I suppose, isn't it? Yes. So till date, that circular number 14, equivalent circular, what not been what? Issued nor has been presented before the Parliament. So the first question that we have to answer is whether circular number 14 is still in action. Suppose, say for example, today, June 3rd, 2026, my partnership firm is getting reconstituted. My partner is getting some assets from this partnership firm. Whether the provisions mentioned under section 14, provisions under circular 14 is applicable to this transaction, the answer is not a clear yes. The answer is yes. Yes with a clear yes is different because the new circular which is perpendicular to that circular 14 is yet to be issued by the department. So that many, lot of small lacunas are still left as far as this Income Tax Act 2025 is concerned. That's the point that I want to envisage with. So this is what this section is. So while doing the same, section 6710 also would come into play, I was mentioning. Doing that, other than dissolution, this section would be applicable. Other than stock in trade, this would be applicable for capital asset as well as this bank or cash settlement to the partner, this section would be applicable if that amount of settlement is more than book value of those partners. Formula is quite simple. A is equal to B plus C minus D. In that context, A is nothing but the taxable value. B is the amount of money withdrawn by the partner at the time of retirement. C is nothing but the fair market value of capital asset withdrawn by the partner at the time of retirement. From that amount, B plus C, you have to reduce the closing capital amount as on date of retirement. The differential amount would be the capital gain. And moreover, on that capital gain, it is not the partner who is going to pay the tax, rather partnership firm. We have got n number of cases. During that financial year, partner may have get what? Settled. After settlement and all, settlement may have been done in May 2025. In October 2026, they would come to our office. They would tell the retirement has over and this partner was having 30 lakh rupees as capital balance. We have settled him for 75 lakh rupees. 45 lakh extra we have paid after so many jagadas and all that was been done. Now we would be telling them, yes, now on that 45 lakh extra, you firm have to pay the tax. Isn't it? They would tell 35 lakh extra was been paid. It is whose liability to make the payment? The partner who got retired, it is not our liability, they would tell, but the thing is not so. So after all these things could come into force. That's what I was mentioning too. So in that context, the taxable value is nothing but the amount given to that partner in form of money as well as capital asset, which is over and above the capital balance. Say for capital balance is 30 lakh rupees, he has been given with 25 lakh rupees cash and another 30 lakh rupees asset that has been distributed. In that context, the differential amount over and above distributed to the partner would be what? A taxable amount here. So in this context, chargeability, I was mentioning, it is not to the partner the liability would pass on. The tax liability would be on the partnership firm. Rather, the remaining partners, it is not the outgoing partner, the existing or continuing partner's liability to make the tax on that residual amount, extra amount given to that person. Then it is the year in which that has been distributed, chargeability year, as if 45-1 while it was, now it is 67-1. It would be the year on which the actual amount that has been received by that person. Then, suppose for example, if that person capital balance is 50 lakhs and he has been given asset as well as cash for 45 lakhs alone. 50 lakhs was outstanding balance, 45 lakhs only been what? Settled. It is negative 5 lakh rupees. So negative 5 lakh rupees means it is actually a loss. But that loss cannot be treated to be as what? A capital loss. That cannot be set off with some other gain, some other profits, it cannot be. But that is not the case under section 9B, section 8. Under section 8 or 9B, if that amount is a loss, that can be set off against any other capital assets. But in this instant, the case of 45.4, definitely yes. If the figures are negative, then what would not be there? The chances to set it off with some other capital gains are not there. Within which, let me give you one more tip at the time of transition. Not with regarding to the capital gain of partnership firm I am trying to tell you. Normally, we know the normal principle is short-term capital loss can be set off against both short-term gain as well as long-term gain, wherein long-term loss can only be set off against long-term gain, not against short-term gain. But that an exception is there. Again, do I repeat? For this fundamental principle, there is an exception from 1961 period to 2025 period, which is nothing but assessment year 26-27 to tax year 26-27. In the nearby future, എനിക്ക് തോന്നുന്നു എല്ലാവരും ഇവിടെ നമ്മൾ മലയാളികളാണെന്ന് മനസ്സിലാക്കുന്നു. മലയാളത്തിൽ കുറച്ച് സംസാരിക്കാം. ചെയ്തോളൂ. യെസ്, നമുക്കൊരു രാവിലെ തൊട്ട് നമ്മൾ കേൾക്കാൻ തുടങ്ങിയതുകൊണ്ട് നമ്മളെല്ലാവരും ബോറടിച്ചിരിക്കാതിരിക്കുന്നു വിചാരിക്കുന്നു. അതുകൊണ്ട് മാത്രം ഈ വർഷം അസസ്മെൻറ്റ് ഇയർ 26-27 അല്ലേ? അടുത്ത വർഷം അല്ലെങ്കിൽ ഈ വർഷം ടാക്സ് ഇയർ 26-27, റിട്ടേൺ സബ്മിറ്റ് ചെയ്യുന്ന എപ്പോഴാണ്? 27-28 പീരീഡിൽ. ഈ ട്രാൻസ്ഫോർമേഷൻ നടക്കുന്നതിൻ്റെ ഫണ്ടമെൻ്റൽ ഉദ്ദേശം പ്രീവിയസ് ഇയർ അസസ്മെൻറ്റ് ഇയർ എന്നുള്ള വാക്കുകൾ ആർക്കും മനസ്സിലാവുന്നില്ല, അസസിക്ക് മനസ്സിലാവുന്നില്ല എന്നുള്ളതുകൊണ്ടാണ് സിംഗിൾ ഹംബിൾ ടേം വട്ട് ഹാസ് ബീൻ റീപ്ലേസ്ഡ്, ടാക്സ് ഇയർ ഹാസ് ബീൻ റീപ്ലേസ്ഡ്. രസം എന്താണെന്ന് വെച്ച് കഴിഞ്ഞാൽ നമുക്ക് ആകെ വ്യക്തമായിട്ട് അറിയുന്ന ഏത് മാത്രമാണ്? ഇൻകം ടാക്സ് പ്രൊവിഷൻസ്, പ്രീവിയസ് ഇയർ അസസ്മെൻറ്റ് ഇയർ, ലൈറ്റർ വെയിൻ. നമുക്കറിയാം ഒരു 148 അസസ്മെൻറ്റ് എടുക്കുന്ന സമയത്ത് 21-22 പീരീഡിൻ്റെ എന്ത് എഴുതുന്നുണ്ടാവും? 148A2 നോട്ടീസുമായിട്ടാണ് വരുന്നുണ്ടാവുക. നമ്മൾ പറയും 20-21 എന്തെടുത്തിട്ട് വരും? ബാങ്ക് സ്റ്റേറ്റ്മെൻറ്റ് എടുത്തിട്ട് വരും എന്ന് എഴുതിയൊക്കെ കൊടുത്തിട്ടുണ്ടാവും. കൃത്യമായിട്ട് അവർ എടുത്തിട്ട് വരിക ഇതിൻ്റെയാണ് 21-22 അവർ എന്ത് എടുത്തു വെച്ചിട്ടുണ്ടാവുക. കാരണം ഈ നോട്ടീസ് ബാങ്കിൻ്റെ അടുത്ത് കൊടുത്താൽ ബാങ്ക് ഓട്ടോമാറ്റിക്കായിട്ട് ഏത് എടുക്കുള്ളൂ? 21-22. Definitely yes, banking people were not also well versed with assessment year, previous year concepts and all. So in order to eradicate those difficulties, fundamentally they took away those two terms, previous year assessment year, and has been replaced with tax year. And again, tax year replaces previous year. Assessment year equivalent ആയിട്ടുണ്ടാവുന്ന വാക്ക് ഇതിലില്ല, പുതിയ സംഗതിയിലില്ല. ആ അസസ്മെൻറ്റ് ഇയറിന് എവിടേക്ക് ഉപയോഗിക്കണോ അവിടെ പറയുന്ന കാര്യം എന്താ വെച്ച് കഴിഞ്ഞാൽ ഇയർ സബ്സീക്വൻറ്റ് ടു ടാക്സ് ഇയർ എന്നാണ് പറയുന്നത്. Wherever the term assessment year has to be used, if you go through the Income Tax Act 2025, that has been mentioned, year subsequent to what? Tax year. So the term tax year replaces the term previous year. The point that I want to make you aware is, in this year's income tax return, income tax forms nowadays we are going to submit for an individual taxpayer, if you are going to give them with ITRV, that would be having assessment year 26-27, isn't it? Next year it would be tax year 26-27. So client would be asking you, sir, മാറി പ്രിന്റ് ചെയ്ത് തോന്നുന്നു ഇത് തന്നെയാണ് 26-27 എന്ത് ചെയ്തിരിക്കുന്നു? തന്നിരിക്കുന്നു. അപ്പോൾ നമ്മൾ പണ്ട് സലീം കുമാർ മറ്റേ പറഞ്ഞ പോലെ നമ്മൾ പറയണം എന്ത് ശ്രദ്ധിക്കണം? മുദ്ര ശ്രദ്ധിക്കണം എന്ന് പറയണം. ദാറ്റ് വാസ് അസസ്മെന്റ് ഇയർ 26-27. Now it is what? Tax year 26-27. So in that way, definitely as that confusion is going to carry on. The point that I want to focus was that transition between assessment year 26-27 to tax year 26-27, my dear senior friends. The point is, only for that carry forward loss, only from this assessment year 26-27 to tax year 26-27, it seems that both short-term as well as long-term capital loss can be set off against short-term as well as long-term gain. That is only for what loss? The loss as on 31/3/2026, which is nothing but assessment year 26-27 loss, capital gain, indifferent whether it is long term or short term, that can be set off against long term as well as short term capital gain in tax year 26-27 and onwards. So that a small difference is there as far as the new with that of old is concerned under this saving and repeal clause. But for tax year 26-27, yes, Ramakrishnan sir, for tax year 26-27 again losses happen. Whether it can be carried forward to 27-28, the answer is no. Only those losses from 26-27 assessment year to tax year 26-27, this privilege has. Ramakrishnan sir. Act also it is there, sir. Yes, yes. But again, sir, whether it is intentional or not, we have to wait till what? Finance Act 2027. Scope is there. Because 2027 Act as well as 26 Act, they have made it retrospective sort of an amendment. But anyhow, if you go through the Act for the time being, you may be having an impression, short-term and long-term gain. Yes, that's why. But again, the above clause, if you see, you can have an impression, all losses can be set off against any income. അങ്ങനെ ഒരു interpretation കൂടെ ഉണ്ടായിരുന്നു. Day before yesterday, actually, Palakkad branch was being blessed by our erstwhile president, Bhupati sir. Bhupati sir was mentioning just that 536(2) M clause, N clause I was mentioning regarding this capital gain. M clause, if you see, all losses pertaining to assessment year 26-27, from tax year 26-27 onwards, irrespective of heads of income, you can get what? Deduction. Even TGBP loss pertaining to assessment year 26-27, salary income for tax year 26-27, you can get what? Deduction. So that's why that sort of an interpretation we should not. If you go for that an interpretation, that would be what? Misleading your clients. But it has been categorically mentioned for what gain? Capital gain. So with that and a guarantee only, I was mentioning that an amendment. So in this context, definitely yes, capital gain, that this thing can happen between assessment year 26-27 to tax year 26-27. So back to my topic. In this context, under this situation, which is 45(4), 67(10), if you are having loss, if A is a negative figure, then that negative you cannot what? Set off with any other gain. But for erstwhile section, that is section 8, not erstwhile, the previous section, section 8, 9b, the negative portion there can be set off against any other capital gain. That's the only point that I want to mention here. A is equal to B plus C minus D. A is the capital gain. Yes. Now comes this 72(5) provision, which is the sum attributed to the cost of asset. Sum attributed to cost of asset meaning, I was mentioning here, the total amount that has been given extra to the partner is being taxed to a partnership firm I was mentioning. It was not the partner who actually has paid the tax. Partnership firm has paid the tax on that extra amount. That extra amount can be attributed, not tax amount, the extra amount on which the tax has been paid. That extra amount can be attributed to the remaining value of revalued assets. Says this section, section number 67(10), read along with rule 50(72)(5). That illustration definitely as we would be doing. Theoretically, if you see, suppose 3 lands are there, land A, land B, land C. 3 lands are there. All those lands are having fair, book value 10 lakh each. 10 lakh for A, 10 lakh for B, and 10 lakh for C. And all these 3 lands were being revalued, say for 40 lakh rupees extra. So now revalued is 50, 50, 50. Land A has been given to Mr. A, who is retiring. So that amount of 50 extra amount that has been paid to A, 40 rupees tax would be payable to by the partnership firm. On that, an extra amount on which the firm has paid the tax, that extra amount of 40 lakhs can be divided among the remaining assets, land B as well as land C. That amount you can take as deduction while selling the remaining assets in futuristic period. So that process of adding that extra amount towards the existing assets is nothing but accretion of assets. For doing that an accretion process, the existing provision says you would be required to submit Form 5C. Now after implementation of this act, in order to accrete value towards this asset, it is not form number 5C, rather it would be form 27 would be the form. So this is that process, accretion. So what is accretion? I already mentioned that amount of chargeable amount on which the firm has actually paid the tax is B multiplied by C by D, which is nothing but the existing assets which continues to be there. On that values, this amount on the basis of revaluation amount you would be required to do with. Say for example, 3 lands I was mentioning, A, B and C. Suppose A only was revalued. Revaluation not been made on what? B and C. Then on that extra portion you cannot do what? Attribution process, exemption number 1. Then that revalued asset that was been taken away by whom only? The partner only. In that case also you cannot do what? Accretion. So subject to those 2 exceptions, all other revalued amount, on the revalued amount of existing balance you can do that exercise. Suppose say for example, A was having 10 lakh, B was having 20 lakh, 3 was having 30 lakh. A was taken away. For all those assets, 40 lakhs equally was being what? Added. So B would be 60, C would be what? 70. It is not 60-70 ratio it would be distributed. Rather incremental revalued amount which is equal, 30 lakh each. In that context, the revalued amount only has to be what? Taken into account, not the total value of existing assets, says rule number 50. Illustration definitely yes, we shall do. For attribution, the conditions I was mentioning, anyhow, on the PowerPoint slide, the source of gain, attribution is only permitted if amount charged under section 6710 relates to revaluation of capital assets or revaluation of self-generator asset or goodwill. If the gain does not relate to revaluation of self-generator assets, it cannot be attributed to any assets. If gain relates only to specific asset that has been received, no portion can be attributed. This was the 2 exceptions that I was now mentioning. Compliance I was mentioning, you would be required to submit a form 27. It was 5C. Again, I was mentioning that valuation process would be required to be done by a registered valuer, which seems to be one critical inclusion in a new provision. Plus on that excess value, revalued value, you would not be eligible to get depreciation. Only point is that excess value can be taken as cost while selling that asset. Yes. So 3 era as far as these 2 sections are concerned, 45.4 as well as 9B, till assessment year 2021, assessment year 21-22 till assessment year 26-27, then tax year 26-27 onwards. More or less the second era, all those things are being recopied to this 3rd era also. All these things I have already mentioned. Due to paucity of time, I am running through. I am definitely, as I would be sharing this copy, you may go through. Yes. Now the question is how to classify these assets to be short-term or long-term. At the time of transfer, if it is a short-term capital asset, if it forms part of block of asset we know always it would be treated to be as what? short-term capital gain alone. Then interestingly, if you see, say the existing section 54 EC, isn't it? 54 EC, existing section, not a part of this point I am mentioning. Extra point I am trying to mention in between. 54 EC, we know if we are having any profit on sale of, or if you are having any long-term gain, or if you are having sale transfer of long-term capital asset, that amount can be deposited in various bonds. 54 EC, National Highway Authority of India bond, RECL bond, you can do within a year, you can deposit up to 50 lakh rupees. Now it is been written as on the transfer of, or if you are having, yes, transfer of long-term capital asset, you can invest in 54 EC. Now instead of the term long-term capital asset, it has been done as long-term capital gain. Like long-term capital asset long-term gain ആക്കി മാറ്റി മൊത്തത്തിൽ നോക്കുമ്പോൾ നമുക്ക് യാതൊരു പ്രശ്നമില്ല കാരണം ലോങ്-ടേം ക്യാപിറ്റൽ അസറ്റ് വിൽക്കുമ്പോഴാണ് എന്ത് വരിക long-term gain വരിക ഷോർട്ട്-ടേം ക്യാപിറ്റൽ അസറ്റ് വിൽക്കുമ്പോഴാണ് എന്ത് വരിക ഷോർട്ട്-ടേം ഗെയിൻ വരിക ബട്ട് ദ കേസ് ഈസ് സേ അണ്ടർ സ്ലം സെയിലിൽ അസറ്റ് 36 മാസത്തിനേക്കാൾ കൂടുതൽ കയ്യിലുണ്ടെങ്കിൽ ഓട്ടോമാറ്റിക്കായിട്ട് എന്താണത് ലോങ്-ടേം ആണ് 36 മാസത്തിനേക്കാൾ താഴെയാണെങ്കിൽ എന്താണ് ഷോർട്ട്-ടേം ആണ് പക്ഷേ ആ സ്ലം സെയിൽ ചെയ്യുമ്പോൾ കിട്ടുന്ന ഗെയിനിന് എന്തായിട്ട് കണക്കാക്കുള്ളൂ ഷോർട്ട്-ടേം ആയിട്ട് കണക്കാക്കുള്ളൂ അപ്പോൾ അവിടെ ലോങ്-ടേം ക്യാപിറ്റൽ അസറ്റ് വിറ്റ് കഴിഞ്ഞാൽ 54 ECയിൽ ഇൻവെസ്റ്റ് ചെയ്യാം എന്നുള്ളതിൽ നിന്ന് ലോങ്-ടേം ഗെയിൻ ആക്കി മാറ്റിയാൽ സ്ലം സെയിൽ ചെയ്യുന്ന അസറ്റ്സ് ലോങ്-ടേം ആണെങ്കിലും എന്തിൻ്റെ എലിജിബിലിറ്റി കിട്ടില്ല 54 ECയിൽ എന്ത് കിട്ടില്ല എലിജിബിലിറ്റി കിട്ടില്ല അപ്പം അങ്ങനെ ഈ വാക്കുകളുടെ ജഗ്ലറി കൊണ്ട് ഒരുപാട് എന്ത് വരുന്നുണ്ട് മാറ്റങ്ങൾ വരുന്നുണ്ട് രാവിലെ ഭാനുമൂർത്തി സർ വാസ് ആൾസോ മെൻഷനിങ് all those provisos, all those additional provisos have been given the mark of what? Subsections. Section, subsection, provisos, additional provisos, explanation, special additional explanation. This sort of chronology was there. One would override what? Another this thing. But now if everyone have been given with the same category, there lies the confusion between how to interpret that subsection with this subsection. Then again, it is not the literal meaning notwithstanding anything equivalent to what? Irrespective. Notwithstanding simply means if two provisions are there, one with notwithstanding, if only there are some contra provisions between this and this thing, what would prevail? The section having notwithstanding would prevail. But if you use or if you refit the same notwithstanding with irrespective, then the next section is automatically losing the entirety, says law pundits, not chartered accountants. Supreme Court lawyers says there is enormous difference between the term notwithstanding with that of this thing. Already ഒരു വെടി പൊട്ടിക്കഴിഞ്ഞു ചാർജിങ് സെക്ഷൻ നമ്പർ 4-നകത്ത് നോർമൽ ടാക്സ് കളക്ട് ചെയ്യാനുള്ള അധികാരം മാത്രമേ ഉള്ളൂ അഡീഷണൽ ടാക്സിനുള്ള അധികാരം ഇല്ല എന്ന് വേണ്ട എന്ത് വന്നു കഴിഞ്ഞു ഒരു പോയിന്റ് ഓഫ് സംഗതി എന്ത് ചെയ്ത് കഴിഞ്ഞു എമേർജ് ചെയ്ത് കഴിഞ്ഞു ഇറ്റ് ഈസ് ഡയറക്ട്ലി ഹിറ്റിംഗ് സെക്ഷൻ നമ്പർ 4 ചാർജിങ് സെക്ഷൻ എന്താ പറയുക മർമ്മ ഓഫ് ദ എൻറ്റയർ ഇൻകം ടാക്സ് ആക്ട്. സോ ഇൻ ദിസ് കോണ്ടെക്സ്റ്റ് this many what variances are there comparing the existing with that of new proposed or this new Income Tax Act 61. So whatever it is, here it is clear what is short term, what is what long term or what quite clear. So at the time of the introductory period of this new bill 2025, some senior chartered accountants were mentioning the existing Income Tax 1961 is drafted in British English and the new Income Tax Act is in Indian English. I don't know whether there is any difference between Britain English and Indian English, but I do understand there is difference in Thiruvananthapuram Malayalam with what? Palakkad Malayalam with that. Kozhikode or Malappuram Malayalam with that, Kasaragode Malayalam. Kasaragode പോയ മലയാളം പറയാണെന്ന് നമുക്ക് എന്ത് ചെയ്യാൻ പറ്റില്ല പറയാൻ പറ്റില്ല. In that way, while reconstructing it from British English to Indian English, we have to wait and see. The time have to tell us whether it would simplify or would complexify the law. Because in 2021 Finance Act, I do remember, I was closely watching that budget on that day, wherein Madam Finance Minister Nirmala Sitharaman was mentioning, now the people have to approach a chartered accountant, a tax consultant in order to know about various deductions, exemptions and also it's quite difficult for them to do what? Income tax return filing. In order to make them easily file the return on their own, I am going to introduce a new section under section 115 BAC, she was mentioning. And interestingly, അതുവരെ ഒറ്റയ്ക്ക് ചെയ്ത ആൾക്കാർ പോലും നമ്മുടെ അടുത്ത് വന്നിട്ടാണ് എന്ത് ചെയ്യാൻ തുടങ്ങുന്നു, റിട്ടേൺ ഫയൽ ചെയ്യാൻ തുടങ്ങുന്നു. അതെന്താ രസം വെച്ചാൽ നമുക്ക് മനസ്സിലായി അവർക്ക് തോന്നുന്നതുകൊണ്ടാണ്. ഞാനൊരു തമാശ രീതിയിൽ മാത്രം പറയുന്നതാണ്. ഇതിനെപ്പറ്റി ഒന്നും മറ്റുള്ളവർക്ക് മനസ്സിലാവാനും പാടില്ല, നമുക്ക് മനസ്സിലായിട്ടില്ല എന്നുള്ള കാര്യം അവർക്ക് മനസ്സിലാവാനും പാടില്ല. എങ്കിൽ നമുക്ക് കുറച്ച് കാലം കൂടെ പോകാമെന്ന് പറയുന്നത് പോലെ whatever things that has been done in order to simplify have proven to be what? Complexing the situations only. In that way, I do fear whether all those are notwithstanding has converted to irrespective. Here under section 6710 also, the erstwhile notwithstanding has been replaced with what? Irrespective. All those provisions, explanations has been removed and has been put in what? Subsections. So interplay between sections, again I do feel what? Fishy. Again, lot of, these are all not challenges. As we within this campus, definitely these are all opportunities only. In that case, it is not going to simplify the law. Definitely yes, it is going to complicate the existing situation, I do personally feel. In that context, short term, long term differences are there. Then the entirety till now that we were mentioning, era 1 up to 2021, 21-22 to assessment year 26-27, and third era, tax year 26-27, we were mentioning. Now, to some case studies, just for the sake of understanding, some case studies. Shall we, sirs, madams? Yes. Shall we? Yes. Some case studies. Liability, capital A, capital B, capital C, 30, 10, 10, 10 each. Land S, land T, land U, again 10, 10, 10 each, 30. Now comes the revaluation S and T, 70 lakhs, U2, 50 lakhs. Partner A wishes to exit. Land U they have taken, 11 lakh rupees also has been settled for that retiring partner, partner A. So now S and T 70 lakhs, U 50 lakhs. Now, so all those three lands has been revalued. S and T to 70-70 each and U for 50, and A is taking out land U along with 11. So here for land U we know section 8 would be applicable, as well as section 6710 also would be what? Applicable. Plus for that money transferred, it would not be applicable under section 8. The implication would be only on section number 6110. And the amount paid by the partnership firm I was mentioning, that benefit you can absorb, accrete towards the continuing asset. We were mentioning rule number 50. So all these two sections along with rule number 50 would be elucidated through this first case study. So now if you see, the land U has been revalued at 50. That 50 minus the cost which was appeared in balance sheet was 10. Now after 23rd July, there is no concept of what? Indexation at all. So without indexation 10, you are deducting. 40 would be what? Long-term capital gain. 40 lakh multiplied by 12.5%. 5 lakh would be the tax payable. That 5 lakh is not the liability of partner who is quitting, rather it would be the liability of partnership firm. Point number 1. Point number 2. Now the partner is being settled this land along with what? Some part of monetary consideration also. So while that transfer of that share, the taxation under 69, oh it is 67, it is not 69, it is 67. 6710 would happen. So what it is? Here you may see that amount of difference is 40 lakhs. From that 40 lakhs, firm has paid how much? 5 lakh rupees. 35 lakh rupees is existing. That 35 lakh rupees you have to divide it among all the three partners, A, B and C. So while calculating the capital balance of retiring partner, this profit percentage also has to be what? Added along with the remaining partners. So in that transaction, 40 lakh was the profit. From that 40 lakh we know 5 lakh has been paid as what? Tax. So that 35 lakh you have to divide it among three partners including retiring partners. Now, he has been given with cash amounting to 11 lakh, land valued at 50 lakh, minus his capital balance was 10 plus 11.67 is his proportion. So his capital would be 21.67. If you reduce 21.67 plus this cash and land, 39.33 lakhs again would be the liability of partnership firm to make the tax payment. So under that a single transaction, there are two deemed fictions, and under both situations the partnership firm would be liable to pay the taxes. Now if you see, I was mentioning that amount 40 lakhs, on that amount only partnership firm is paying tax. That 40 lakhs have to be allocated to the remaining two assets. By virtue, both assets were what? Revalued. Both were revalued as same figure. Incremental figures were same. So same proportion. 40 divided by 2, 20, 20 you would be dividing the value towards the existing or what? Continuing assets. So this is the interplay between all these three things that we were mentioning till now. Section 8, Section 67(10), along with rule number 50. This is what case study number 1 is. Then that partner who has taken land U, isn't it? That partner who has taken land U, say suppose after 2 years he is selling that land, he can take this 50 lakh rupees as what? His cost of acquisition. First of all, at the time of indexation it was available. Then the day from where the firm was holding that an asset, from that date he would be eligible to get what? Indexation benefit. So that 50 lakh for which the partnership firm has paid the tax, the partner can take that an amount as cost of acquisition while partner is selling that asset. ഈ ഒരു സെഷൻ പലവിടെയും പോകുന്ന സമയത്ത് ഈ പറയുന്ന സംഗതി കോംപ്ലക്സ് ആണെന്ന് പറയുന്ന സമയത്ത് പലരും വിചാരിക്കുന്നതായിട്ടുണ്ടാവുന്ന ഒരു കാര്യം, നമ്മുടെ അവിടെ ഉണ്ടാകുന്ന പാർട്ട്ണർഷിപ്പ് ഫേംസ് എന്ത് ഡിസോൾവ് ചെയ്യുകയാണെങ്കിലും റീകോൺസ്റ്റിറ്റ്യൂട്ട് ചെയ്യുകയാണെങ്കിലും ഒരിക്കലും നമ്മൾ എന്ത് ചെയ്യാറില്ല? റീവാലുവേഷൻ ചെയ്യാറില്ല. ഡയറക്റ്റായിട്ട് എന്തേ ചെയ്യാറുള്ളൂ? ബുക്ക് വാല്യൂയിലാണ് ചെയ്യാറ്. ഈ ഒരു ഇഷ്യൂ വരില്ലല്ലോ എന്നുള്ളതാണ് ചോദ്യം എന്നുണ്ടെങ്കിൽ ആ ഒരു ചോദ്യം കാലങ്ങളോളം എന്ത് ചെയ്യണമെന്നില്ല, നിൽക്കണമെന്നില്ല. ഈ കോംപ്ലക്സ് ആയിട്ടുണ്ടാകുന്ന പ്രൊവിഷനിലേക്ക് ഓട്ടോമാറ്റിക്കായിട്ട് ആര് വരാൻ തുടങ്ങിയിട്ടുണ്ട്? RMS സ്ട്രാറ്റജി ഓഫ് ഇൻകം ടാക്സ് ഡിപ്പാർട്ട്മെൻറ്റ് എന്ത് ചെയ്യുന്നുണ്ട്? വരുന്നുണ്ട്. നമ്മൾ AIയിലേക്ക് മാറിയാലും ഇല്ലെങ്കിലും ഇൻകം ടാക്സ് ഡിപ്പാർട്ട്മെൻറ്റ് ഇതിലേക്ക് മാറുന്നുണ്ട്, AIയിലേക്ക് മാറുന്നുണ്ട്. എന്ത് രസകരമായ കാര്യം എന്താണെന്ന് വെച്ച് കഴിഞ്ഞാൽ 31/3/2026 മുമ്പുണ്ടാകുന്ന നോട്ടീസിൽ തന്നെ പുതിയ ഇൻകം ടാക്സിൻ്റെ സെക്ഷൻസ് വെച്ചിട്ട് എന്ത് വരാൻ തുടങ്ങിയിട്ടുണ്ട്? അത്രയ്ക്കും അഡ്വാൻസ്ഡാണ് ആര്? ഇൻകം ടാക്സ് ഡിപ്പാർട്ട്മെൻറ്റ് ഇൻ എ ലൈറ്റർ വെയിൽ. സോ ഇൻ ദാറ്റ് കോണ്ടെക്സ്റ്റ് ഇത് നമുക്ക് അപ്ലിക്കബിൾ അല്ല എന്ന് പറയുന്നതിനോട് എനിക്ക് തീർച്ചയായും താല്പര്യമില്ല എന്നുള്ളത് പറഞ്ഞു എന്ന് മാത്രമേ ഉള്ളൂ. ഇൻ കേസ് ഓഫ് കേസ് സ്റ്റഡി നമ്പർ 1. Now after capturing the point, on to case study number 2. Case study number 2, talking about 3 capital again 10, 10, 10, land again 10, 10, 10. Firm sells land U for 50 lakhs. So land has not been given to whom? The partners. It sells the land to a third party for 50 lakhs. So normal capital gain would be applicable. Then the firm revalues S&T to 70 lakhs. Partner exists taking 61 lakhs. So here partner is being given with what only? Money only. So thereby no capital assets, no stock in trade was being transferred. So definitely yes, first section, section 8 would not be applicable. The applicability would be only on section 67(10). There also the same this thing we have to do with. First one I was mentioning, as the asset was not being transferred to retiring partner, the normal capital gain transaction, 50 minus 10, 40 you can take, 5 lakh you pay as tax. That also additional amount you can take it into this capital amount. 61 was the cash settled minus 21.67. Same figures on the previous case study. I am not devoting time much. So 61 minus 21.67, 39.33 would be the tax there. So this is what case study number 2 is. If it is not been given to the partner, it is been given to the third party. So you can cut short, or you need not follow what section? Section 8 at least, or only what would be applicable? 6710 would be applicable in this case. Case study number 3, capital 100, 100, 100 each. Land 2-year-old 30, patent 1-year-old 45, cash 225, total 300. Firm revalues land S and patent to 60 lakh. Self-generated goodwill. Goodwill was not there in the balance sheet. New goodwill 30 lakhs. Partner exit 75 lakh cash and land S. The partner has what? Taken at the time of retirement. So definitely yes, cash is there, capital asset is there. By virtue of capital asset, both section 8 as well as 6710 would be what? Applicable. In that context, 45 minus 30. 30 was nothing but the cost appearing in the balance sheet. 15 lakh, on which 1.88 lakhs would be the tax. Here, that amount you have to distribute to the partners. The total cash taken 75 plus value of land 45 minus capital balance including 4.37, 15.63. There you can see. But here what you have to do is, the patent 45 was there. That 45 was converted to 60. Self-generated goodwill was 30 lakhs. So here you have to see the disproportionate between the assets which are remaining. Even though the patent value would become 60, goodwill value would become 30, it is not 60-30 ratio that you are going to distribute. The increment for patent is 15, increment for goodwill is 13. So 15-30 proportion you would be required to apportion that rule 50 accretion I was trying to mention. So in that context, so that amount, excess amount, this 15-30 ratio, which is 1:2 ratio, you are dividing 1:2, 5 for patent as well as 10 for goodwill. So even though the goodwill is having self-generated status 30, we know the cost of acquisition of self-generated goodwill is what? Nil. Though this goodwill, if it is been sold 4 years later, say for 50 lakh rupees, this 10 lakh rupees by virtue of this rule number 15 can be taken as cost of acquisition. That can be reduced while computing capital gain at the time of sale of goodwill, even though the value of self-generated goodwill is what? Nil. But on that value, you cannot claim depreciation. That's the only defect. But it can be taken to be as cost while disposing of that an asset. No depreciation. Depreciation on patent 45, not on 60. If patent is sold for 25, this 5 also can be taken. If this goodwill is sold later, this 10 lakh can be taken as what? Cost of acquisition. So all these points I was mentioning earlier also. Now the same thing that I have already mentioned, the validity of this circular number 14/2021, under the new income tax section 8 specifically mentioned, would be issuing what? The removal of difficulty this thing. After issuing within 30 days, that would be presented before Parliament. All those things are there. So without which, whether this circular 14 is applicable on this thing or not is the question. If you ask ChatGPT say yes. Plain student and A and Alipo Choshel and the Vareno. Yes, and Alkalam Vareno. I S at the Tolam Vishusika on the Sanam can the Amatalia, Mansalaka night Atilia. Anyhow, this lacuna is there. Yes. So this section 78, existing section 78, new section, this 119. We know at the time of retirement of a partnership, retirement of a partner from a partnership, if that firm is having a loss to get carry forward, that loss up to the proportion of the retired partner is restricted to get what? Carry forward. Language provision is existing act. Say for example, A and B were, like A, B, C were equal partners, and suppose that firm was having 10 lakh rupees as what? Carry forward loss. If Mr. C gets what? Retired from the firm, his share of losses, 3.33, the firm cannot what? Carry forward. The same provision is there in New Act also. ഇതിലെന്താ രസം എന്ന് വെച്ച് കഴിഞ്ഞാൽ പുതിയ ആക്ട് വായിക്കുമ്പോഴാണ് മനസ്സിലാവുക പഴയ ആക്ടിൽ അതെല്ലാം അല്ലേ ആ ഒരു ഫീൽ എനിക്ക് മാത്രമല്ല എല്ലാവർക്കും എന്ത് ചെയ്യുന്നുണ്ട് ഉണ്ടാവുന്നുണ്ട്. പലരും എന്നോടത് ചോദിക്കാറുണ്ട്. ലൈറ്റർ വേണ്ടി ഒരു തമാശ രീതിയിൽ ഞാനത് പറയാം. പലരും ചോദിക്കാറുണ്ട് പുതിയ ആക്ടിൽ പഴയ ആക്ടിലുള്ളത് തന്നെയല്ലേ പറയുന്നത്, പക്ഷേ പുതിയ ആക്ട് എന്ത് ചെയ്യണമെന്നുണ്ടോ, പഠിക്കണം എന്നുണ്ടോ, ഇത്രയും സെഷൻസിൻ്റെ ഒക്കെ ആവശ്യമുണ്ടോ എന്നൊരു ചോദ്യം വരികയാണെന്നുണ്ടെങ്കിൽ ഞാൻ ചെറിയൊരു സംഭവ കഥ പോലെ എന്ത് ചെയ്യാം, ഒരു 2 മിനിറ്റ് അതിലേക്ക് മാറ്റി വയ്ക്കാം. ഒരു 10, 25, 30 കൊല്ലമൊക്കെ മുമ്പ് നോക്കിയാൽ ഇന്നത്തെ അത്രയും മലയാളം ചാനൽസ് ഒന്നും ഇല്ലാത്തൊരു സമയമാണ്. ഇന്നാണ് ഓരോന്നിനും പാട്ടിനൊരു ചാനൽ, വാർത്തയ്ക്കൊരു ചാനൽ, കോമഡിക്കൊരു ചാനൽ, സിനിമയ്ക്കൊരു ചാനൽ എന്ന് പറയുന്ന ചാനലുകൾ. പണ്ട് നോക്കിക്കഴിഞ്ഞാൽ എല്ലാം കൂടി ചേർന്ന് ഒറ്റ ചാനലേ ഉള്ളൂ. ന്യൂസും അതിലാണ്, സിനിമയും അതിലാണ്, പാട്ടും അതിലാണ്. അത് മലയാളത്തിൽ നോക്കിക്കഴിഞ്ഞാൽ ആ സമയത്തൊക്കെ എൻ്റെയൊക്കെ ചെറുപ്പത്തിൽ ആകെ ഒരു മലയാളം ചാനലേ ഉള്ളൂ, ദൂരദർശൻ മലയാളം. അത് ഞായറാഴ്ച ദിവസം വൈകുന്നേരം മാത്രമേ എന്തുള്ളൂ ഒരു മലയാളം സിനിമ, വൈകിട്ട് 7:30 ശേഷം മാത്രമേ എന്തുള്ളൂ സീരിയൽ പോലെ ഉണ്ടാകുന്നൊരു കോൺടെക്സ്റ്റ് ഉള്ളൂ. ഇതും ഇൻകം ടാക്സ് ആക്ട് 2025 തമ്മിൽ ബന്ധമുണ്ടോ എന്ന് ചോദിക്കരുത്, തീർച്ചയായിട്ടും ബന്ധമുണ്ടാവും. 3 മിനിറ്റ് ഒന്ന് വെയിറ്റ് ചെയ്യണം പ്ലീസ്. ഇങ്ങനെ വരുന്നതായിട്ടുണ്ടാവുന്ന TV ചാനൽസിൻ്റെ ഇടയിൽ ആദ്യമായിട്ട് വരുന്നൊരു പ്രൈവറ്റ് ചാനൽ ഏഷ്യാനെറ്റ് ചാനലാണ്. സെക്കൻഡ് ചാനൽ ഇൻ മലയാളം, ഫസ്റ്റ് പ്രൈവറ്റ് ചാനൽ ഏഷ്യാനെറ്റാണ്. ഈ ദൂരദർശൻ മലയാളത്തിൻ്റെ പ്രത്യേകത എന്താണെന്ന് വെച്ച് കഴിഞ്ഞാൽ അവർക്ക് അന്നും ഇന്നും ഒരേപോലെ ഉണ്ടാകുന്ന പരിപാടിയാണ്. അവർക്ക് ഈ പറഞ്ഞ പോലെ അഗ്രസീവ്നെസ് ഏതിലില്ല, ഗവൺമെൻറ് പ്രോഗ്രാം ആയതുകൊണ്ട് അതിനകത്ത് വരുന്നില്ല. വെള്ളിയാഴ്ച രാത്രി 10:30 കഥകളി, കാലങ്ങളായിട്ട് കഥകളി, 9 മണിക്ക് ചിത്രഹാർ, 9 മണിക്ക് തന്നെയാണ് ചിത്രഹാർ എന്നുള്ള പെർസ്പെക്റ്റീവിലേക്ക് അത് പോകും. അപ്പോൾ അവിടെ ഒരു ഗവൺമെൻറ്റും ഈ പ്രൈവറ്റ് ആയതുകൊണ്ട് അവിടെയും എന്ത് വരുന്നില്ല, ഇഷ്യൂസ് വരുന്നില്ല. എന്നാൽ മൂന്നാമതൊരു ചാനൽ വന്നു ഒരു 3-4 കൊല്ലം കൊണ്ട് കഴിഞ്ഞപ്പോൾ രണ്ടാമത്തെ പ്രൈവറ്റ് ചാനലായിട്ടാവുന്ന സൂര്യ TV എന്ത് ചെയ്തു, ഈ ഷോയിലേക്ക് എന്താ വേണം എൻട്രി. അപ്പോൾ ഒബ്വിയസ്ലി ഏഷ്യാനെറ്റും സൂര്യൻ തമ്മിൽ എന്തുണ്ടാവുന്നു, ഒരു മത്സരം ഉണ്ടാവും. കാരണം ഏറ്റവും കൂടുതൽ പേര് കാണുന്ന ചാനലിലാണ് ഏറ്റവും കൂടുതൽ വ്യൂവർഷിപ്പ് ഉണ്ടാവുക. ആ വ്യൂവർഷിപ്പിനനുസരിച്ചിട്ടാണ് ഈ അഡ്വർടൈസ്മെൻറ്റിന് എന്തുണ്ടാവുന്നു, വാല്യൂ ഉണ്ടാവുന്നു, ടാരിഫ്സ് ഫിക്സ് ചെയ്യും. അന്ന് ഏറ്റവും കൂടുതൽ പേര് കാണുന്നുണ്ടായിരുന്ന പരിപാടി 7 മണി വാർത്തയായിരുന്നു, വൈകിട്ട് 7 മണിക്ക് ഉണ്ടാവുന്നതായ വാർത്ത. അപ്പോൾ 3 ചാനലിലും 7 മണിക്കായിരുന്നു എന്ത് വാർത്ത ഉണ്ടായിരുന്നു. അപ്പോൾ ആ ഒരു കോണ്ടെക്സ്റ്റിൽ ആ മലയാളം വാർത്ത കാണാനിരിക്കുന്ന ആൾക്കാർ തീർച്ചയായിട്ടും 3 ചാനലുകളിലേക്ക് എന്താവുന്നു, സ്പ്ലിറ്റ് ആവുന്നു. അപ്പോൾ സൂര്യ TV എന്ത് ചെയ്തെന്ന് വെച്ച് കഴിഞ്ഞാൽ 7 മണിയുടെ വാർത്തയെ പിടിച്ചിട്ട് 6 മണിക്കാക്കി, 7 മണിയുടെ വാർത്ത 6 മണിക്കാക്കി മാറ്റി. ഒരു ടാഗ് ലൈൻ കൊടുത്തു, നേരറിയാൻ നേരത്തെ അറിയാൻ. ഇതാണ് ഒരു ടാഗ് ലൈൻ. അപ്പോൾ ഒന്നില്ലെങ്കിൽ ഏഷ്യാനെറ്റിനും 6 മണിക്ക് ആക്കണം, അല്ലെങ്കിൽ 5:30 ആക്കണം. ഇന്നത്തെ പോലെ മൊബൈൽ ഫോണിലൊന്നും യൂട്യൂബോ ആപ്പൊന്നും വരുന്ന സമയമല്ല. വീട്ടിൽ TV-യിൽ വന്നാൽ എന്ത് കാണാൻ പറ്റുള്ളൂ, TV കാണാൻ പറ്റുള്ളൂ. ഇപ്പോൾ ഏഷ്യാനെറ്റ് എന്ത് ചെയ്തില്ല, 6 മണിക്ക് ആക്കിയില്ല, എത്ര മണിക്ക് തന്നെ നിർത്തി, 7 മണിക്ക് തന്നെ നിർത്തി. അപ്പോൾ സൂര്യ TV 7-ന്റെ 6 ആക്കി കൊടുത്തത് നേരത്തെ അറിയാണെന്നായിരുന്നു. ഏഷ്യാനെറ്റ് 7 മണിക്ക് തന്നെ കണ്ടിന്യൂ ചെയ്ത് അവരോട്ട് ടാഗ് കൊടുത്തു, നേരത്തെ അറിഞ്ഞത് നേരാണോ എന്നറിയാൻ. നേരത്തെ അറിഞ്ഞത് നേരാണോ എന്നറിയാൻ നിങ്ങൾ എന്തുകൂടെ കാണണം, ഏഷ്യാനെറ്റ് കാണണമെന്ന് പറയുന്ന പോലെ ലൈറ്റർ വേണ്ടി ഞാൻ പറയുന്നു. ഇൻകം ടാക്സ് ആക്ട് 2025 വി ഹാവ് ടു സ്റ്റഡി ഫോർ ദ റീസൺ നമ്മൾ 1961 ആക്ട് പഠിച്ചത് എന്താണെന്ന് അറിയാൻ. ലൈറ്റർ വെയിൻ ഐ എം ടെല്ലിംഗ്. ഇൻ ദാറ്റ് കോണ്ടെക്സ്റ്റ് സം ഓഫ് ദോസ് ഹിഡൻ സെക്ഷൻസ് വിച്ച് വർ there, section 78(1) at the time of carry forward of losses due to this retirement, that retirement partners out of this thing you have to what? Not to be considered while carry forwarding the losses, but definitely yes, exceptions are there. If you are carry forwarding unabsorbed losses, if you are carry forwarding specified business losses, if you are carry forwarding family planning expenditures out of a losses, all those things you can carry forward, except this unabsorbed depreciation and all, on that proportion you are not allowed to what? Carry forward. The same section is there in New Act also. Dissolution and recontinuance. Then I was mentioning accelerated tax rate. At the time of dissolution, discontinuance, if a business or a profession is discontinued during a tax year, the income earned after first day of that year until discontinuance date shall be charged within that tax year as if the dissolution has not been what? Taken place. The due care that has to be taken is, suppose A and B are partners, B got demised, then it is automatically considered to be as what? A dissolved firm. അത് വലിയൊരു ഡെവലപ്മെൻറ്റ് എന്ത് ചെയ്യുന്നുണ്ട്, സംഗതിയിലേക്ക് ഇത് വരുന്നുണ്ട്. Even though on the same day or whatever it is, C, legal heir of B was being what? Admitted. By virtue, രണ്ടുപേരുണ്ടാവുന്നതിൽ ഒരാൾ മരിച്ചു കഴിഞ്ഞാൽ ഓട്ടോമാറ്റിക്കായിട്ട് അത് എന്തായതുപോലെയാണ്, ഡിസോൾവ് ആയതുപോലെയാണ്. രണ്ടിൽ കൂടുതൽ ആൾക്കാരുണ്ടെന്നുണ്ടെങ്കിൽ പാർട്ട്ണർഷിപ്പ് ഫേമിൽ കണ്ടിന്യൂ ചെയ്യുന്നൊരു കണ്ടീഷൻ ഉണ്ടെങ്കിൽ എന്താവും, കണ്ടിന്യൂ ആയി പോവും. അതില്ല എന്നുണ്ടെങ്കിൽ എന്താവുന്ന പോലെ, ഡിസോൾവ് ആവുന്ന പോലെ. രണ്ട് പാർട്ട്നേഴ്സ് അല്ലാന്നുണ്ടെങ്കിൽ പാർട്ട്ണർഷിപ്പ് ഡീഡിനകത്ത് ദാറ്റ് സ്റ്റിൽ ഇറ്റ് വുഡ് കണ്ടിന്യൂ എന്ന് പറയാന്നുണ്ടെങ്കിലും ദാറ്റ് വുഡ് നോട്ട് ട്രീറ്റ് ടു ബി ആസ് വാട്ട് എ കണ്ടിന്യൂഡ് ഫേം. വാട്ട് വുഡ് ഹാപ്പൻ ഓട്ടോമാറ്റിക്കലി? Dissolution would what happen. So at the time of those dissolutions, we would be required to get assessed same as if the dissolution was not being taken place. Continuous assessment would be there. Section 331, when a firm is dissolved or business is discontinued, assessing officer must compute the firm's total income as if no dissolution or discontinuance had been occurred. All statutory provisions, including those for levying penalties or other charges, remain fully applicable to such assessment also. It would be the joint and several liability of the partners, says section 330, at the time of dissolution of partnership. Within 15 days, any person discontinuing a business or profession must give a notice to such discontinuance to the assessing officer within 15 days of the discontinuance upon the dissolution of firm. Otherwise, all the consequences for non-compliance would follow. So after dissolution, definitely it's just as if we are giving cancellation of registration under GST and all, final return is submitted under GST and all, we are also bound to inform the income tax department also. The provision under section 320 equal to section 176 of the old act. So this was the second phase of discussion. First one actually we were discussing at the time of admission. Then we made our discussion towards reconstitution. Up to dissolution we were discussing. Even though there is no admission or retirement, even in case of change in profit sharing ratio, if some assets are being given or taken, then also what would be applicable? This 45(4) erstwhile, new 67(10) as well as this section new 8 would be applicable. So it is not confined to retirement, death or dissolution. Even change in profit sharing ratio, if there is any outflow of money, outflow of assets, these sections would be applicable. On a final note, now on to the third concept, conversion or succession of firm by a company. We know regularly they are having that an exercise of converting firm into what? Companies. But I do think after 2 years, 3 years afterwards, audit trial was been implemented. After that, audit trial has been made compulsory. Now companies are being converted back to what? Partnership firm, I do suppose. In Palakkad it is so, I don't know whether it is in Kozhikode or not. Because to comply with audit trial, it would be better to convert company to a partnership firm. So in that context also something are happening. Just as if under section 43BH was there. If you are making payment to a micro small, you are supposed to make the payment within 15 days or 30 days. That was introduced in order to support whom? Micro or small traders. But what has happened is, now the big peoples are reluctant to purchase from whom? Micro small. So now they are coming to us, sir, whether we can cancel MSME registration. Isn't it? So that's what the reality is. So in that context, at the time of converting what to what? This firm to a company, exemptions are being provided under the old act. The same thing continues in new provisions also. ഒരു നല്ല വാർത്തയുണ്ട്, ക്ലാസ് കഴിയുന്ന ഒരു കാര്യം പോകേണ്ട ആവശ്യമില്ല, കാരണം പുറത്ത് നല്ല മഴയാണ്. യെസ്. Now, transfer of asset is not regarded as a transfer if following conditions are met. Condition number 1, all assets and liabilities as on date of the conversion should be converted or to be transferred to successor company, point number 1. Then all partner should be made shareholder of the new company, condition number 2. Condition number 3, share only should be the consideration, no other monetary, nothing should be given for the shareholders at the time of conversion. Third one, the person who was in position of partner who was made to be shareholder in the new company, at least 50% of those persons should be there for the next 5 years. These 4 conditions are there. Subject to these 4 conditions, whatever assets that has been transferred from this partnership firm to the new company, no capital gain tax would be there. So that section 47(8) was there in old act. Now under 71ZD you can see the similar provision. Everything remains intact under the new act also. Trigger, if any conditions under 47(8) are violated after conversion, previously exempt profits or gains shall be deemed as income of successor company in the year of such violation. Shares transferred by partner or shareholder, shareholding drops below 50%. Any of those 4 conditions are breached. Previously exempted capital gain would become the deemed gain at the time of violation of those conditions. Taxed in the year the violation occurs, liability falls on the successor company. Normal income tax rates would be applicable on deemed income. So exemptions are there subject to conditions. Violation of conditions, consequences to get followed. Carry forward of loss also, you can carry forward whatever it is. Lock-in period already mentioned. Yes. Firm to LLP also exemption is there. Here actually we are trying to tell firm towards what? Corporate side. Yes. Now, illustrations. Before on to another critical area, maybe right from this assessment year 26-27, if you see, another change as far as partnership concerned would be section 194T. 194T. Definitely, as we know, only from this year 25-26 onwards, previous year I am telling, this newly inserted 194T is applicable. Then that 194T, speciality of that 194T is that being the last most section under 194 series. Overall Finance Act, 3-4 sections would be there. From A, it was up to T sections are there. Fortunately, after set, it would have been AA, AB, AC and all. For Kozhikode one registration bole, Palakkad one registration bole. In that context, now that has been beautifully contended, compressed under a single humble section, section 393. So again, if you see, simplification only happened. First of all, there were 45 sections under TDS. All those 45 sections except 2, 192 and 192A. 192 and 192A, simply, humbly, 392 section was there. All the remaining 43 sections from 193 to 196D, that was been clubbed under a single section 393. Again under 393, you may see 4 subsections or 4 tables are there. First table wherein the residents, if the deductees are residents, first table would be applicable. The deductees are non-resident, second table would be applicable. Third table, indifferent whether they are resident or not, third table would be applicable. So our section 194T, whether or not the partner is a resident or non-resident, what would be applicable? 194T would be applicable. So similar provision of 194T is in Income Tax Act 2025 as 393, subsection number 1, subsection number 3, table number 3 it is. Under those tables again, various serial numbers are there. Say for example, now for contract, we are telling section 194C. Now, after introduction, you have to tell section 194C instead. You have to tell section 393, subsection number 1, serial number 5, subserial number 2. That's 194C. In that way, whether that has simplified or not. Again, how, if we are complying with TDS provisions, if we are generating challan, if we are generating, if we are paying TDS amounts, first of all, if it was section 192, the challan code is 92. If it was interest, it was 94A. If it was professional charges, 94J was the code. Now all those codes has been, so there was a nexus between section and code. So 94D, if you see, it is nothing but 194D, Insurance Commission. If it is 194B, you can easily say it is lottery winning. In that way, you can easily correlate. But now every code has been renamed 1001, 1002, 1003, 1004. So no codes, actually there is a nexus. So in that meeting, I was suggesting them, suggestions they were asking from professional fraternity. So I was suggesting them, TDS forms should be just as if ITR1, ITR2, ITR3, it should be TDR1, TDR2, TDR3. ITR, income tax return 1, we can get it as if TDR is nothing but TDS returns. TDS return 1, TDS return 2. Festival 24Q, 26Q, now it is not there, it is 139, 138. Festival 26QB, QC, QD and all, now it is 141. In that way, there is no nexus between form numbers with that of what? All those things. So the time would tell whether all these things would make the compliance procedure easy or not, I wonder. In that context, 194T, what I was trying to tell you was, 194T, all those 194T sections are here in 393, subsection number 3 itself. Then most importantly, in under every sections, there were various exceptions. Exception in the sense, suppose you are paying interest to this person, 194A would not be applicable. Exceptions were there. Now all those exceptions has been clubbed under subsection number 4. Now if you want to check the TDS ability, I would call, of a transaction, then first you have to verify subsection number 4. If not, it is been there in subsection number 4, then only you have to classify them between 1, 2 or 3. Erstwhile in central excise, now in GST, classification rules are there. Now definitely as under TDS, the classification rules is yet to what? Notified by the department. So in that context, 194T is another genuine hardship as far as partnerships were concerned. I personally know lot of persons who were partners in a partnership firm got retired from the firm only by brightening this section 194T. Because they were not at all under the tax brackets. So now they are afraid whether after deducting the TDS, they would be also coming under the lens of what? Income tax department. So that section 194T at the time of payment or at the time of accrual, whichever is earlier, you would be required to what? Deduct the TDS. What we have done is, from April 2025, definitely as a partner may have been what? Drawing the amount without deducting what? TDS. So we put all those amounts to be as what? Capital account drawings. Isn't it? Then on 31.3, we would be having a book profit. On the same, we would be calculating 40B because we know how much there would be the profit. Because the sales figure is with us. By April 20th, the total sale figure of 25-26, we know 3B1 we check with. On that basis, we are going to declare what? The profit. So for that reason only, I do think for the month of March alone, we are getting time up to April 30th. So within April 30th, after getting April 20th, this thing you can decide this thing and you are telling at that point only you are crediting to what? Capital account. Only on quarter 4 you are going to give the remuneration and you are going to file the returns on quarter number 4. Most interestingly, on April 28th only we came to know so many partnership firms are not having TAN also. They were not having TAN also. In the meanwhile, we have to check ourselves, our partnership firm, chartered accountancy firm, whether it is having TAN, whether we are deducting TDS on our this thing also, because we are more concerned about assessing, so that we need not check on our also. In that context, 194T was there. Likewise, all those Rakona sections which were there continue to exist in new sections also, as far as this partnership firm is also concerned. Basic illustrations I am not touching upon. Yes. Now the fundamental question. 6710 says, at the time of receipt by specified person from specified entity, specified person by specified entity, this section would be applicable. So in that context, say for example, on 31/3/2026, suppose the partner gets retired, but that amount is not being settled to the partner, that has been shown as what? Creditor, payable to the partner, and that is being paid, say in the year 26-27. So the question is, whether the capital gain would be applicable for the financial year 25-26 or during the financial year 26-27 is the question. In that context, definitely yes. Two views are there. First view, once the partner's amount becomes payable, that is deemed to have been what? Received by that partner. So that 25-26 itself is the year wherein the chargeability has to be inserted. Option number or view number 2, only at the year of actual receipt from the partnership firm, then only the partnership firm would be liable to make the tax payment. So two views are there on a simple this thing. So view number 1, as I was mentioning, once a partner retires and entitlement is determined as creditor, charge under section 6710 is triggered. As per Indian Partnership Act, immediately upon retirement, a debt is perfected in favor of retiring partners, Pamuru Vishnu Vinod Reddy versus Chillukuru Chandrasekhar Reddy and others. Perfection of a debt in lieu of partnership interest is constructive receipt, deemed receipt it is. Word receipt extends to the credit to the account of concerned person. It need not be actually received. Partner may enjoy interest on such debt. Partner may monetize such debt. So in all these contexts, even though the partner is not been actually what? Settled, only that has been apportioned to be as a payable, then also in that year itself, partnership firm would be liable to make the tax payment. View number 1. View number 2, word refers to the actual receipt by partner from the firm. Acknowledgement of debt in favor of retiring is insufficient. Clear reference is received under section 6710, which is different than receivable. Receipt should be there, it is not receivable. So in that context, Supreme Court in Moon Mill's case drew clear distinction between received and receivable and upheld the taxation in year of actual receipt in the context of balancing charge. So that decision in standard triumph is distinguishable on facts, as in that case, debtor was holding the money. Such debt to bank is not reflective of receipt of the firm. So in view number 2, just by making him as a creditor would not suffice the chargeability. That has to be actually received by the partner, then only the triggering section would be active, says view number 2. Similarly, issue number 2, this is very common to us. To avoid all these intricacies of all these sections, definitely yes, what we are trying to do is, all the partners would be settled at book value itself. So while settling it at book value, definitely yes, there is no applicability of 6710 or section 8 at par. So no other value addition, so I am not going to this illustration in deep. I have already shared to the branch. Definitely yes, I do think they would be sharing to you. Yes, another question. I was signaling to that question during my primary discussion itself. At the time of demise of a partner, suppose authorizer or representative is receiving any amount, then whether this section is applicable or not. Because the section specifies specified person, specified entity, isn't it? Specified person is nothing but partner, member of a partnership firm. Where an authorizer or representative is not a partner, is not a member of a firm. So that doesn't constitute to be categorized as a specified person. Thereby any amount received by authorizer or representative, this section would not be applicable, says one view. I am not telling that view is correct, this view is correct, I am not. I am just trying to give you various sort of issues and intricacies existing in these provisions. All those intricacies which were there in existing provision are there in new provision also, as if Naranatha case, all those things, which all those controversies, all those intricacies in existing sections are there in new section also, says issue number 3. That's due to paucity of time, actually I am not indulging on to each and every issue in deep. Illustration you can go through. Third one, gist I am telling. Issue number 4, I was already mentioned. One partnership firm got converted to a company. Before conversion, some partner got retired and his amount was not being paid by the firm. And later, it was being settled by company to the partner. Now again the question arises, it is not the specified entity who has given what? That amount. So after corporatization, if the company pays to the partner, whether this section would be applicable is the question. Again, there is having two views. For the fundamental reason, it is not a specified entity, what would not be applicable. This thing would not be applicable, but if you not consider the same, that has to be paid as what? Capital gain tax. Fourth issue. Fifth issue, if partner is having negative capital, we were deducting that an amount. Say 1 lakh rupees was the capital there, 10 lakh rupees they have given, 10 lakh minus 1 lakh, 9 lakh is the taxable amount. Instead of 1 lakh positive, suppose it is 2 lakh negative. Then 10 minus 2. 12 lakh rupees would be what? The capital gain that is going to get taxed in the firm's hand. So in that context, definitely yes, this negative also has to be taken into account, says issue number 5. All those partnership accounts, everything we were trying to take with. Then any debit balance of partnership firm, balance of partner existing in that balance sheet, and that debit balance of partners is getting waived off by the firm. Suppose A capital is in the asset side. So what has to be done? That has to be treated in par with negative capital. If it is been waived by the company, that also has to be treated as what? Consideration paid by partnership firm to that retiring partner, says issue number 6. The same was there in Mahindra and Mahindra case, Supreme Court. Yes. Now what comes is, suppose there is a partnership firm, A, B, C is partners, are partners, and they are having some assets. They are not changing the profit sharing ratio, no retirement, no admission, nothing, but assets are being withdrawn by the partners at their profit sharing ratio. Are you getting the concept, says? The final one I am trying to tell you. So till now we were telling section 6710 or 9B or 8 would be applicable only if there is reconstitution, dissolution, admission, or even change in profit sharing ratio, even without admission or retirement. Here the context is, this is definitely yes, a plan for what? Tax planning. In that context, there is a partnership, there is no change in profit sharing ratio. In the same profit sharing ratio, existing assets are being taken off by the partners. So in that situation, if you go by, XYZ partnership firm has 3 partners having equal profit sharing ratio, and the firm are having 2 assets. One is business, the fair market value is 6,000, the book value is 2,000, and land having book value of 1,000 and fair market value of 3,000, and they have decided to withdraw the assets in the firm in the existing profit sharing ratio without altering what? The PSR. The firm, accordingly, land B having value, fair market value 3,000 is distributed to the X against entitlement of 3,000. Firm debits book value of land B against X capital account. So in absence of any dissolution, reconstitution, section 6710 or section 8 may not trigger in the hands of partnership firm. So without altering all those things, if you are trying to manage all those things, you can get escaped from this section, says one view. So various case laws also I have quoted, CAT versus Kamala Devi and Ratan Narayan Patel versus CAT, which reaffirms the same. Burgling's export case also is in view with the same, may not trigger. But another figure, it would attract, even though there is no change in PSR, another view is also there. But I do definitely promote the first view, that there would not be any chance to get attracted with what? Both those sections, section 8 or section 6710. So these are all those areas, illustrative examples that I had been there for these 2 sections. Already I have mentioned this point earlier, that section 63, new tax audit section, interplay with section 58, which is nothing but consolidation of existing 44 AD, ADA as well as AE. So interestingly, if you see, now also, even though it is not explicitly, it is implied under 44 AD as well as ADA that if you are having profit more than the prescribed rate, the higher profit you would be required to declare. Suppose you are a chartered account, suppose we are a professional, say having 40 lakhs to be as our receipts. 40 for ADA says only 20 lakh is required to get what? Declared. But if you are having, say, profit of 30 lakhs, even though the slab is 50, we would be required to declare how much? 30 itself. So which is implicitly mentioned under section 44 ADA. But if you go through the new section, section 58, which is given in a tabular format. I was mentioning earlier, the Finance Ministry would be issuing various amendments. Finance Ministry would be giving Income Tax Act, everything. It was the duty of various coaching institutes to make all those things in chart form, in table form and all. Now the department says we also have ChatGPT with us. So we are ourselves making them to converting to be what? Tables, and all those tables are being mentioned here. So in that beautifully drafted section 58, which is consolidated provisions under section 44 AD, ADA and AE, there are 3 sub-portions, one towards 44 AD, second for 44 AE, third towards what? 44 ADA. Therein it is specifically mentioned 8% or actual profit, whichever is higher. 50% or declared profit, whichever is higher. 7,500, 1,000 per ton or actual profit, whichever is higher. So explicitly it says actual profit, whichever is higher, you would be required to do with. We know a lot of medical practitioners. Suppose he is having 40 lakh from a hospital, not an employee, 194J, TDS would have been deducted. It's quite easy to declare how much as profit, 20 lakhs and profit. But if you go and see through them, all those their expenses, personal expenses, everything would have been done through some other consultancy services. Each and every penny which has been received from hospital would be reflecting in their fixed deposits, or in form of mutual funds, or in form of some other this thing. So income may not be tallying with what? Accretion in assets. Now slowly and gently, if you see ITR 4 of assessment year 26-27, earlier it was only 4 columns: cash and bank balance, debtor, creditor, stock. Only these 4 columns actually we would be required to give with. That's also in a later when I am telling, if articles are entering, where their fingers in keyboard are, on that way the figures would be entered. The figures were being given. But now from this assessment year 26-27 onwards, cash and bank balance you have to give it separately. Cash is separate, bank is separate. So definitely yes, we have to get all banks from the clients. Luckily, AAS captures almost all what? Bank accounts. Otherwise, the instance what was been mentioning by our Vanishekar sir would come. The client may not give us what? All those bank statements which are with them. In that context, cash and bank balance you have to give, as well as investments also you would be given, required to get what? Given in with from that year. By sake, if you are having 40 lakhs to be as what? Turnover, you are only supposed to give how much percentage? Minimum, 50%. But suppose if you are having 35 lakh rupees to be as income, only 5 lakh rupees is expense, entire 35 lakh rupees, definitely yes, there would be increase in what? Investments. So there would be gap between incremental investments with that of incremental income that we are going to declare with. So all these are nothing but the signs that the income tax department definitely is on the go. Whether we the tax professionals, whether we the assessees are prepared for this thing, over and above income tax department site itself, Karsati sort of an application is being what? Implemented. So when and where required, all those section comparisons, everything actually we can do with and we can learn those things. So within which I do think I have exceeded the limits. If any questions from the audience part, definitely yes, we can meet with, otherwise on to the person on charge. Yes, sir.
So you had mentioned if the partner's capital account balance is negative and then there is no payment that is done after that, waiving of that negative balance itself becomes liable for tax under section 45(4). In that context, how do we categorize whether it's a long-term or short-term gain?
There, anything and otherwise not treated to be as long-term would be automatically treated as short-term. If you go through that rule, no, it specifies that what are all the situations wherein it would be treated as what? Long-term. Say it is a long-term asset as on the date of transfer.
it comprises of in a block of asset concept, etc. It has been mentioned. It is not been specifically mentioned there. Automatically that would become total.
So then that particular balance, that debit balance, we can transfer it and allocate it to the assets of the firm. How do we close that ledger in the books of accounts?
That's why that thing actually there is no revaluation of other assets now. Without any revaluation, it cannot be accredited to this thing. So that rule 50 accretion is not possible. To balance the same, definitely yes, you can apportion, but no tax benefits would be applicable. Form 27, nothing you can file with.
There is a partnership firm, there is no transaction and there is no business income, but they are having the assets. There are the partners' capital is there, same time capital block of asset is there. So all the partners are in the partner in another LLP. So whether they can show as a withdrawal, as a block asset concept, as it is at the book value, the same they can indent to the LLP without ascertaining the specific asset?
Yes, sir. That's why without revaluing the same, at the same book value if you are doing with, there is no attraction of either a 9B or a new 8 or a new section 6710. But the revalued amount should not be there. You have to take it care. If it is revalued amount which is tallying, that revalued amount would not be taken. Otherwise, there would not be any tax liability.
Okay, there is no requirement like that is specific asset. It's a block of asset. We can specifically.
That's why if it is in same value, no issues are there.
Thank you.
So thank you, Calicut branch of SIRC, giving me an opportunity to indulge with. So actually, it was been originally allotted to some other senior speaker. So with an opportunity only, I got this one. So thanks a ton, Albada Jodi madam, giving me this an opportunity. Thank you all for your patient listening. Thank you once again. Yes, thank you, Deepa madam, also referring me.
Thank you so much, Ajit sir. May I invite Sri Ravi Chandrasekhar, Secretary Kozhikode Branch, to present a memento to Ajit sir. Thank you, sir. May I also invite Sri Srinivasan Malarambatha, co-founder and COO, Dibis Global, who is our silver partner, to address the gathering.
Hello, good evening. Not the best of time, sorry to keep you waiting. Maybe can I have the slide? Okay, so by the way, I was amazed by CA Ajit, the numbers you remember. I don't know how on earth you remember. So why I'm saying that is, that's got very relevance to what the topic I'm saying. You know, really kudos to you, and I was just wondering how on earth you keep remembering all the subsection tables, and I can't. I'm an engineer, I can't remember that. Kudos to you, yeah? And I suppose every CA here, you remember that, right? So many speakers have told you about what the business and how that is going to be. I'm not going to be talking about anything to do with CA, but as a business, CA as a business, that's my goal to talk to you. So we all know AI is coming. That's, tiger is coming, but it's already come. Luckily, the first phase of AI is still in the process of processing, automating, and searching. But the next phase is intelligence, right? The intelligence part is not yet to come, maybe a couple of years, I don't know, maybe 20, 30, 31, 35. But next slide. Today, in the afternoon session, some of the esteemed guests were already highlighting to you some of the issues that you as an industry practitioners are going to face or will be facing. I just noted down when I was sitting there and listening to him. So the first thing is, when any client comes and tells the investigators that, oh no, I've given every data to the CA, the auditing firm and clients, then the whole buck passes to you, right? If you don't have the sufficient data, I was told they confiscate your laptops, your computers, and they take away, disrupting your business. So that calls for a question, shouldn't you be having an audit-trailed documentation, messaging, and every data set that the client shares with you? That becomes like an absolute must for you, right? So we can provide, there are solutions in the market to give you a cloud-based solution which protects your business. Somebody taking away a laptop shouldn't disrupt your business because it can be cloud-based as well, right? And then data protection. You know, you're in the business of providing accounting services. If somebody has to tell you everything about cybersecurity, like how Ajit was telling about all the numbers in the clauses, likewise, there are hundreds and hundreds of clauses in cybersecurity. You know, you shouldn't be burdened with that cybersecurity requirement. So it's best that left to experts like us, we are there to support you. And then Jay talked about delegating tasks, because you should also be focusing about becoming a marketing guru, right? Not just servicing your customers. How do you spend also time for your business enhancement? So delegating comes with its own tag complications, you know, lack of productivity, you are so much dependent on your people, right? So how do you need to have some automation tools or automation platforms to, when you are delegating your tasks, you wanted something that can monitor, that can improve the productivity. So that's also a must. And then Jay also spoke about the last thing, right? AI is definitely going to disrupt, but the extent and how it's going to disrupt is subject to how we embrace AI. So I just wanted to show you in the next slide. Okay. So will AI replace CA firms? How many of you agree with that? So nobody agrees. It's a good news. My answer is also no. But definitely, Renix, wait, yeah? So definitely, there are CA firms who are going to embrace AI, who's going to take away the business from you. That is for sure. So CA firms per se are not going to be disrupted, but it is going to be disrupted by the same CA firms who embrace AI. Trust me, that's going to happen. Just to give you one simple example, you all know Netflix. How many of you know what Netflix started as? Does anyone know what was how they actually started? They were a video library, like how we used to have cassettes. They were selling CDs and DVDs and this thing. So they were a pure brick and mortar rental company. But the moment when cloud came way back 20 years ago, they were one of the pioneers of adopting it. And today, person who adopted technology in their own business, they completely remodeled their business, but they are still in the business of giving you entertainment or bringing entertainment to you. They're still in the same business. That's not changed. But the way they deliver has changed. So what I'm trying to emphasize here to you is your core business expertise will still remain, but the way you deliver that to your clients is what is going to change. And trust me, if you don't embrace AI in that, you are going to be challenged by firms who are in the AI. So that's the reason I put Netflix as this thing. Now, what has Netflix done? Netflix not just survived, they thrived, but they have killed other business, or they are killing other businesses, the movie industry. So you see that just by adopting technology at the right time, the right way, you not only thrive, but you are also a disruptor of other tech businesses. So with all that, we are here. So what we have built is to help you. Next slide. So just to help you, so like change is coming. I don't want to take up too much time. Next. Next. Okay. So this is your pain point. We know your pain point. We will discuss about it in very much in detail, but we are here to solve your pain point by bringing collaboration into one ecosystem. Yeah, go ahead. Next. Yeah. So you look at the drawing on the left side, you're at the center, you have your clients around you, and those clients have their clients. So it's like now becomes like your Facebook networking, right? Friend of friend of friend of friend. Imagine everything is data, right? Every company shares data. And as a CA firm, when you get your data, you want to ensure the first thing is comes on time, it's processed on time, and it's accurate, right? And that's where mostly, do you agree that most of your staff spends time? Your productivity, your margins erodes in that process. So how can you automate it? How can you make it fast and improve your bottom margins and take more businesses with the right people? So on the right side, we are combining everything together. So to learn more about it, I'm going to talk detail tomorrow morning. If you're coming, please join us. And anytime we have a booth there, I'm more than myself and my colleague Renix is here. We are more than happy to discuss with you. All we are trying to tell you is, we are not trying to tell you a tool or should do this, that way. Let's all prepare together and win together. So we are here to help the businesses thrive with our expertise. So like how you are helping so many businesses to thrive, we can help you thrive with technology, right? So that's my closing remark. And I just wanted to share one more thing. I heard one more, I think it was Jay, right, who was, can you name the top 100 rich people in Calicut? And is any CA in there? But I wanted to reply to him then but remember, behind that 100 rich person, there is a CA behind that rich person to make them rich or maintain the richness. So we are here in all this together and we'll do it together. Yeah, thank you. Have a nice evening. Yeah, thank you.
Thank you so much, Srinivasan sir. Ladies and gentlemen, today we journeyed through appellate practice, legislative transition, professional growth, taxation of firms under the new framework. We look forward to welcoming all delegates tomorrow morning as we continue our exploration of the Income Tax Act 2025. 9:30 a.m. tomorrow. Have a pleasant evening, ladies and gentlemen.